safety in the city. My question is, how long do you think she's in that role?
Well, I think that it's not fair to say that he used that appointment, because since the primary, the business community, their one big ask of him was to keep Jesse Tisch, and he conceded to do that. So I think you're characterizing it wrong. I think that it showed a responsiveness to concerns about public safety. What matters to business is that their employees are safe, that their customers are safe, that this is a good place to do business. And that's what they're going to be looking at with his other appointments. Will New York remain a good place to do business? And I think that's the challenge. In my experience, the business community is prepared to step up. I think the concerns that have been raised during this campaign have been, to a large extent, a response to negative advertising. I have come away from this campaign believing that we should take a close look at the use of AI in distorting political advertising. I saw a lot of ads that were caricatures of people, but using AI, it made it seem like they were someone else. So I think some of the fears of
what did you see that they... Give me some examples of that, because I also saw things online that I believe to be true, including comments by the now mayor saying that he wants to seize the means of production. These were things that he said not on the campaign trail, but literally just years ago.
I
saw
yes,
video of him saying that he wanted to defund the police, not on the campaign, but within the past couple of years. These were not things made up by AI, and so there are meaningful concerns. The other thing that the business community, I think, beyond the policing piece, have been concerned about, and even when we take the wealth tax off the table, is actually what it means for corporate taxes in New York. What do you have to say about that?
The mayor has nothing to do with corporate taxes. That's a state function, and the governor has said she's not raising taxes.
And the question that I would ask is, to the extent that he speaks about raising corporate taxes, or speaks about raising wealth taxes and the like, even if it's not his function, what kind of effect that has on business leaders who are thinking about either employing more people in the city, coming to the city, not leaving the city to avoid churn, all of those issues. Even if the actual decision is not his, if he's actively advocating for those things, how that changes or doesn't change the dynamic.
Well, we had 8 years of Bill de Blasio advocating those things, and we didn't lose businesses. Our economy continued the strong momentum that Mike Bloomberg started for his 12 years of mayor, and our economy kept growing. Last year, our economy passed $1 trillion. We have the strongest economy, the most jobs that we've had ever in this city. So I think the city is on a good track. It's strong. The business community is committed to being here, as long as this is a place that attracts the world's top talent. And I think that will continue to be the case. I don't think the rhetoric of the campaign, hopefully, is going to carry over into the next 4 years. I'm very glad this campaign is over. It showed an ugly side of New York that I frankly was very surprised with, but at the same time, we had the most voters since 1969, which was my first election in New York City, when John Lindsay was running against Bill Buckley and Abe Beame, and this is the biggest turnout in the last 56 years. So that's a pretty exciting thing. I think democracy is alive and well in New York City. The beneficiary of that was Zoran Mamdani, but and that's who we're going to work with as a mayor for the next few years. So this did not come as a surprise to me. I'm on the ground in Brooklyn, and this has been coming our way. I think that he spoke to the issue that New Yorkers care about, especially young New Yorkers who registered in record numbers as for their first vote. And that is, are they going to have a shot to enjoy the American dream? And I think that's something we want for our country. So together we ought to be working in that direction, and I think we ought to turn off the negatives of the campaign and move forward with a positive message.
Well, Kathy, I want to ask you 2 more questions. Real estate industry, obviously one thing he can do quite quickly if he wants is to deal with rent stabilization. That's something obviously that maybe some people want, others think is going to create an issue in terms of supply. Do you believe it will?
I think that he understands and has learned as he's talked to real estate leaders in the last 6 months. I think he's begun to understand that you can't freeze the rent unless you freeze the costs. And he now, as part of his pitch, is talking about property tax reform. Property taxes are 30% of the cost of operations in rent-stabilized buildings. And he has pledged that he will be focused on property tax reform as a way to balance this freeze the rent issue. And that would be something that would be a tremendous relief to the landlords in this city. So I think he is going to be a quick learner, a quick study, and that all aspects of the business community, including real estate, are going to be prepared to work with him. He also has said he wants to build 200,000 units of new affordable housing.
Right.
And that's going to require private partnerships, which he is now acknowledging. I mean, a couple of years ago.
Kathy.
Go ahead, sorry.
Right. We're going to run out of time. I have one final one for you. I went to Cornell University. There is a Cornell campus, as you know, on Roosevelt Island that is in partnership with Technion, which is an Israeli school. And this mayor said that he would want to reassess the partnership that Cornell has with that school because it's based in Israel, and what impact that could have. What do you think of that?
I actually challenged him on that. It was something that was in an Instagram post a number of years ago. He is a young man, and to him, a few years is a very large percentage of his life. So I think we've got to look forward, not back. We can't, these days with the kids, the digital natives, and he's the first digital native, obviously, to become our mayor. The digital natives have... Life goes by quickly.
We're not talking about an Instagram post from. Just to be clear, we're not talking about a post from years ago. His spokesman recently was asked about this, said that he would want to reassess the partnership between Cornell and Technion, saying that an institution that develops technologies that serve the IDF should not benefit from funding from New York City.
Well, I have not heard that, and I have not heard him say that. I saw it as an internet post a number of years ago.
There's nothing he said recently that bothers you. Nothing in terms of intifadas, and nothing anti-Semitic that he said. Can you gloss over everything, Kathy? I mean, there are problems. There's a reason why it was such a divisive campaign, and why you're hearing so much, and why you're seeing things like the cover of the Post. You can't just. I mean, you sound like an ostrich. I mean, I know the Post isn't probably your cup of tea, but I mean, this is. This isn't all just made up out of thin air. There are real concerns about an exit from New York City based on what this young man apparently believes in.
I think that's true. I think particularly from the standpoint of many in the Jewish community who he did not speak to, he did not satisfy their concerns about having a New York City mayor who is not sympathetic to Israel and to a Jewish homeland. I think that that's very high on the list of things he has to address in the next coming weeks and months, and I believe he's committed to do that. He suggested that last night, but I also think that you saw in this campaign a defensiveness that came up on all sides, part of it having to do with the rise in anti-Semitism, and the Islamophobia. I live in Bay Ridge, Brooklyn, which is a very large Palestinian community, I think the largest in the city. And believe me, both sides are on the defense here, and that can turn ugly. I think that we've got to really look again at at the use of distortion of AI in campaigns, how the internet has played into creating a very negative vibe.
You need to distort anything about Zoran Mamdani. You can just.
Well, you don't know him, so I guess you wouldn't know.
I know what I read. Like Andrews, I don't know. He's a young man. Don't go back 2 years. He didn't really mean when he said that. He's keeping.
Well, no. I think he's been very direct and straight about, and I've watched him grow during the course of just this campaign. And as I say, he's going to be, if he serves 2 terms as mayor, he's going to be 42 when he leaves office. This is a young person. He's somebody who's wide open from what I've seen to input, to listening, to learning. And during just the course of the few months of the campaign, I've watched him become much more nuanced in his public policy decisions. So I'm very hopeful that he's going to be a positive force in the city, that there will be healing from what has been a very divisive, negative campaign, and we'll move forward. I mean, I've never, in my experience in New York City for almost 60 years, I have never seen a campaign that was as distorting and as ugly as this one.
Kathy, I got one final one for you.
Thanks to AI, yes, and I think we should take a close look.
If you were to poll the New York City Partnership, the group that you represent, does a majority agree with the comments that you've made?
I think so, yes. I think they are universally prepared to try and work with him with the assuming he can address their deep concerns about anti-Semitism and the Israeli issue. Yes, I think the majority want to roll up their sleeves and work with him. Certainly key leaders in the business community have said that, and I think they're responsive to what their employees and the public and their consumers have said they want to see in this city. We all agree New York is the most expensive city in the country. We have an affordability crisis. He has said his first commitment is to address that. And he also said last night, he said, I'm going to address that in part by reducing the bureaucracy, finding a more efficient way to govern. That doesn't sound like a socialist to me. That sounds like somebody who has been listening, who wants to use the resources of the business community, bring us all together and move forward. And I think that's the spirit of New York. That's why we love this city. We all work together in a positive way. The campaign has been a distortion, which has capitalized on religious and other differences. I think we're done with that. We're going forward.
Okay, Kathy Wild, it's always great to talk to you, get your perspective on all of it. Appreciate it very, very much.
Thank you, Andrew.
All right, Bank of America out this morning with some new financial targets. This comes ahead of its Investor Day. By the way, this is something that's pretty newsworthy itself, just the idea that they're having an Investor Day. It's the first time in about 14 years that Bank of America is holding an annual Investor Day. Brian Moynihan, who's been there since 2010, done a lot of meetings on Wall Street, but has not often, I think just only once, has met for an entire Investor Day where you're going to hear from the entire leadership. It's happening at a time when Bank of America shares are up. Year to date, they're up by about 21%. For the 1 year, they're up by 27%. For the 5 year, up by 120%. So it looks pretty good, but if you're looking at the 6 major Wall Street banks, Bank of America has lagged pretty substantially. Over the 5 years, JP Morgan, for example, is up by about 120%. So Bank of America has been at the bottom of the pack for the 1 year, for the 3 year, for the 5 year ranges on all of these periods. And the bank is now highlighting what it's expecting to see over the next 3 to 5 years in terms of enterprise targets as a result of that. Some interesting things to pay attention to with this. Net interest income improvement, they're expecting 5 to 7% CAGR, compound annual growth rate over the next 5 years. They are looking for ROTCE, which is return on tangible common equity, 16 to 18%. Previously, they had guided towards the mid-teens, so this is a little higher than they had been talking about earlier. They're talking about operating leverage of 200 to 300 basis points. Earlier, they had guided towards 200 basis points. And a big part that they're really highlighting here is what's going on with the fixed rate asset repricing benefit. Remember, Bank of America has had some troubles just in terms of opportunity cost over the last several years. A few years ago, they plowed hundreds of billions of dollars into long-term treasuries and to mortgage rates that were at extremely low prices after the post-pandemic era. That locked up that money at much lower rates. It was a hold-to-maturity issue, and it's something that's kind of dogged the bank's profitability since then. But they are talking about how they're going to be seeing a big repricing benefit as those assets kind of roll off, somewhere between 450 to 490 billion over the next 3 to 5 years. Bank of America shares right now down by about 9 cents. Again, this is something that's happening this morning in Boston. I'll be speaking with the CEO, Brian Moynihan. That's coming up at 10:15 a.m. Eastern Time on Squawk on the Street. It's a CNBC exclusive interview, and we'll talk to him about what they are looking for over the next 3 to 5 years, how they plan to compete, and how they plan to get at responsible growth. That's kind of been Brian Moynihan's mantra, responsible growth. There are Mike Mayo and others out there who are saying they really need to focus on the growth side of that mantra. And we're going to talk to him about that and much more. We're going to look at how the consumer's doing, how small businesses and large businesses are doing, at a time when we're not getting government data. That interview again coming up at 10:15 a.m. this morning with Brian Moynihan. Squawk Box. We'll be right back. All right, welcome back, everybody. Cava cutting its full-year forecast for the second straight quarter as young diners pull back on visits. Joining us right now is Cava's co-founder and CEO, Brett Schulman. And Brett, thank you for coming in today. It's great to see you.
Yeah, great to be back. Thanks for having me.
All right, let's talk a little bit about what you're seeing, because there's been a big pullback, not just for shares of Cava, but if you look at Chipotle Mexican Grill and Sweetgreen, some of the stocks that, people looked at this as, wow, these are not restaurant stocks, they are massive growth stocks. And that growth has slowed down to a certain extent. What happened?
Yeah, it's moderated. For Cava specifically, we actually grew revenue 20% year over year. And our same restaurant sales, we had a harder compare, so we actually accelerated from Q2 to Q3 on a 2-year basis from 16.5% to 20%. Now, we have seen a moderation in sales this year with younger consumers. They are facing headwinds, whether it's student loan debt repayment or some of the things like you saw in the big issue here in New York City in the mayoral election, housing costs and other inflationary pressures that they're feeling around them. So we're continuing to work with our best foot forward and drive our value proposition with our Mediterranean cuisine, our differentiated Mediterranean cuisine, so that we can welcome more people to our table.
So the consumer group that got hit the hardest is 25 to 34-year-olds. How much of your demographic is that demographic? Or how much of your consumer is that demographic?
Yeah, we span all generations, but they are a good portion of our, our core customer. And what we saw is we actually grew market share with that group, but that their, frequency year over year had waned a bit, given that they didn't have the tailwinds and the spending power they had last year with all the inflationary pressures they've been feeling.
You mentioned student debt loans kicking back in. That was a big issue?
Yeah, we saw that when that kicked in, we saw some softness kick in with that age group. Obviously there's different areas that are pulling their disposable income, their spending, that might be pulling away from restaurants in general. And that's why we have worked since 2019 to underprice inflation. I like to say this is a marathon, not a sprint for us. We're trying to work every year to improve our relative value proposition. And when you look at restaurants as a whole, the restaurant industry raised price 34% in aggregate. At Cava, we've raised less than 17% since 2019, and CPI was up 27% during that time. So we've improved our relative value proposition each and every year, but the restaurant industry, transactions have actually gone down 7% since 2019. So, I think consumers are saying the industry as a whole has gotten too expensive, and that's why we've continued to work to improve our relative value proposition. That's translated to mid-20s in traffic for us, same restaurant sales since 2019.
Same-store sales, though, were what? They were 1.9% versus expectations of 2.8% for the most recent quarter? Yeah,
slightly under expectations. And again, some of the headwinds we've seen and the recent government shutdown and
the government shutdown, you're big because you guys started off in Virginia, D.C. area.
Yeah, and we didn't see an impact at first, but as government workers didn't receive those paychecks, understandably, we saw some softness creep in. Not acute, but a little bit of softness, and that's why we trimmed our guidance because of all the uncertainty in the coming months. We wanted to be conservative and judicious about our outlook for the rest of the year.
In terms of the margins, I think there was some commentary on the conference call last night, concerns around the margins you're going to be able to maintain in the restaurants. Why is that? What are the pressures there?
Well, we did have a little bit of excess spending on repairs and maintenance, so we want to keep our physical plant really well and our equipment running and our dining rooms on point. We did absorb about 20 basis points in tariff impact. Because again, we don't want to pass that along to our guests. We want to put the best value proposition forward and work on behalf of our guests to absorb some of those costs. And we see low to mid-single digit COGS inflation next year, so nothing that we can't handle or absorb, but certainly keeping an eye on being mindful of it.
Where do the tariffs hit specifically? Some of the food that you have to import?
Yeah, so we do import the majority of our ingredients domestically, but things like olive oil from Greece or some of our hormone antibiotic-free beef from Australia and New Zealand, and then basmati rice from India. There are tariffs on all those countries to varying degrees, and that we've seen, have a bit of an impact.
Hey, Brett, I want to thank you for coming in and joining us today. We appreciate your time, and we hope to have you back.
Yeah, great to see you.
You too. Thanks.
Looking at third quarter results from McDonald's, stock doesn't like it. It's weird because, Kate, I think they missed on the bottom line of 322, but the same store sales, U.S. were above expectations, weren't they?
Yeah, that's right. So this is a mixed third quarter here for McDonald's. Adjusted EPS, as you said, missed $3.22, lower than estimates of $3.33. Revenues, $7.08 billion. That's just slightly below the $7.1 billion that was estimated by analysts. But as you said, same-store sales a bright spot in the quarter. Global comps coming in at up 3.6%, better than the 3.5% estimated. U.S. comps, key market here, up 2.4% versus estimates of 1.9%, driven by positive check growth, but no note here about traffic. So we'll be looking out on the earnings call for more on that. International operated markets increased 4.3% versus estimates of up 4.1%. McDonald's says all markets had positive comp sales led by strength in Germany and Australia in the quarter. A miss, though, for its international developmental license markets. Its sales were up 4.7%, a little lower than the estimates of up 5.4%, but the company noting Japan being a comp leader there. McDonald's CEO Chris Kempczinski calling the results, quote, a testament to our ability to deliver sustainable growth even in a challenging environment, adding, we're fueling momentum by delivering everyday value and affordability, menu innovation, and compelling marketing that continue to bring customers through our doors. I expect a lot of focus on value and the consumer on the earnings call this morning, and likely more color on that EPS miss, guys. Back over to you.
Okay, yeah, it's less than not even a 0.5% at this point. Tough overall for fast food, right? It's worse than
Absolutely.
it's really weird. Worse than other restaurants. That you'd think people would be going to value it with fast food.
So I will note this McDonald's US comp does look good. Definitely we'll be looking out for more color on that. But what you were just talking about with the Cava CEO, the pullback in the younger consumer is just so key. It's hit Cava, it's hit Chipotle. So we'll be looking out to hear what they have to say about younger consumers. Are they perhaps trading down to a McDonald's in this environment? And then also more broadly, the low income consumer. And if this value play that McDonald's has been leaning into for the last year plus is really working. If you look at the same store sales numbers, it seems it has been, but certainly more to come, guys.
Good. All right, Kate, thank you.
Thank you.
On top of everything else, it's just one thing after another, isn't it? Now the Supreme Court's going to hear a challenge to President Trump's tariff policy. And Eamon Javers, you can also look at this on Polymarket. Joins us now with more on the case. I think only 35% chance of the president prevailing with this tariff case. I don't know whether that's accurate or not. But money, yesterday we saw it, Eamon. There were people betting $2 million on Mamdani to make $100,000. No, it wasn't though, was it?
Really?
It's not if it's a sure thing, but that is
It was a
huge
sure
risk.
thing.
That's a huge risk to take for a
Right.
relatively small.
But that shows why it's Eamon, instead of polls, if you plunk down a couple $1 million, you probably have a pretty good idea what's gonna happen.
Yeah.
Now I'm thinking
You know
I
what I
believe
saw, Joe,
it.
yesterday?
Yeah.
I saw people online, somebody tweeted this at me, people online are betting during the White House press briefing on the next word that Caroline Leavitt will say. And one guy had bet $700 that the next word was going to be China, and I asked her a question about China, and he was like celebrating online and
That's
tweeting
amazing.
it
Asked him
out
a
and
question
screaming,
about
he was
China
live
because
streaming
you
himself betting.
You asked her
No,
a
I
question.
didn't, but
that
this
was just-
opens
that
up a
was
whole new
coincidental.
revenue stream for me, right?
Oh man, don't even joke about that. I mean, there was an
Did
earnings
you do like
call
point,
the other night where
point
they
shaving
had.
in the briefing room?
Yeah, I mean, it is kind of ridiculous the things you could place money on at this point. Forget about free throws in the NBA. Trying to get a CEO to say something in an earnings call. I forget which CEO said something the other. Maybe it was Coinbase. Somebody said something the other day and ticked off every single. The last answer that he gave was every single word that there was a bet on him whether or not he would say it on the earnings call. Just used a sentence or used every one of those things. It's insane.
I personally,
and we've reached crazy places.
yeah, I personally think people need a new hobby. But let's talk about the Supreme Court, which is why I'm here this morning. So look, it is going to be an enormously high stakes day at the Supreme Court today, as you guys were just saying. President Trump says he's not going to attend today's oral arguments after all, but Treasury Secretary Scott Bessent is expected to be seated in the front row today. And President Trump says he believes this is going to be one of the most important decisions ever made by the Supreme Court. Now, a very large part of the tariffs that the president has enacted this year are on the line in this decision. The Trump administration is asking the Supreme Court, where remember, Trump has appointed 3 of 9 members, to reverse a ruling from a lower court that found that most of the tariffs are an illegal use of the International Economic Emergency Powers Act. Trump has used that law to impose what he called his fentanyl tariffs, his Liberation Day tariffs earlier this year. An estimated $90 billion in tariff revenue hangs on the high court's ruling here. Treasury has said it most likely would have to send that money back this year if the Trump administration is to lose this case. Now remember, the Constitution gives the power to impose tariffs and taxes to Congress. No president before Trump has used this 1977 law to put tariffs in place, but the law does allow a president to, quote, regulate imports of property owned by a foreign country or foreign national. Now, the White House says that's enough to allow these tariffs. But the businesses that are suing the administration argue that the power to regulate is not the same as the power to tax, and therefore the tariffs should be struck down. We'll see what the court has to say about all this at about 10 a.m. this morning. And by the way, guys, the companies that are suing the administration here, not the big global conglomerates that you might expect. The 2 initial cases were brought by smaller firms, including 2 toy manufacturers, a New York wine importer, and a woman's apparel company. Back over to you guys.
Yeah, Eamon, that's because the big companies can go to the White House and try and negotiate and, lobby for themselves. The small companies are the ones that have no recourse.
Yeah, I think you're seeing a decision by big companies that confronting this administration is not a good use of their resources, right? I mean, they may object to these tariffs. It might be eating into their bottom line. You just heard the Cava CEO tell you guys they're eating some of the tariff costs themselves. But adopting a confrontational posture with Donald Trump is not really good for their business because they can be singled out and targeted. These smaller businesses, though, it is existential for them, and they're less likely to be targeted by the president. The president's less likely to go after, a woman's cycling apparel company or a toy company, an educational toy company or something like that that's super small, just because the optics of that are not great. So I think it's a tactical decision by the big companies to stay out of this, but I can tell you a lot of them are quietly rooting it along.
Is there any way it's a split decision? I mean, because I was thinking yesterday, in fact, I asked the Treasury Secretary, the emergency uses for, I don't know, trade deficit, how did that suddenly get so bad it was an emergency? But the rare earth materials and metals, that seems to constitute what could be construed as an emergency. If someone hits you with that and your entire, everything that we do, we need that stuff. Couldn't that be said, yeah, you're right there, that is an emergency. Yeah, not so much on, maybe on the, on the trade imbalance side of things. How would they rule?
Yeah. Well, I think the the Treasury Secretary pointed this out to you guys yesterday, saying that he thinks that they do have alternatives. They have some backup authorities that they could use here.
But
the trick is that those authorities are more cumbersome, was what he said yesterday. That's because they require a long investigation, a whole process. What Trump has been doing this year is pretty much unilaterally imposing these tariffs on, essentially on Iran.
How could the Supreme Court ruling take into account that there are different, that the tariffs against China because of the rare earth, that is an emergency and that can stand.
Yeah.
The other tariffs cannot stand. Could it be a split ruling that way? That's what I was asking.
It absolutely could be, and that's what the administration is arguing, to get the court to decide with them across the board on these so-called IEEPA tariffs. What the administration is saying is, look, the president deserves a lot of deference here because this is national security, because this is foreign policy. Those things are the president's remit, not Congress necessarily. So we really need this authority because of the way the president's using it to engage in foreign policy.
Rare earths came along afterwards. The initial reason that they cited for the emergency was fentanyl.
Right. But, you could use any emergency you want, as long as the court buys that argument.
All right. Thank you, Eamon. Becky, thank you. Yeah, we all thank you.
Okay, we got a lot more coming up. We got a lot more coming up this morning. Election Day reaction, the shutdown, the markets, and so much more. We've got Evercore's Senior Chairman Roger Altman, and later this hour, Senator Mike Rounds of South Dakota on the Capitol Hill stalemate. We'll break it all down when Squawk Box returns after this.
Welcome back to Squawk Box, everybody. Joining us right now is Roger Altman. He, of course, is the founder and senior chairman of Evercore, a good friend of the show. And Roger, it's great to have you here.
Thanks for having me, Becky.
Joining us. You are somebody we kind of always look to as a moderating voice. So why don't you talk us through your take on the Mamdani election? Because you look at the New York Post, you look at other places, they say this is basically the end. You've got a slightly more restrained view on it. Not that you voted for him.
There are three, I think there are three main points here. One is, it's an amazing political win. So this guy has a lot of political talent, and you have to take your hat off to him. Number two, we just, in the city, endured 12 years of de Blasio and Adams, who, in my view, were both incompetent. And yet the city prospered in many respects.
So in other words, it's okay if it's a ham sandwich running the place?
And so I think it's hard to imagine that he's going to be worse than they were. Hard to imagine. In addition, you know, the mayoralty has its limits. No taxing authority. Port Authority runs the airports and the ports. MTA is a separate entity. It's a fairly limited job. Now, the other way to look at it is, of course, what a crapshoot. He's 34 years old. He's never had a serious job. He's never managed people. He's never managed any organization. And it's probably going to be pretty chaotic in the early going. But the city is a resilient place and an amazing place. And if it survived 12 years of de Blasio and Adams, it will survive Mamdani.
Will businesses be able to function the same way? Will businesses be able to embrace and get by?
I think so.
Yeah.
I mean, anybody who met with Bill de Blasio and who was in the business sector or Wall Street, you know, he wasn't exactly a warm and cuddly presence. And I had that experience. And so, yes, it will function.
Kathy Wild was here.
I just heard her, yeah.
Yeah, and look, in some ways, she, because of her job, has to be on board with whoever's coming in here. She was there at the speech last night that Mamdani gave. I take it you were not.
No, I wasn't.
What has to happen next?
Well, as Kathy said, an early sign will be who he surrounds himself with. If you look back at the night Eric Adams was elected, and you look at who was standing around him on the stage, in retrospect, it was a very bad sign. Now, I don't know what the result of the...
A lot of those people got chased out from
yeah, for
Adams.
legal reasons.
Yeah, for legal reasons.
Yeah,
Right.
I don't know what decisions Mamdani will make and whether the dynamic between Jesse Tisch, for example, and Mamdani will be an acceptable one or not. But an early sign will be who he chooses. And initially, he's been surrounded by a lot of former de Blasio people, at least as I've seen it. I hope that's not the whole deal.
Well, Roger, broadening it out a little. Who's the leader of the Democratic Party? I'll tell you where I'm going with this. I heard that Spanberger and Mikey Sherrill were the new model for where Democrats are going to go, and they called them moderate. I'm not really sure that that's true.
Relative to Mamdani?
Relative to him, they're moderate, but you know, and Chuck Schumer, with a possible challenge from the left by AOC, it's obviously he's doing all kinds of things to try to deal with that. You were in a couple of Republican administrations, the Clinton administration and the Carter. Well, Carter maybe wasn't, but
Hoover.
Yeah, exactly. That's a good one. See, Roger knows the game. That's the thing. I know always I can count it. But are you at all like uncomfortable with where the geographic center of the Democratic Party is right now?
So let's talk about this. So these wins last night, Virginia, New Jersey, California referendum, Mamdani, and some of the lower races, Virginia House of Delegates and so forth.
The AG in Virginia.
A shot in the arm for Democrats because Democrats have been very demoralized. You see that in fundraising, you see that elsewhere. This will fire them up. But these are not surprising wins. These are blue locations.
Right, Becky.
The one would have been surprising is if they'd lost. Now, the margins were impressive, but
Yep.
they're not surprising wins. Now, two more points. I think it does set the Democrats up, or generally they're set up pretty well for November 26th, and here's why.
Mm-hmm.
Typically, the first off-year election after a new president is a referendum on the administration. It's not really about the other party. And that's to their advantage. Secondly, Trump's approval ratings are not very good. And he's 37% approval on the economy. And on the other hand, the economy is the #1 issue. If he doesn't get that up, it's going to be tough. Now, we don't know what the final result of the gerrymanders will be, and we don't know whether Trump will try to suppress the vote in various ways. But you would have to say the Democrats at the moment look good for November 26th. But to get to your question, last night doesn't resolve the internal conflicts besetting the Democratic Party. Doesn't resolve it at all.
How far left do you go?
Well, there's an interesting new report which I commend to you, just published the last few days, called Deciding to Win. I had nothing to do with it, but it's really smart. And there's some remarkable polling data in it, the best I've seen, which shows, number one, in recent years, the Democratic Party nationally did move to the left in a notable way. And number two, it really hurt them. And it's unmistakable data. I mean, it's just compelling. So, and of course, it argues for a move towards the center, which they call moderate. This will all play out not really in November 26th, although to some extent, but in the presidential election of 28. But my point is, the results last night, while heartening, don't resolve this conflict. They just don't. And the Democratic brand is down and out, and the party's in tough shape, even though it seems well set up for November 26th.
Right. I've thought that if the same way that the criticism of certain mainstream Republicans is they don't push back on President Trump, where I guess moderate or right in the center people think that he should be pushed back on. I see the same thing in the Democratic Party. I see poor John Fetterman just saying really normal things, and he's alone on an island. I mean, the Warners, there's so many supposedly reasonable Democrats here, and it's just crickets about really important things. And with the House, when they vote on things, there's not even a single dissenter most of the time. In 14 votes, not a single person sways from the Democrat dogma.
The Democrats are still.
They're good at that.
Well, they're still
I think
better
Republicans
at
are jealous.
Yeah, I think they are too. They're better at controlling their party.
By the way,
Internal national vote.
what evidence of
The wins, I should say.
the challenges the party has is the shutdown.
Yeah.
I happen to think the shutdown is a national disgrace. You look at those photos of food lines at food banks.
Well, we're going to disagree on this because you think it's actually blame on both sides.
No, he thinks
I do. I think
nobody
it is.
is doing a great job.
No, that's what I mean. But a continuing CR, we've done this a million times, Roger. You know that, and it's a supermajority you need, so Republicans can't do it. It's fully extortion, and maybe we need the Medicaid thing. Maybe we need the government to pay for all health care. I can see how people would say that, but this isn't how you do it. You open the government and then decide how to do this.
Well,
you don't extort.
I'm going to agree with you in one respect. We got to end the shutdown.
Yeah.
And there's an idea floating around. I'm sure there are many. I just happen to notice this one, where they would end the shutdown in exchange for an assured vote by an assured date on the enhanced incentives for Obamacare.
Yes.
Well, just
That
do
seems
that.
pretty rational.
Just do that.
For how long? A year?
What do you mean?
How long is the enhanced? Yeah.
I don't know what the answer to that would be. I don't
Just
know.
to give them a vote.
Because that's only
Let them have a
$35
vote.
billion.
Right.
But what was the $1.5 trillion? They wanted, Schumer wanted PBS funded, and I mean, $1.5 trillion is not $40 billion. It's $1.5 trillion.
But right now the issue is just the enhanced subsidy for Obamacare.
They should have said that maybe from the start.
And they need to resolve this. I mean, I think when you look at those lines at those food banks, I mean, that is terrible.
This would be a cause for a snap election in any other country.
Yes, it would be. It would be.
A what?
A snap election in any other country.
No pun
Well, you'd have a vote in a parliamentary system.
They're snap.
For the snap vote. For the snap vote.
Yeah, in a parliamentary system, you'd have a vote of no
Hey,
confidence.
if you can't manage and govern, we'll find people who can.
Right. Right.
Roger, thank you
Oh, it's a
very much
pleasure.
for coming in. We
Thank
appreciate
you.
it. Andrew?
Thanks, Becky. Meantime, day 36 of the government shutdown, making now the longest government shutdown in history. Joining us right now is Republican Senator Mike Rounds. A lot of folks have suggested, Mr. Senator, that potentially, given Tuesday was this election, then maybe we could actually get a deal later this week. Do you think that that's now on the table, off the table?
I think we're very close to the point where the stars may start to align. I think the fact that the Democrats have now gotten through these statewide elections in some of these blue states, they've gotten their base out to vote. Now I think they can get down to some serious discussions. They'll take a day or so in which they celebrate some of their victories, but then I think we can get back down to actually getting this place opened up again. We'll probably have to modify a little bit the continuing resolution. We'll try to include, if we can, some of the appropriations processes that need to happen. We've got a couple different options that we're talking with our Democratic colleagues about. But I'm optimistic that this is probably the right time to really kind of get this thing through. They'll be able to claim that they were fighting with the president and that they fought with the president longer than anybody else ever has before. They've set a new record. But nobody wins in a shutdown. It's just the bottom line. We need to get this opened again. We need to get back. We're losing $15 billion a week in GDP right now for the American people. We've got literally thousands of people that are not getting a paycheck right now that are working hard yet. We've got to get this thing resolved. The sooner, the better.
Right.
It needs to end now.
Senator, I'm curious, what is your political analysis reaction to the elections last night? We've been talking to some degree, people have called it a repudiation, at least in some states, of what's taking place with this administration. Do you agree with that assessment in terms of what you saw out of California, or even frankly the way New York City ultimately went?
The president was not on the ballot, which means a lot of his supporters probably didn't come out to vote. We recognize that that's going to be the way it is in 2 more years as well. But normally in this time in the mid-range and that first time around for any president, it's tough to keep the momentum going. In this particular case, the left was energized. Those who were going to vote were going to come out angry with the president. They were going to be energized and ready to go to bat, and that's what I think happened here. But nonetheless, I think we're past that point now. Now it's time to reassess. And let's not forget, the economy is critical. We want to make sure that we do everything here to get government back operational again. We are losing money in the economy. That's not good for anybody. Let's focus on that. Let's get our jobs done. I think people want to see the trains run on time. They want to see the airplanes run on time.
Right.
And that's something that we want to get back to. The sooner the better.
Senator, I know you got to run, but I did want to ask, do you think that it's a clean CR that somehow gets passed, or do you think ultimately that the Republicans come to the table and this actually gives Democrats some kind of energy to try to force some of these issues that they've been pushing on?
I think we'll have a CR that's attached to some appropriations, which is better for everybody. We've got a couple of conference committee reports that we need to get out and get done. I think we can take what we passed out of the Senate already, 3 bills already that were ready to go, attach that to a conference committee extension to maybe mid-December. And that way the Democrats don't have to say that they capitulated totally. They can say, we wanted to get back to appropriations. And then we can move on right away into the other appropriations bills that have already passed the Senate Appropriations Committee, and we're waiting for floor action now. So I think if we do this correct, we can take some lemons and maybe make a little bit of lemonade.
Okay. Senator Rounds, appreciate your time this morning, your perspective on all of it. Love talking to you, and hope to talk to you again very, very soon. Good luck with it.
Thank you.
On behalf of the whole nation. You bet. Squawk Box, come right back with a lot more after this.
Time now for today's Aflac trivia question. What was the name of the book for which President Kennedy won a Pulitzer Prize? The answer when Squawk Box returns. Now the answer to today's AFLAC trivia question. What was the name of the book for which President Kennedy won a Pulitzer Prize? The answer? Profiles in Courage.
When we come back, getting to the bottom of a crypto heist, hackers stealing more than $100 million. We're going to check out the risks to crypto networks. Right now, though, as we have to break, take a look at the price of Bitcoin. Yesterday, it fell below $100,000 for a first time since late June. Earlier this morning, it was back above $101,000. We'll get you up to date on all of this when Squawk Box comes right back.
All right, put on your thinking caps now. Chris is going to explain all this. Multi-million-dollar heist rattling crypto investors this week. A hacker stole over $100 million from a DeFi, a decentralized finance platform called Balancer. And joining us now, cybersecurity expert Chris Krebs. He served as the inaugural director of the U.S. Department of Homeland Security, Cybersecurity and Infrastructure Security Agency. He also ran U.S. cyber policy for Microsoft. So, Chris, let's just get back to what is Balancer? It was, I guess, it used Ether or something as a balancer.
Balancer is a pool. It's similar to Uniswap, was probably the more popular one. That might not help you, but just kind of think of it like a big piggy bank.
Okay.
Where if you want to trade Ethereum or Ether, you throw it in, you mix it up, and then you can do trades there within the pool. What happened here was there was a flaw that was discovered a couple years ago that a bad guy figured out how to exploit it, skim fractions of pennies effectively off the top, use flash loans, so really quick loans at scale, and like you said, 110, 120 million. Best way to think about this is a little bit like the movie Office Space and the scheme at the end where they shave off fractions of a penny, and it goes kind of a little awry. Same sort of thing here. Lots of interesting aspects about this hack, though, including the possible use of AI in writing the exploit code.
I think the biggest question is, how safe should you feel if you're holding crypto somewhere? How safe is your wallet? How safe is the place you store any of this stuff? It's scary.
Yeah, it absolutely is. It was within this protocol specifically. Balancer hopped on top of it. They throttled a lot of the activity. They were able to claw some of the money back, but it's really difficult because DeFi, as Joe mentioned, is decentralized. There's no centralized governance mechanism. There's a possibility that law enforcement, whether it's the FBI, some other security service, can claw some of the money back, but they have to be sitting in a friendly exchange or on a friendly wallet to be able to get it back, kind of like they did years ago with Colonial Pipeline.
What was it's a so-called validation loophole. We know now that we want layered security, I guess more than one. They didn't have this in this. Did they learn now that they need that, and can it be? They're going to change that?
It's going to be interesting to see what happens next, because again, this vulnerability was known years ago. Balancer is a project that's kind of open source, small team. They just, I believe, ran through a downsize, so a headcount reduction. And they have this whole raft of priorities, including modernization, feature improvements. So sometimes when you look at these older vulnerabilities that may be lower priority, that are written across hundreds of thousands, if not millions of contracts, it's a lot of work to go then update the protocol in each of those smart contracts.
The benefit of DeFi is also the big bugaboo, right? Like DeFi,
Absolutely.
you're not going to be held down by the man, or the man can't do anything to control you. At the same time, you don't have anybody to blame when something goes wrong and say, you owe me my money back, get it.
Absolutely, and there's a cautionary tale here as well, as all the banks in town and elsewhere start adding stablecoin to their holdings. And there's a bit of a bridge here, and there could be a broader systemic risk to liquidity if these banks have stable coins that are then held in some of these pools and they get another run like this. There's a lot that's got to happen here. I'm not sure we're going to see any U.S. federal government involvement. We are very pro-crypto right now. We are very anti-regulation. So I think it's going to be up to the banks in terms of saying, all right, these are the sorts of governance mechanisms we want as we engage and move forward in crypto and stablecoins.
So because it's DeFi, we have no idea who this was, where they are, where the money is. We have no.
It's not because it's DeFi necessarily.
But we don't know.
Early. We don't know yet.
They're not going to catch. Are they going to catch this person?
Or people.
People.
You know,
right.
It's kind of like the Louvre heist, right? It takes a little bit of time.
You got to fence the
They
jewels.
got him. They got him eventually. They didn't know who they were at first.
These you can't. You're not going to get any of this back, are you?
They've already gotten a little bit back, from what I understand. 15 million or so they were able to claw back but look, since it's on the blockchain, it's an immutable ledger. They can watch every single coin as it moves. But as soon as it hops into some of these kind of safe harbors, then it gets mixed up. But again, the security services are tracking some of this. You've got firms like Chainalysis that are tracking it as well. They're then providing that information to law enforcement. I think we'll get some of it back, and some of it may just get parked, and the bad guys will never be able to touch it because it is getting looked over.
Andrew.
Well, that's the thing that I was going to ask is, we've had so many people over the years who come on and said that basically this all is so much more trackable than cash, that we should actually think that this is a better version of cash, and that actually the robbers can't use it. I mean, that's what we've been told, at the same time that Jamie Dimon has said, this is all being used by money launderers and everything else. And my question to you is, which is it?
Yes. It's both, right? It's kind of garbage in, garbage out. It's possible to have very secure transactions, but you have to have it locked down kind of from stem to stern. Again, they figured out how to take advantage of a flaw at the pool, run the system. Now, again, the question is, are they going to be able to access their ill-gotten gains on the other side? Right now, we've had over the last several years a clampdown on some of the mixers and some of the exchanges that were being exploited by Russian criminals, ransomware gangs, things like that. We have seen a lot of money that's been frozen up because of sanctions. We have also seen in the last 6 months a bit of a pullback on some of those sanctions, on some of those sketchier exchanges and wallets. So it may be that some of this money leaks out and bad guys are able to get it.
Chris, thank you. Squawk Box coming right back. I need to think. My head hurts. Coming right back.
You make it sound easy.
The Washington Post published a profile on 1789 Capital co-founders Chris Buzzkirk, titled "The Secretive Donor Circle That Lifted J.D. Vance is Now Rewriting MAGA's Future." The piece highlights him as a key figure behind the scenes in the MAGA movement, detailing how his organization, the Rockbridge Network, helped propel Vance into the vice presidency and continues to shape Republican strategy and policy. Joining us now on this and more is 1789 Capital Rockbridge Network co-founder Chris Buzzkirk. Chris, it's good to have you on. We've had a lot of the people that we're talking about. We've had Orrin Cass on a couple of times, and we've had Don Jr. On, and obviously Omid Malik has been on, and the vice president. So it's a wide net. Do you have any comments about what we saw yesterday in the elections, what it portends for the midterms?
I've got a bunch of comments, probably more time than you have on the show, but I mean, my high level is that I don't think that the New York mayoral race says a whole lot about the midterms. Manhattan and the 5 boroughs obviously are unique, kind of one-to-one, so I don't know that data point tells us a whole lot, except for one thing, which is that the Democratic Party continues to go towards the radical left. I mean, is openly embracing Marxism, and while that might work in Manhattan, I'm not so sure that that works in Michigan or Wisconsin or Arizona and so forth. With regards to Virginia, candidates matter. Winsome Sears was a weak candidate. She had eschewed the president, made it very clear that she was not supportive, asked him to step aside in 2023, and that makes it really hard to turn out the Republican base and get them excited. And that's a lot of what we've learned over the years in the political work we've done, is that you have to motivate your base. The Republican Party and the MAGA movement now has a working class base, and if they're not excited about the candidate, they're not going to come out and vote, and that's what we saw in Virginia.
The overlap between differing philosophies, Chris, is apparent to me, and whenever we had Orrin Cass on, it was always apparent to me. And now, for lack of a better term, Aristopopulism. If you use that term as to what maybe
I learned that term yesterday when I read the story. So no, it's not a term I've ever used, but it was I wrote it down yesterday, but I'm not exactly sure what it's supposed to mean.
Is it I mean, we know that about populism on the Democrat side, obviously, and we know what their ideas entail for populism, for trying to help people. It's always been my take that progressive ideas, it's an oxymoron. They usually end up with a regressive end result. If you connect the dots, it never helps the people they're trying to help. It usually just takes us all to a lower plane. But isn't there a slippery slope when conservatives start talking about raising corporate taxes, start talking about the worker class, I think, is helped when companies succeed using time-tested conservative free market principles, not adopting a lot of socialist principles or left-wing principles and sort of trying to dress them up as something different because you're a Republican.
Yeah, no, we're in fierce agreement on that, Joe. Look, the only way we're going to create prosperity is with an innovation economy. And that's what we do at 1789 Capital. We're very focused on investing in the best innovators, the best founders, the best companies who are moving the world forward by creating great technologies to solve some of the world's most hardest problems, and that creates broad-based prosperity. If you try and create prosperity by taxing it, you will not create any prosperity at all, and you will immiserate millions of people, as we've seen all over the world, and as I think New York is about to find out in spades.
Yeah, I mean, we've tried this so many different times. All the cliches that rich people run out of money. They don't have enough money to spread it out evenly, so that suddenly everything works the way a socialist thinks it would work. It never has succeeded, and we are trying it again here, Chris. That's what you just said. What do you expect to happen in New York City?
I expect people who can leave with any money at all and any resources to leave, and they will continue doing what they've been doing at least since 2020, probably going to Florida. I was joking with a friend last night that the Realtor of the Year for the Florida Realtors Association is likely to be the mayor-elect of New York City. And so those people will leave, and New York will probably follow the path of a lot of other once great American cities, places like Baltimore, Detroit, and so forth, and will just continue the slow decline, which has been depressing to see, but policy matters. And so, you know, New York was just starting to come back from the COVID restrictions, and I think that this is a massive self-inflicted wound that is going to do nothing but harm the people who live in New York and who can't leave.
When I've had, what's Cass's, what is his organization? Because he has said,
Compass.
That's it, American Compass. I've asked whether the vice president really does adopt a lot of those principles wholeheartedly, and because I know that President Trump does, and I assume that probably the vice president has modified some of the do you, for example, which of the basic tenets of Orrin Cass and American Compass do you adhere to?
Well, look, Orrin came up with an index about maybe 6 or 7 years ago, which I thought was really smart. He called it the Cost of Thriving Index, and that was an economic index that basically tried to describe what we think of as kind of a stereotypical good middle class life entails in America. It's like, you know, you're married, you have a couple of kids, you own a house, you own a car, you can afford health care, you can send your kids to college, etc. And that was something that I found really insightful when Orrin did that back in maybe 2018 or 2019.
Chris, that sounds like Mamdani. And then you just say, okay, so how do we affect that for people to get there? And do you think raising corporate taxes is the way to affect that?
No, that's a way to get further and further away from that.
That's what he,
like you
that's not
cannot
what he
tax
says.
away into prosperity. Right. So I thought that was
go ahead. Sorry.
I was just going to say, I thought that index was a useful as a way of understanding what a goal is, and saying, like, how do we get to a point where this is the norm? Right, the last time that you could raise a family by and do what was described in the Cost of Thriving Index that Orrin created, last time you could do that in this country on a single median income was 1989, and so it struck me that it is a good goal to figure out what are the preconditions politically and economically in order to get to that point where the kind of stereotypical post World War II middle American life was achievable on a single median income. The answer I have for that is not taxation, emphatically not taxation. It is innovation. It is how do we create new technologies that solve problems, that increase productivity and therefore increase prosperity, which will proliferate throughout the country and throughout the American citizenry, regardless of their socioeconomic status at the beginning.
Like, people would say that sounds like a supply side trickle down, and I've said, hey, look, supply side trickle down is all we got. You grow the pie and you hope for the best and do things to grease it, to try to spread it out the best you can, but certainly shrinking the pie with policies that are counterproductive has never helped anyone. But what you have just done is condensed exactly what we're talking about. Mamdani could have had the same index and said, look, it's been since 1989 since people were able to afford living in New York City. And then on the other side, Orrin Cass has also, identified that issue. But the way to get there is bipolar or polar opposites. The way to affect what you want.
You can't do it by taking things from people. You have to do it by increasing the amount of things that are being made. It's the point you just made, Joe, which is increase the size of the pie. And since the first industrial revolution, the middle of the 18th century, the way we've been doing it is by creating new technologies that make people able to do more with less, and that increases prosperity.
Chris, who's going to be? Is J.D. Vance going to be the next nominee in your view?
Well, I say a little prayer every single night that he will be. So yeah, I sure hope so.
How is 1789? How is it good investment and patriotic? How do those things go together? Is that a real thing?
Yeah, it is a real thing, because the best thing that we can do as investors is to increase the prosperity of the country. And as you know, the drum I'm going to be beating from now probably until the day I die is how do we increase prosperity by building new things, and that's what we're investing in. We're investing in the entire AI stack, whether it be energy, chips, models. We're investing in energy, space, defense tech, etc. We got to push things forward. We got to grow that pie, and that means giving capital to the best founders out there.
But for the whole first part of the interview, I didn't order it, but it said at the bottom, secretive donor. Blah, blah, blah. I mean, it sounded like, almost like reminded me of Casablanca. Do you leave at midnight to go to these meetings and stuff, and look behind you to make sure no one's following you? Is that? Anyway, come back. I want to talk about more about that and all the secrets and all these other people sneaking around. Thank you.
All right, thanks a lot.
All right, see you later.
Okay, coming up on the other side, how the business community is going to deal with the newly elected New York City Mayor, Zohran Mamdani. We're going to talk about it. Squawk Box returning right after this.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Let's take a look at the futures this morning. Things have turned around a bit. You have seen some pretty staunch improvement over where we started just 2 hours ago. Dow futures are now actually indicated up by about 7.5 points. The Nasdaq is down, but only by 37 points right now. S&P futures off by 5, and then if you check out Treasuries, I think the yields are lower once again this morning. 10-year sitting at 408, the 2-year at 357. Let's get a check with Dom Chu right now. He's got to look at the morning's pre-market movers, and Dom, we've seen a real change in momentum this morning.
There's been a shift in momentum, and some of the stuff that's happening right now has to do with individual catalysts out there. So let's get to your morning movers. Becky, Joe, Andrew. We're going to start with shares of Novo Nordisk, pulling back by roughly 2.5% right now after the Danish drug giant cut its full-year profit and revenue forecast. The company cited lower growth expectations for those key GLP-1 obesity treatments, including Wegovy and Ozempic. Now, separately, Novo is also reportedly negotiating a deal with the Trump administration to sell some of those drugs to consumers at a discounted price through the Trump RX platform. So keep an eye on Novo Nordisk. And by the way, we're going to get much more in the context around that particular outlook. Be sure to watch Novo CEO Mike Dustar at 8:30 a.m. Eastern Time right here on Squawk Box, a half an hour away, a key interview to watch there. Moving down to Kratos shares, those shares are sinking right around 6 to 7% or so, 6 to 7 maybe, despite posting Q3 profits and revenues that beat expectations. The military and defense developer lowered its fourth quarter and first quarter revenue guidance below Wall Street estimates. Kratos anticipates the government shutdown will impact its customer base. Those shares, though, have still been on a tear. They're up about 220% on a year-to-date basis, so keep an eye on that one. And finally, you've got shares of Humana dipping just around maybe 4.5% after cutting its full-year earnings outlook. The healthcare company expected a decline of around 425,000 members. Now, despite that lowered outlook, Humana still beat its Q3 revenue estimates, but on balance, a 4.5% decline for a big health insurance company. Andrew, I'll send things back over to you, Becky, and Joe.
Tom, thank you for that. Zohran Mamdani has defeated now Andrew Cuomo and Curtis Lewa in the New York City mayoral contest. Joining us right now is Ed Schuyler. He's the head of enterprise services and public affairs at Citi. He previously served in the Bloomberg administration for both terms as deputy mayor for operations. And the big question now, I would ask, is how you think the business community works with or doesn't work with this mayor, and to the extent that a number of wealthy folks and other businesses have threatened to leave the city, whether they do. What do you think?
Well, I mean, I don't think companies are going to throw their toys out of the crib and say, because I do not agree with this person ideologically, that we're just going to leave. I think they're going to look at the business environment as they have over the last couple of years. And I think that when you look over the last 5 years at what's gone on in New York City, is that we've lost our competitive edge. Crime is still 25% higher than it was before COVID. The office vacancy rate is 5% higher than it was before COVID. 900,000 people have left over the 5 years. That's the population of San Francisco. So I think the business community looks at those trends and then thinks about what are the policies that the mayor-elect is going to enact and how will that impact the business environment. But also what they really look at is what we saw firsthand is that in many ways, the job of the mayor is a management job. It's an operational job. The mayor is going to take control of a 300,000 person workforce. It's a $125 billion budget. It is a $1 trillion economy. And how he manages those agencies, builds a government, balances the budget, which right now is forecast to have about an $8 billion deficit for next year. Those are the things that the business community is going to be watching. His policy proposals are aggressive. They require a lot of help from Albany. As gifted as a political communicator as he is, it's not clear he'll be successful in getting those through. But at the end of the day, he quoted Mayor LaGuardia last night during his acceptance speech. Mayor LaGuardia had said that there's no Democratic or Republican way to clean the streets. I think we're going to find out whether there's a capitalist or socialist way to clean the streets.
Well, that's the question, Ed. And, we had Robert Frank on just yesterday. He was talking actually about how when you look at the math, so much of the financial industries, financial services professionals, insurance professionals have ultimately moved to Texas, actually more in Texas than in New York now, in terms of thinking about, we all often talk about New York being the capital of capitalism. Even if Zohran Mamdani cannot pursue some of the most ambitious of his planks around taxes, corporate taxes, and individual taxes and the like, how do you think the rhetoric changes the dynamic for business in the city?
Well, I think he has some constituencies that he needs to reach out to. And I think he had an opportunity last night to start doing that. I think he was very much talking to the room. But I think he also has to remember that while 50% of the people voted for him in New York City, which is impressive given a three-way race, 50% didn't. And he has constituencies inside of government and outside of government that he needs to reach out to. Within the government, he's going to manage the police department, which is experiencing attrition at the high levels. And he made very, to put it politely, statements in the past that were not supportive of policing and the police department. So he needs to build bridges internally within that agency. Secondly, he's now the mayor of the largest Jewish population outside the state of Israel. And there are a lot of Jews that have strong emotions about the result, and so it's another group of people that he needs to reach out to, and I think that whether you're in government or you're in the private sector, these are things that are important, and he has an opportunity over the next couple of weeks as he builds his government, as he goes out as mayor-elect. The campaign is over. It's now time to turn to governing, and it's now time to focus on the nuts and bolts of running one of the most important and dynamic city of the world.
I mean, Ed, you started in a very reasonable fashion, just presenting the facts and not in an emotional way. And Mayor Bloomberg, I know he was a Republican, but I think of him more as a centrist and almost a Democrat in certain ways. For some reason, I think Democrats are almost whistling past the graveyard and turning and twisting themselves into pretzels to minimize his prior comments and to say, well, he was a young man when he said he wanted to seize the means of production. You've been very matter-of-fact about what he has proposed. Why aren't more Democrats frightened, like not Republicans, but like average people about what, in terms of anti-Semitism and everything else? I mean, this is a walking, quacking duck that they don't call him a duck. They say he was either young or you ran a distorted campaign. I mean, this is frightening to a lot of people.
Well, I think that he brings an ideology to the job where most mayors do approach it as in a less partisan, less ideological fashion. Certainly Mayor Bloomberg did. Remind you, he was a Democrat before he switched parties.
Right.
And he's going to bring that ideology, and he was unapologetic about it yesterday. But if you look,
is there any way this has a happy ending, Ed, in your view?
Absolutely. I think you have to think about the inherent strengths New York has as a magnet for talent.
So in spite of him, we'll say.
Well, I'm not going to give up on New York. I spent 15 years of my life working for the city and also in the private sector.
It'd be nice if you didn't try to have incredible headwinds for our city.
He has a great opportunity to build a great team around him. Most New Yorkers, whether you voted for him or not, that live here like I do, raising a family here, are going to be cheering for him because they want him to be successful and they want the city to be successful. We may not necessarily support his tax policies, and I do believe there's healing that needs to happen in unity that he needs to help catalyze, given the comments he's made in the past. He has the opportunity, now that the campaign is over, to govern. And a lot of times we do see people who govern, you govern differently than they campaign. He may or may not. Time will tell. I'm an optimist. I believe in the city, and I hope he has great people around him. I hope Jesse Tisch, who's an excellent police commissioner, takes his offer to stay. That would be a great statement.
Well, we're not even starting from a great place. That's where you started. 900,000 people left, the crime's up 25%, the occupancy rates are still down. So we're starting from here and instituting, by all accounts, if he did what he wanted to do, these are wrong-minded policies, almost across the board. Would you acknowledge that?
I don't agree. I agree with the problems he's identified, that they need solutions like affordability. We financed $2.5 billion of affordable housing in the last couple years in New York City. I don't agree with all of his solutions. But he has touched on a theme that's been rising in New York City politics over the last 20 years.
Identifying a problem and addressing it with all the wrong solutions. Andrew, sorry, go ahead.
And I'm curious if we had a prediction market here around Jesse Tisch. I think to the extent that the business community is going to be supportive of him, it's largely around the view of Jesse Tisch being in that role to run the police department, and where she's been improving the safety situation in New York over the past several years, despite some of the numbers that you just reflected. If there was a poly market for a year from now, do you think Jesse Tisch is in that role? Do you genuinely believe that this mayor not only wants her in that role, but wants to support her in that role, such that she will ultimately feel comfortable that the decisions that are being made are not around either reallocating resources or defunding the police in ways that he's described in prior moments?
Well, I think very highly of Commissioner Tisch. She's a Bloomberg alum. She's done a phenomenal job. She has integrity, intelligence, and passion. She has a decision to make. They have to have, I don't know what conversations they've had, but clearly they need to get on the same page. I've seen in city government when that police commissioner, mayor relationship fractures. We saw it with Rudy Giuliani and Bill Bratton, and I've seen it work great, like we saw with Michael Bloomberg and Ray Kelly, who drove crime down, protected the city from terrorist attacks in the years after 9/11. So it's a really critical relationship. They absolutely need to be on the same page. And if they can't get there, then hopefully we'll find somebody else that's competent and qualified.
Ed, I want to thank you for joining us this morning. Appreciate it.
Thank you.
So you might even work in this. If asked, you'll serve.
I didn't say that. I think he's going to have great options.
Well, you said he's going to need good people. I thought you were thinking that could be you.
I intend to continue to contribute from the private sector.
Well, we'll see how that goes. Thank you. Coming up, jobs data from ADP, plus the CEO of Novo Nordisk joins us to talk quarterly results. We'll be right back.
All right, welcome back, everybody. Let's take a quick check on the
Welcome
markets.
back.
We've seen some real improvement. The NASDAQ was indicated off
Thank
by
you.
about 150 points just a couple of hours ago. Now it's indicated off by about 40 points.
Why?
Dow futures have actually turned positive. They're up, but just barely by about 5 points. S&P futures down
5
by just 6
points.
points right now. We are getting
They're
some
up.
numbers that are pretty important.
They're
right
down
now.
$1,
We're
you
looking at
dumbass.
ADP, private payroll data. It's just out. Steve Leisman joins us with those numbers.
Numbers. What a thought. Fantastic. ADP is saying that private payrolls grew by 42,000 in the month of October.
Oh.
With a decent split when it comes to by sector. Goods producing up 9,000, service providing up 33,000. This is a question, is this the new normal we have to get used to? Is a relatively lackluster number.
Lackluster?
We don't have the labor force growth. Is this a good number relative to the labor
It's
force?
excellent.
I don't know because we don't have the unemployment size. What I don't, the household survey, what I don't like is how we got here. And this is something that's a bit of concern here. Small businesses, less than 50 workers, losing 10,000. That is the third month in a row that they have lost workers here. Medium size, down 21,000, and large.
Well, I can answer that question. It's called Biden's inflation. It killed a lot. I was lucky to stay in business, you Russian commie.
Consumer level, what's going on? Looking at by industry here, 47,000 for trade, transport, and utilities. That's interesting to me because I would think that would be a place that would be hurt when it comes to some of what's going on with the tariff world. Education, hospitality, and health services, that's the place we often get the job growth. Leisure hospitality, though, down 6,000. Information down 17,000. And just one more thing here, we have, I believe, the change in wage growth. And that's unchanged. And that's, what is that saying to you? Unchanged in 4.5% for job stayers, 6.7 for job changers. Because we're kind of like in a status quo or maybe a quiet period here in the job market. It's not going down, which would tell you there was a lot of slack in the job market, but it's also not going up, telling you it's tight. We may just be, what, Goldilocks? Is that fair to say?
It went up 45%, you idiot.
That's a great observation, Becky. And I also think that it's not declining, which would tell you there's a lot of slack in the labor market. I will say one more point, which is that this was about 20,000 more than expected.
Oh.
It's also a nice turnaround from the prior month. But why listen to me when we have the unofficial commissioner of the Bureau of ADP Labor Statistics right here?
I think she's actually the official.
The official,
right. One to all of these. Okay. Neela Richardson is here. She is ADP's chief economist. And Neela, we are starved for information right now, so we're probably going to parse this 20 ways to Sunday. What is the big takeaways that you see from this data?
I think the first thing to note is the tepid recovery. We saw a loss in September. We actually put out a weekly pulse number last week showing and signaling a direction of tepid recovery. Now, as Steve mentioned, this is not the hiring rates that we saw at the beginning of the year. Far from it. But it is a recovery. It is not broad-based. We did see some gains in education and healthcare. We did note the gains in trade, transportation, and utilities. But there's some weakness. You see it in professional services, you see it in information services, and so, and when you think about the consumer, you see it in leisure and hospitality. And then the final point, again, Steve mentioned it, I'll put a little bit more data into it, is that 3 in every 4 workers in the United States work in a company with less than 250 employees. And so while
what's wrong with that?
Companies make headlines, small companies drive hiring. And so to see that weakness at the small company level is still a concern. And I think that's one of the reasons why the recovery has been so tepid.
What did you think of Steve's contention that this could be because of tariffs hurting small businesses more than mid or large businesses?
I think it's the cacophony of everything all at once. It could be tariffs and tariff uncertainty. It could be hiring. We think that small firms don't hire using H-1B visas sometimes. No, small firms are dynamic too.
Oh gosh, I don't want to listen to this hogwash. Hello, I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. As I was looking at the SPY here, we pulled back to my second support after hours, right to the penny at 670.44. Then we bounced out of it and came back and hit the top support of 672.70 to the penny, almost to the penny, with a tweezer bottom. Looks like the 63 and the 50 SMA are the 2 resistances we got to break to go higher. This is on the 30-minute time frame. As I move over and look at the 5-minute, we have a shoulder line, which is actually the bottom of the orb that we created yesterday. So that's going to be a resistance to break, and that'll be past the 200 SMA. And then on the 1 minute, same scenario, but we did break the 200s. So that's a positive thing, but still yet we have to break the orb. And the orb is at $674.67 to the penny. Let's all have a moment of silence for a death that happened yesterday, and that's the city of New York. Rest in peace, New York. We loved you. Not really. I used to.
Job market is. And they're looking for some guidance from the alternative.
All we can do now is just let it play out and see how it works. I had some liberal on here supporting him, saying that he's a changed man, that he no longer supports defunding the police or the Communist Manifesto. As long as I've been alive and I got into politics, Democrats have always complained about the billionaires and the millionaires when they're in bed with almost all of them. I never have been able to understand that. Even Elon Musk was a billionaire, was a Democrat. Steve Jobs, Microsoft CEO. I can just go on down the list of the billionaires. Buffett, George Soros. I kind of sum it up as they know that the Democrats will print them money, so that's why they keep voting for them. So we'll just have to see how it goes, or how it works out. I again pray for New York and hope crime doesn't go up. So I got to do that tonight. The monthly healthy options allowance, Humana for Medicare. My utility bill was $45.51, which is good. Okay. Take off my shoes, make my coffee. Spy's going up. Just broke a triple top.
That's where New York City becomes a victim. And that, I think, is the biggest economic risk to New York City from this election.
Thank you so much, Robert. We appreciate it. In the meantime, we do have some news. Treasury just out with its quarterly refunding. Steve Leisman joins us right now, along with Rick Santelli at the CME. Steve, what's the news?
Yeah, well, we're following this because there's been some tightness in the overnight funding market, some big ones. So let me tell you what the Treasury's saying. They're going to issue $58 billion in 3-year notes, 42 in 10-year notes, and 25 in 30-year notes, 30-year bonds. And the reason that's important is because it's pretty much what the market expected. That's good news. Treasury will modestly reduce the bill auction sizes. That's important. We're talking about the overnight funding markets. They'll do that in December, boost them back up in January. I don't think that's a big deal. The thing that is of interest here is they expect to maintain the current auction sizes for at least the next several quarters, but they've begun to a preliminary consideration of future increases. You can imagine what it's like right now, Becky, to forecast revenue and expenditures of this government right now in a shutdown. You've got this tariff revenue coming through. You have the tax bill that's going to actually create a front-ended boost to refunds. So these guys at Treasury, and they're trying to do regular and predictable, is what they're trying to do in terms of their bill auctions. The thing that we're watching here is the bills, the short-term bills. Bessent wants to do that more, fund the government more on the front end because he's concerned about the rates on the longer end. That's created a bit of a squeeze. But again, if I keep talking, it keeps Rick Santelli, who knows more about this than any living human being, from telling us what the market thinks.
Hey, Rick, I'll tell you real quickly that the 10-year obviously up a couple basis points on this. The yields had been down across the entire complex earlier, and now, well, actually 409, so it was at 410 a second ago. What's your take on all of it?
Yeah, what is your take?
$25 billion is a 3, 10, 30 package, and as Steve pointed out, with 58, 42, and 25 billion respectively, you're exactly right there. And next week is Veterans Day on Tuesday, so on Monday we'll have the 3-year, on Wednesday we'll have the 10-year, on Thursday we'll have the 30-year. Nothing's changed, the market expected it, that's what they do have. But he's exactly right when he points to the notion that it's the T-bill market that we should be paying maybe more attention to.
Veterans Day next week.
But as the issuance there grows, the issuance is not growing, but it's staying steady on the coupons. And think about that. One would think if you're issuing more short-term, maybe you could ease back on the coupons, the longer-dated treasuries, but you're not. The real story here is that the government's making a bet. By issuing more bills, they're saying that they definitely believe that interest rates are going to be lower in the future. Now, the Fed may lower rates and have the effective funds rate lower in the future, but there's no guarantees the market rates are going to be lower. So therein lies the rub, because if interest rates actually go up over the next several years, then stuffing T-bills as your bigger issue is going to be a mistake. If rates go down, they'll look prescient, they'll look smart. So it really is a bit of a bet. I still contend that the government can do whatever they want. The Fed, if they really want to manipulate rates lower in the long end, they'll have to do QE. If they do QE, there might be a price to pay, but my short answer is I still think long rates are going to be stubbornly high.
Bill, Rick, what's been happening is there's been a bit of disruption, some real ups and downs in the tri-party repo rate. That's the way that people lend to each other overnight. And that is a result, some people think, of the large issuance of bills, which gives money markets an alternative to lend to the government short term, and that makes it harder for the hedge funds to find the money they need to leverage into treasuries. That's the kind of plumbing that's going on in the system right now. What we're going to see
the
is
repo
actually
market suffers if you're not putting more coupons out there.
Exactly. So what we're going to have to see is it was sort of calm overnight. We'll get a fixing later today, and we'll be able to report tomorrow whether or not the market was happy with this outcome here today, with the consideration here that they're going to be thinking about increasing auction sizes down the road.
Hey, Rick, what do you think of our new mayor? You got a beauty in Chi-Town too, don't you?
Well, listen, I'm not going to make any comments. I'll just say that New York has, New York is going to have exactly the political landscape that they voted for. And in the end, this is going to be a life learning lesson about what is good, what is bad, and what is ugly with respect to making promises that maybe can't be delivered.
That was way too big.
Ask me what I thought, Joe.
I saw you come in here with bells on this morning. I don't need to ask you that.
I don't live in New York City, so I don't get it.
You don't get what?
I don't live in New York City, so I don't get the vote. I don't get the vote.
I thought you said, so I don't give. Wow, at least you're really stepping out.
In my little town in Westchester, people.
Didn't you hear him say that?
I didn't say that.
No, I know what you said.
If you say I don't give a flying vote, that doesn't mean that.
I'm an interpreter here, Steve. I knew exactly what you said. I knew exactly what he thought. Steve, thank you. Rick, thank you. We'll talk to you guys later.
Okay,
come
Steve.
back. Oh, this.
Did he say Russia?
Talk quarterly results with us, the takeover battle of Metsera, the obesity drug landscape. We'll be right back.
The video's got some volume. Sold off pretty hard after hours. Looks like we broke resistance. I wonder how much easier it is to pick up chicks in New York. Seemed like you'd have a big variety of liberals. I mean, here in Missouri, liberals are a lot more easier than conservative women. So I don't know what to say about New York, though. They're probably a lot more nastier. Oh, that's Tony. I think he's from New York.
And Novo Nordisk is out with results this morning, now lowering its full-year profit and revenue forecast. Meantime, the company, it's getting very interesting in terms of this possible bidding war that we are seeing. As we move that up a little bit, please. That's what this means. There you go. Keep going, keep going, keep going. Joining us now, Novo Nordisk CEO Mike Dudestark. It's good to have you on. Can we talk about how much this is cherished, this company? Metsera, a very small company, no drugs, 100 employees. Is it, I guess, a commentary on how important this weight loss area is to both Pfizer and Novo? Mike?
Thanks very much for having me. Well, I can speak on behalf of Novo Nordisk and say that we've been following Metsera for a long time, and they have some fantastic pipeline of drugs that are very complementary to what we are doing on our own. I'm very proud of our own pipeline, but when I take a look at what Metsera has been able to develop, then I get even more excited if we can acquire the company. We are in a business to treat hundreds of millions of patients with obesity out there. And you can only have as many products as you can get your hands on, built in-house as well as, of course, acquire to be able to address this unmet need.
You're in such different positions, Mike, from Pfizer, but in similar positions almost. I mean, you were Novo Nordisk was one of the first entrants, and some of the subsequent add-ons, I guess, to this arena were somewhat disappointing because your stock was well over, I don't know, was it 150 or so? And you can see what's happened. Pfizer wasn't in this business at all. They were still trying to sell their Lipitor and COVID-19 products. What about Metsera makes you think that whatever they have in development is so crucial for you and Pfizer?
They have a number of assets, as I mentioned, that are complementary to ours. They have a lead asset that is entering phase 3, and as well as, of course, other assets that are both in duration of action, so monthly dosing, as well as, of course, efficacy and safety and tolerability show promising outlook. And we have looked at this data quite extensively and have concluded that they fit very well into our portfolio together with what we are building on our own to treat hundreds of millions of patients that are suffering from obesity. So once again, it's super exciting for us.
So your previous bid was what, $9 billion? Now it's $10 billion. Do you expect Pfizer, which had a deal already, and they've already got regulatory approval, do you expect this to keep going up in stepwise fashion for Metsera? How high would you go? I guess you don't want to tell me that.
I do not want to tell you that. I think as time will tell. But what I do want to mention to you that we don't start with a price. We try to see how we can address the unmet need. We start with the patients, Joe, and there are millions of those patients out there. And then we try to see how many assets we need to develop in-house, as well as, of course, what's out there that we can take on board. So for a very long-term sustainable future, we are covered addressing the individual needs of people suffering from diabetes and obesity.
Where does we were going to start with your negotiations with the Trump administration to sell some drugs on the Trump RX site. Where does that stand right now in terms of your negotiation?
We have had a constructive dialogue for a long time, I would say, and the good news is we are very much aligned on the purpose, providing affordable access to millions of patients in U.S. is our both aim, I would say. Those dialogues are ongoing. I cannot get into the details of them, but you'll be the first to hear as soon as they become news.
Can you give us an idea of what the Holy Grail does look like for 5 years from now? What will this weight loss, I hear it's going to be well over, what, per year, 100 billion? I don't know, what are the estimates for how high it could go? And what will it be? Microdosing with pills or something? Where are we headed? And where would you like Novo Nordisk to play in this?
Very good question. Before I try to give you predictions of the future, let me take you back some 10, 15 years. When we entered this market, we saw what everyone else saw. Millions of people suffering from obesity.
Obesity.
You don't need a market research company to tell you that this is a ticking bomb.
Yep.
But Novo perhaps did different
Correct.
than everyone else. We realized that you need to support and help these patients. We needed to basically develop good drugs on top of what they do already, these individuals, with their diet and exercises. As we went into this market, many of our peers were not present, and actually a number of them were laughing at us going into it because it was not a therapy area. This was not an area which pharma was interested in. We went in there and we were for a period of time on our own. And we basically
I'm going to guess
other pharma companies, now of course even Pfizer, to join.
that we're going to open up right here.
And we're very happy on behalf of the patients that more players are recognizing that obesity is a disease and wanting to help and support the patients. As we go forward, we would like to see our leadership get sustained, and of course that so many people that are today are still not able to provide to get access. We provide access to them. So our aim is to expand this market. Take U.S. as an example, 100 million patients
right there
that are suffering from obesity, but yet Novo Nordisk and its
We'll see if I'm right.
are providing access, affordable access to 3-4 million patients. This is not really good enough. What about the other 96 million? I would like the next 5 years, the next 10 years, 15 years, for many more patients to get access.
We'll be watching with interest, Mike. I don't know what happens in Delaware.
NVIDIA double top.
Pfizer says it had a merger agreement, and Metsera's trying to terminate it. But what's Metsera supposed to do if it's getting a better offer for you? How do you expect that to work out?
The way I look at it, Joe, it's quite simple. This is a free market space where there's a buyer and there's a seller, and there's a price, and of course the buyer, be it us, would like to value the drug and see how much it's worth to us. The seller, of course, would like to create shareholder value for their shareholders. Mm-hmm. There is another buyer here that simply doesn't like the price. And that's what it comes down to. And I would say that we have placed an offer. Metsera has declared that as a superior offer. So we hope that we will be able to fulfill our duties.
Okay. Very good. So thank you. Good to have you on this morning. And Andrew, I'm going to give it over to you. I forgot this. Warner Lambert, the year was 2000. Pfizer needed something. They bought Warner Lambert $90 billion way back in 2000 because of Lipitor. Because they didn't have it. And they got Lipitor because of Warner Lambert. So it's like history seems to be it rhymes with this, not repeating.
It always does.
So what happens in
It always
Delaware?
does.
What's the precedent? What happens with this if they've had an existing deal, but someone comes along and has a much better deal? What in the past? What usually happens?
They can force the issue. It's really a business judgment rule about what the board ultimately has to do. But we'll see. We'll see.
Can you look into
we'll talk
this
more
for
about
me?
this on the other
You're
side.
done with your book. You're done with your book. I mean, you got time now, right?
I'll do a little bit of research for you.
Which is
but
called
when we come back, we're going to talk about
1929.
this. The head of
You'll
the
be
air
writing
traffic
another book
controllers
for another
is joining
$5
us
million.
after the break to talk about the trouble in our skies. Don't go anywhere. Squawk returning after this.
I ain't gonna buy his book because I can't believe half the stuff he said. Well, he's good at the way I look at Sorghum. He more or less knows how crooked the Democrat politicians are, so he kind of pushes it upon the GOP. That's his questions arrive from. If that makes any sense. I'm going to go into the kitchen and make me a cup of coffee. Today's going to be a fun day. Right now, NVIDIA's at resistance. Boeing's under $200. This is one I should have swung yesterday. A lot of double tops going on here. AMD has a double top. Where's Tesla? Tesla, double top. Google broke double top. Amazon. Sometimes these reversals can happen before you know it. Depends on what kind of reversal we got in the market. Is it going to be like a good sell-off and then a small bounce and another good sell-off and a small bounce? And looks like it continued after hours yesterday and popping up a little bit today.
Welcome back to Squawk Box this morning. U.S. flight delays continuing to spike as the government shutdown dragging on. Air traffic controllers are calling in sick and in some cases resigning over not being paid. Joining us right now is Nick Daniels. He's the president of the National Air Traffic Controllers Association. Just tell us straight up, how dire is the situation at this point?
Well, first I want to start with saying our sincere condolences to our UPS family, all the citizens of Louisville, Kentucky, and the controllers at SBF dealing with the situation on top of the longest shutdown in history.
The longest shutdown in history.
Now, having to try to open that airfield back up, move aircraft in and out, just goes to show the importance of what we do day in and day out. But the delays, as they continue to mount, I don't think this is a surprise to anyone. That when you stop paying people for 36 days, issues are going to mount, situations are going to build on an already stretched thin system where we're 3,800 certified controllers short. There's only 10,800 certified controllers running the system, where there should be 14,633.
Ooh, that's a major.
And just this reminds us of the importance of what we do day in and day out. the stresses, the burdens, the pressures that air traffic controllers take on, and every single one of us feels this.
When you think about the safety issues, as a flyer yourself, would you feel comfortable being in the air right now?
I do. I'm comfortable in the air only because of the hardworking men and women, these American patriots that have gone in, day out, that are the rope in this tug of war game on policy disagreements that have nothing to do with them. They continue to show up. They're professionals and do their job. But our job is to talk about when there is risk in the system on behalf of that flying public. And that's what should give them comfort, is knowing that that's why we're calling this out and why we're being such fierce advocates for the end of this shutdown, is that we want to ensure their safety. And as Secretary Duffy has said, as we see it, as this risk grows of air traffic controllers that have to be 100% of the time are dealing with these additional stresses, these additional pressures, many air traffic controllers not being able to put gas in their car, not being able to pay for childcare, then we're going to have to slow this system down to ensure that that safety and those standards stay as high as they are. Yes, air traffic controllers are feeling the impact of it. We're having to report and work with management. Every time it's being seen, it's going to be different each day of what facility it's in or where it's at in the country, because every person's life circumstances are different. And there's no way we should be in this situation in running what should be the gold standard of America, American airspace system, that this is what we're having to talk about.
Nick, we're closing in on Thanksgiving, which is going to be, as you know, a shockingly busy holiday season in terms of just pure traffic. What does that look like in terms of, how many flights do you think would ultimately have to get canceled? What kind of delays would that look like? I think it's important to put it out there. A lot of policymakers who are going to be watching you right now.
I think there's a couple things that we have to take into account even first.
Uh-oh.
We have less controllers today than we did in 2019 when the government shutdown lasted 35 days. We're 300 to 400 certified professional controllers shorter than then. If we're talking about somehow going into the holiday...
Is it today going to be a miserable day or what? I got to look for some goodness here. This guy looks like he's about ready to go to a funeral. I think I'll clean this chart up. Oh boy. I did have a resistance line, but I'm going to change it. It's at 6798.50. We have 35 minutes left of the market. You gotta know when to hold them. Ugh. I'll be right back. I think my coffee sat long enough. Oops. Dems win big in elections.
is AMD. Lisa Su put on the tour the first quarter. I loved it. There wasn't any line that was bad, and yet the stock is down. I think people are going to start questioning that midday and say, well, maybe there's something. The 1 point was down 12. Look, is Palantir where we should go? I just wish Palantir weren't the focus. I mean, now Alex Karp was able to make me do it, as you said, David. He was renting my mind. I'm going rent control today in honor of New York. I'm thinking more that we got to start thinking about NVIDIA again and AMD because that group is still very strong.
Yeah, it would appear to be. But, I do wonder to the extent there was any speculative excess in the marketplace overall. I don't know. I mean, Jim, this morning I had people talking to me about the South Korean stock market. Apparently they trade a lot. Have you taken a look at that over the last couple of days? And they trade here as well. And I don't know. I don't even know if that's really having an impact, but it came up in a couple of conversations.
The Kospi was down 6% at one point yesterday, this overnight.
Right.
Luckily, it closed down half as much, but that's a drop.
And you think we day trade a Robinhood over here? I mean, over there, it's even more so.
Oh, no. I'm taking a Kalshi. I'm betting that Robinhood's going to go down on Kalshi because of Korea. There you go.
Korea's up pretty good, though. Actually, look at how much it's up in 4 months.
Exactly what it's
3 months.
Of.
That's so thoughtful. I got to go with that. Something's going on there.
Nikkei too. Nikkei closed down 2.5.
I came to Harvard School with great learning here.
You do mention AMD, Jim, though, and their guidance for Q4 revenue is above consensus, but not quite to the high of the street's range. PC business continues to outgrow the AI-related business. I think that might be the source of the frustration, right?
Well, look, I think that Lisa Su is just abundance of great things that are going for her. But you know what? If you go to minute 57 to 59,
I think I'm gonna be patient today.
Speech that Jensen Huang.
Yesterday I talked about creating a watch list. You better get that thing going. Your top 10. Because I'm going to be going long. Amazon had a big breakout on earnings. Then it's pulled back to support. Gotta know when to hold them. Nailed the bottom there. I mean, the correction to the penny on the Fibonacci's when I did that Fibonacci setup. Kind of just don't even want to trade today. So I got to really look for a good setup. I think I'm going to go clean my glasses. Tilray hit 111 after hours yesterday. It's at 125. And we got China up today. Baba. PDD, when it was under $100, I was calling that one out. Now it's at 134. JD has a double bottom on the 20-day. K-Web, same position. Those are my top four. China. Market navigates AI valuation fears. I don't think anything's changed. They're just making it up. Ooh, McDonald's earnings miss estimates? Is that true? The street was wrong again? See, I don't put high marks on McDonald's. And look at it, it's up. So that sounds like bull crap.
About a bifurcated consumer, low income down double digit, high income up double digit. We'll speak right to that.
Right. Now, at this point, Brian Moynihan's got a really good report to Analyst at
Bank of America.
You've got high mid-single digit for people who are wealthier, and still some growth, 1 to 2 for people who are more challenged. There is an issue about Hispanic spending, in part because of what's going on in Washington. I would point out that Chris always is a guy who is too self-effacing. You say to yourself, well, why is that stock up when he's so downbeat? Because he's addressed this directly. He's got a fantastic sausage, egg, and cheese sandwich for $5 with taters and coffee. Okay, that's looking good. Then he has an $8 10-piece David, you'll love this, 10-piece McNugget with fries and a Diet Coke. These are killing it. An $8 meal and a $5 meal. He's cutting prices. I urge the other guys to cut prices. That's how you get customers.
Apparently, that's how you actually get a
Those
nice
are meals,
response to your stock
those
price,
are meals.
or at least your
McNuggets
earnings
is
this
a
morning, despite those
Well,
kind of
McNuggets
warnings.
are food, David.
Jim, we are seeing, commentary around the Hispanic population and the fact that they are not gathering anymore. They're not, frankly, going out as much and things of that nature.
Oh,
a lot
God.
of different names. You say Washington, but really where it is all around the
You
country.
mean illegal immigrants?
True. What's happening with ICE?
Right, and I think that whether it be liquor sales or whether it be restaurants, wherever people gather to buy things, and I say liquor, I'm not, they not over-index or whatever, but if you're selling Modelo, but also if you're selling Coors, I mean, the numbers are bad, and I think there's just if you have 60% of the population that may be afraid to go somewhere, you're not going to make your numbers. And I think that it's starting to dawn on people that the biggest issue in this country is we can't find people to work. And the people who could work are afraid to go out of their homes.
Yeah, we're keeping track of the consumer.
That's
demand
racist.
Cut in half for the year. You can throw in Lulu, Chipotle, Cava, Deck. There's a nice chart out of Bloomberg this morning. Take a look at.
So are you saying the white folks are privileged and only illegal immigrants or brown people work? Is that what I just heard? That white people are lazy? I think that's what I just heard. That sounds like slavery.
Businesses that have between 1 and 19 employees are still bleeding jobs, bleeding positions.
They are.
And we saw layoffs yesterday from IBM. Saw layoffs yesterday from American. So we'll keep our eye on that mounting toll, Jim, we are in the most announced job cuts for a full year since 2020, and the year's not over yet.
There's 340 stocks that sell below a 23 multiple. There's a tremendous number of stocks that are obviously in bear market mode. I mean, when you see something like DIN, D-I-N, go down,
So McDonald's misses and stocks up. I'm sure that's what they were talking about. DIN. There's another one I've never heard of. Dine, D-I-N. Dine Brands Global. What do they do? Dine. Although I will say something. We got some hard-working Mexicans right now down there at the IRS building painting that building. They're going to make $4,000 to $6,000 in a 5-day period. They're going to work 5 days and make at least $4 to $6 grand. They can barely speak English. But I bet you would find it hard-pressed to get someone else to paint that building besides that. And I don't know if they're illegal or not. But they're getting in there, and they almost had that whole damn building painted yesterday. The base. Had it all taped up, prepped, and painted. They powered washed it the day before. Then they came in and they had. I went up there around 3:30 and talked to him, and he was on his last wall, climbing up a ladder probably 20 feet with a spray brush. Not complaining, happy as could be. Thank you for your business. I mean, they were kicking ass. It reminded me of the Amish people when I saw them tear down a building in 3 days. A big building. I mean, they had like 30 people out there, and each one of them had a designated job, and one pulling nails, the other one stacking boards, a bunch of them up there pulling it apart, recycling that wood. I bet you if they got a white man to paint that building down there, and with a crew of 3, it would have cost them $10,000 to $15,000. These guys are getting it done super fast. I mean, just right in there working. Even had a woman up there working it. I was quite impressed. I say I was impressed. Very impressed. I mean, I would get up on. I couldn't get up on that ladder, but I'm scared of heights, so it'd be tough for me. I have epilepsy too, and it could be the death of me. I asked him. I said, "How did they find you?" Is what I asked him, and he says, "Oh, $4,000, $6,000." That's not what I asked you. I said, "How did they find you?" $4,000, $6,000. I go, "What?" And I just let it go. I didn't ask how much he got paid. So I'm going to say the shoulder line is going to be today's resistance, and that's going to be the 200 EMA on the 5-minute time frame. Do you understand? Yes, Jim, we understand. Da 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 da. 68.2382. If we break that, we got a triple top right there. I like that spot too. We're at 68.96 or 28.2798. What the fuck? I'm not going to get that right back where I want it now. How come it's not doing it? $68.2735. Higher than expected ADP number is a good sign for Friday, says Trish Regan. Am I following her? Yes. I love you, Trish. Steve Leisman said it wasn't a good number. Trish Regan says it was a good number. In spite of New York's communist. You know who Trish Regan is? She's a beautiful woman. I love you. With all my heart. Am I not subscribed? Private? What the heck? I ain't paying for your crap. Sorry, honey. Support your favorite X of bonus content for extra perks. Get bonus content when you sign up. Tell me what the perks are first. Does that mean I get to kind of hang out at your pool with you, baby? I thought it was a good number too. So her and I agree on that. We have 7 more minutes left. Make sure your platforms are up. How did they hire you? $4,000 to $6,000. That tickled me when he said that. I said I asked him again. He's $4,000 to $6,000. I'm not asking you how much he gave you. I want to know how he found you. Pens is getting cheap. But McDonald rises after beat. So what is it? Did they beat or did they not? Here's a hint. If you're looking at a stock, always look at where it lies on the VWAP. 10-4. Too much time on my hands. Oh. I think she looks like she could hurt me. Oh, she's a he? That could be true. Trans women are mean. I want to tell you that right now. Because I about got into it with one. He was going to pull a knife on me. And he was a badass before I found out he was a trans, and I said, oh my. I remember I was at a cake party, and I'll never forget that night. I was told, you better leave. This guy's, he's looking for you. Because I knew. on the bound of finding out who was the badass at the party. I said, I don't want to fight you. But I figured if I did fight him, it wouldn't probably be too good on my half, because he was a tough guy. Yeah, I think the girls in New York would be easy. I wouldn't have a problem finding a woman in New York. Flash a big wad of money and boom. We have less than 1 minute left. And the crowd's going wild here waiting. Oh! Uh-oh. Uh-oh. VWAP on the SPY. SPX did not open up. SPX did not open up. We're flat in the market right now. We got a quad bottom here. Let me see. I'm kind of looking into. I'm kind of interested here. I'm a little bit interested. We do have a wall to break, and we have a quad bottom. Today is the 5th. The options are a little bit high priced. The 6800s or the 6810s. I prefer the 6800 right now. We're at the 63. We're at the VWAP on the SPY. Be nice to see the 200. This thing could pull back to the VWAP and be a strong buy, I think. /ES. I don't think they're done selling off the market yet, but I might get a scalp first thing in the morning. $6.20. Let's go. Please do not chase this with me, whatever you do. You gotta know when to hold them. If this doesn't hold, I'm going to get completely out of it because we got like a quad bottom here. There's $6. Is that what he said? You tell Mike that I said different. But I did listen to him. I figured it'd be the last 20 days. But he might be talking about intraday, which would make sense if he was looking at it at an intraday. But I'd still say 20 days, 20 minutes, not 15. But I'm just, flash crash. Gold rush is over. October's flash crash. Ooh, 580 now. This ain't working out too good. Oh, we got a new low. Looks like my first trade of the day ain't going to go out too good. I'll just hold on to it a little bit longer here. Because, yeah, I think that slash ES can come back and hit the VWAP. Maybe I'll add 2 contracts there. There would have been a good opportunity to take it right there at 520. Oh, 2 of them. But I can be $1,660 in the trade. I don't want to do that. Down 20. SPY hit the 200 with a tweezer bottom. PLTR's pulled back right at open. AMD had the double top. Ooh, look at Apple. Apple's got a double bottom. Apple has a double bottom. I'm up 20 bucks, 30 bucks on my trade, and I didn't add on like at Norfolk, Punta. Jingle bells, jingle all the way. Oh, what fun it is to ride in a one-horse open sleigh, dashing through the snow, making spirits bright. Oh, what time it is tonight. SPY has a bullish trend, it says. Tesla up $2.84. I'm at 680 on my calls. I want to see what Peppolini's wearing here. Hopefully she's showing some cleavage, because that would help. That'd give me the confidence that I need. Turtleneck. Sam has a turtleneck on. Not good. Not good. AVGO's up $5. AI stock wipe out over 500 billion as PLTR reminds traders the party can't last forever. Well, do 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 do. As long as we're above the VWAP on the /ES, the party stays on for today. If not, we have an intraday inverse head and shoulders set up on the SPX. This could get ugly today. I want to see if the /ES holds VWAP. Okay, we've got a double bottom at 520. Well, we had one. 620 and 510. Let's go. Break it. Average 565. We're at 590. So we got 21s acting as resistance now with a triple top. Meta. I almost forgot about Meta. We're at 670. I'm winning. I'm up $200. Thank you very much. 710. Say what? I think I'm going to get out of these suckers. If you know what I mean. Dadgummit, they're at 860 now. Good job, Jim. Why'd you call that trade out like that? Well, do you know how to count to 4? Anybody in the room know how to count to 4? Say it. Somebody in this room knows how to count to 4. Looks like a cross day. I'll look at it. Three white soldiers standing in a row. I'm gonna adjust my camera here. $8.50. Dadgum. Actually, AMD could have been a triple bottom, but it's definitely a double bottom on the intraday. Apple, not AMD. Dadgum, look at this thing go. $9.30. Randy, on the 1 minute we made it past the first deviation channel on a linear channel. Was resistance last night into close, and we broke it just now. So we could see 6796.13. Meta. Meta. Now, Meta, Jennifer, you see Meta at 626.46. That was my support. And that's called an inverted, it's almost like a gravestone candlestick or a dragonfly, upside down dragonfly. As long as that body stays above that dragonfly, we could run up to the next body here today at 637.57. That's where you want to put that resistance line. Somewhere right in the body of that candle. $637. We'll just go with 637. That'd be shy. Could be 637.09 or a little bit above that. My SPX calls are now at 990. Do you understand? I just left $400 on the table. And look, Jimmy called the VWAP on the /ES. Look at that beautiful run. There's $10.20 right there. 10.30. $10.90. Oh God, it's $600. $11. Woot woot. $11.40. $800 I just left on the table. It was well played, but not well maintained. So for that, I give myself an A-, maybe a B+. Oh, gosh. Wow. 12:30. Man, they're running this thing up. I'm thinking resistance is going to be the 200 EMA. Oh, I got 202 on here. That's not right. Well, that kind of... I played it right. I just didn't hold on to it. They went to 1260. I didn't have much to eat today, but a banana and a little bit of chocolate. And about a 4-inch Slim Jim. Dadgum. Yeah, I should use. These are at $13 right now. Can you use trail stops on options? That's $1,000 I left on the table right there. On 2 contracts for $1,130. That'd be a 130% trade. Tony's out of Apple calls with a win. Did anybody take the SPX with Bobo? Someone say yes. Randy did. So I really want to go through this trade. Well, I liked it. And I was down. I mean, my first contract I got in, I was down $120. I still held it. Oh, Randy's still in it. I don't know if I like that. I don't know if I like that, sir. Meta hit right at my support level this morning. I called out yesterday at 626.46. For I am Washboardjim, where I talk about chart patterns, moving averages, and being in the now. I like it when I do that. YouTube, do you like it when I say that? Someone say yes on YouTube. Randy, I wrote you a private message. Meta double topping. SPX just hit the second linear channel. SPX just hit the second linear channel. What the? Do remove SPX. I love you too. Dadgum, look at that bounce. Right off the 21. I didn't jump in it. It was at 910. Now it's at 1340. That'd been $400, 470, 80. 500 right there. That 1410 now. Off the 21. Oh. NVIDIA's double topping. I don't see how the Supreme Court can even justify talking about tariffs. Because at one time, tariffs was a good thing. So if they if they go vote against it, something ain't right. This country was run on tariffs, and there was no income tax at one time. Yep, correct. And then we're screwed again. We're back at the 21. So the 21's acting as a support level right now, EMA, on the 1 minute. And I'm going to go have lunch here in a second. Get food off my mind. I'd been up $1,500 at least today. Actually, more than that. It went to $1,540. My SPX is You didn't get it. Who'd I send that to then? Oh shit. Oh, I sent it to Bug. Oh, that's funny. I'm sending it to you now. Okay. We got higher low here. 678707 needs to hold. So it'd be the 6820s if you think you're still bullish. Whoa, what's happened there? We got 26,000 contracts at 6820. And I'm going to go make my lunch and come back. They were just at $3. The 6820s, now they're $3.50. The 9 crossed down over the 21, which gives me some kind of bearish idea. Triple bottom. This is going to tell us right now. And they're at 295. $255. Right here. SPX off the 50 and the 63. The 6820s at 240. Might be risky. This PX, baby. They're 340. $370. It's a big hammer. From Washboardjim. I'm the founder. Well, we're at a Head and Shoulders. I should sell it. We're at a shoulder line of a Head and Shoulders. You gotta know when to hold them, know when to fold them. Cops are outside. I really want to take profit right here. How's he do it? Everybody wants to know. $4. I will take it right now, for my name is Bobo. Anyhow, $4.40. Does anybody have a problem with that? Oh. Does Randy have a problem with that? We're back to 390. You got took out again by the mob. Oh. Look at Meta go. Jennifer, Meta broke 637.09. This was an inverse head and shoulders right here. Hello? With Jimmy. Kind of fooling around up here now. SPY's at my first resistance level. SPY's at my first resistance level. What is the deal with these turtlenecks on this show?
Interest, and this is more of a risk-off indicator. So you're looking at a 1 year or less kind of total duration of the portfolio. Typically used, I think, in a liquidity bucket as a money market plus type strategy. Right. That is leading in taxable bond flow so far this year. But interestingly, we're seeing also core plus and
I don't trust you.
active fixed income seeing interest this year. I think that speaks to the uncertainty we're seeing from a kind of rate environment and go forward outlook. And again, if you just look at the numbers, the data will show you have a higher probability for outperformance in fixed income by choosing active over passive.
And here you talk about derivative income, $45 billion. Tell me a little bit about that.
So this has been a theme that's
no
been really
cleavage.
Catching fire for the past 5 years. This kind of need and interest in income broadly. This derivative income category, it's a very uniquely designed product.
I don't think that many people know about that.
Yeah, so if you look at probably like 2020 is when they started coming to market. Now we've seen 85 new ETFs in this category just this year.
Apple just broke the 200.
To meet that demand with more supply. But these are just kind of underlying stock portfolios with some sort of option or derivative underlying to enhance the income. You have a high relative level of income. We're trying to aim with our new product coming to market hopefully in December for a more consistent stream of income. So every month, easier to build a portfolio for a client, maybe a retiree that's needing that kind of income replacement because they've left the job market, to give that consistent stream of income to help the advisor kind of predict what that portfolio's income generation is going to be over the long term.
Yes or no? Record year for inflows for ETFs next year? Oh, very serious. Thank you, Matt Camuso. Thank you so much, Head of ETF Solutions at BNY Investments. Thank you, Matt. Coming up, we'll take a closer look at some of the sectors that are on the move today thus far. We have a lot of folks here in the finance biz, about 5,000 people meeting one another and asking a lot of questions. Right now, stocks are higher across the board. Live from the Schwab Impact Conference in Denver. We'll be right back. Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting
a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all.
New commercial. SPY's got to break 678.34. Jim, will you show us how you come up with that? Yep, I will. Meta's got a double top coming up here. And we got a first resistance right here where we are right now. How did I come up with that? Ah, there is resistance on the 1 hour time frame, gap fill. So that's called a gap. I did a video. Did anybody go back and watch it? It's kind of taken off. That's a gap. Okay? Say yes, it is, Jim. Another gap play. Resistance channel. That's the top of the gap. That's the bottom of the gap. Now, we called this out the other day. And it pulled back, I thought, was it SPY? To right here. Then we hit resistance right here on the gap. I'm going to change this color. I can do that. See where we hit that gap right there? That's called a pivot point. You had support here, and we called the support here. Then it hit again right here. Now it becomes resistance. So this is the gap. And to fill that gap, you'll have a hard resistance at 681.34. Fetterman says socialism is wrong. I can't believe I got 164 views on my gap trade video. 164 views in 2 days. That's a world record. So last time /ES bounced off the 63. We could come back down to the VWAP and be another good strong buy if the market goes into sell-off. We're now at $3.10 on the SPX. Pay attention, Randy. We're at the 63 again. Same as the /ES. Does Jimmy want to take this? Where's my coffee at? I'm going to take one more bite of cottage cheese. From a man that knows his cottage cheese, this is Washboardjim. No, I'm not sponsored by Daisy Cottage Cheese, but this is some good stuff. If you need protein and a healthy diet, it goes great with hangers. And you could mix it with salad or a cheese chip. It has 13 grams of protein and low fat, 2%. The best cottage cheese out there is Daisy Cottage Cheese. Pure and natural heritage. Only milk, cream, and salt. Purely crafted from freshness. Longer shelf life without preservatives and additives. Live and be active cultures. Free from non-dairy allergens and synthetic growth hormones. Only milk, cream, and salt. Again, this is Daisy Cottage Cheese with 13 grams of protein per serving. Small curd with a 24 ounce, and it's great stuff. This is the best cottage cheese out there going right now. Believe you me. No, I'm not sponsored by Daisy. Low fat cottage cheese. Pure and natural. Go out and try it. Tell them you recommended it by Washboardjim, the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Okay, get ready. Here we are. I think this is it. We're going to find out if this thing's bullish. Now, I'm going to tell you right here and right now, the scalping is over with. This is when it starts to get a little bit more tougher in my time frame. Do you understand? We got the 200 EMA right here. And the 200 SMA right here. Caroline Levitt is a 10. I think she's real cute. She looks beautiful. And SPX, we got a dragonfly. We got a dragonfly. We got a dragonfly doji. Inverted hammer. This is it. $2.95. You gotta know when to hold them. Know when to fold them. Jim, is that a dragonfly doji you're talking about right there? Yes, it was, sir. It was at 350 just a second ago. What happened here? Doo-dah, doo-dah. Camptown races, 5 miles long. Oh, doo-dah day. Gonna run all night, gonna run all day. Dragonfly Doji off the 63. This is a scalp trade, so it's that time of day where you gotta be very, very tight. 350, 350. Randy, tell your wife I'm having chicken soup tonight. $3.70. Hey, honey, Jim wants to know if you want to come over and have chicken soup tonight with him. I need a little break from you. Woo! $3.70. I should call it a day here. Got to love that Dragonfly Easy Scalp. Yep. Okay, we're back at the 63 again. Is this number? Oh. Uh-oh. Are we going to go to the 200 EMA now? Pay close attention, because we could be. Jesse says, wait for the setup. We have a tweezer bottom. I didn't jump in this one. It was at 260. I'm going to walk into the kitchen. I'm going to put my cottage cheese inside the refrigerator. I'm going to pull out some frozen chicken soup that I made in my Instapot. I'm going to turn on the water and prepare myself for a sugar-free hot chocolate.
And what's growing fast is growth.
What's growing
work that we've
fast?
done on indexing really challenges.
Wayne,
some of
your
the
daughter's not
precepts of
listening, is she?
indexing. I think for the last 20 years we've been launching a quiet revolution in the way people think about indexes.
And so, Rob, if this binary lens is distorting the view, what is a better way to think about
Marley.
portfolio construction right now?
It's a stupid question.
Well, here's a very simple set of thoughts. One,
Tell her to
fundamental
kiss
index,
your
an
ass.
idea that we introduced 20 years ago. Simply ask the question, how big is a company's business?
390.
If you weight a company in accordance to how big its business is, then growth companies are going to be brought down to their fundamental size in macroeconomy. Value companies will be increased to their fundamental size, and so you do have a stark value tilt, always. But what's cool about fundamental index is that it has a natural rebalancing alpha. If a stock soars and it's not validated by rising fundamentals, then you're going to say, thanks for that nice gain, I'm going to trim it. So you contra-trade against the market's most extravagant bets. This creates a rebalancing alpha. And what's been fascinating about RAFI, it's been around for 20 years. It's beat the cap-weighted value indexes in 15 out of 20 years. It's beat them more often than not when value is winning, and more often than not when value is losing. And the result is a relentless outperformance relative to value. You can ask the same kinds of questions about cap-weighted broad market indexing. You can ask the question, is choosing stocks for an index based on market cap the right way to do things? If you choose stocks based on market cap...
Who gave permission for Marley to be on this show today?
You could think of it as 95% passive, 5% active, and that active sleeve is wild. That active sleeve involves buying frothy little growth stocks at lofty multiples, dumping big established companies at deep discounts, and roughly half of the stocks that are added to the S&P or Russell Index are dropped within 10 years, usually at a big loss. That is crazy. So we're trying to ask questions that can fundamentally rethink the way indexing should be done. We're not investing in pieces of paper with prices attached to them. We're investing in businesses with underlying fundamentals. And if you turn to the fundamentals, you can have a better core index,
Screw the fundamentals.
a better value index, and a better growth index.
That's
It's really
false.
exciting.
So in the 2 decades since you've launched the fundamental index, what have been some of the biggest surprises that you've noted?
Well, the biggest surprise has been the relentless underperformance of value. This has been the worst value market in history. Basically, value peaked in 2007.
We don't care about
and
fundamentals
has never regained
anymore.
those peaks. But
It's the worst value market because we don't care about fundamentals. It's all in the technical analysis with Washboardjim talking about chart patterns, moving averages, and being in the now. All we care about is news. Do you understand?
performance is vast. So the question is, what's going on there? The spread in valuation is
This
the
guy thinks he's
widest in
smart.
history. On price to book, it's tied with widest in history, peak of the dot-com bubble. On price to sales, it's...
Hey, mister, your tie's on crooked. How can you trust anybody that has a crooked tie? I mean, who tied your tie? Your grandma? Straighten that thing up. That looks very unprofessional.
remarkable. And anchoring on fundamentals is a wonderful way of getting it right, getting core equity investing right by not choosing to add stocks just because they're frothy and high market cap, and getting value right by using fundamental index and coming out in 2 to 3 months, getting growth right by focusing on fundamental measures of growth, not just valuation multiples.
And Rob, do you think that we're in the midst of seeing that pendulum snap back into that more value-oriented strategy? Or are we still in this chase of momentum in these mega caps?
We may still be in that mega cap momentum game, or we may be on the cusp of swinging back. Picking the timing of the top of a bubble is a crazy game. Nobody ever gets it exactly right.
I do.
But suffice it to say, we have a lot of stocks that are priced not on fundamentals, but on narratives, on froth, on enthusiastic speculations about the future.
Duh.
It's not as if all of these companies will win. Whoever coined the expression Magnificent Seven didn't see the movie. 4 of the 7 are dead at the end of the movie.
Ooh.
That is a very, very fair point, Rob.
No, it ain't.
I guess my next question is, you know, in the 2
This guy, so he wants it to be like it was back in 1930 and 40. I'm surprised he hasn't bashed Retail Trader yet. I think that's coming up. Let's pay more attention to what this guy's got to say, because he's so full of crap.
You can't run AI on thousands of...
Out of all the time that I've traded with traders, I think I've only known 2 fundamental traders out there.
Billions
out of the hundreds,
samples of data. Large
tens of
language
hundreds.
models anchor on trillions of samples of data. And when it comes to long horizon investing, never mind tick data, high frequency traders have been using AI for 30 years at least because there's so much data. But when it comes to longer horizon investing, there's not enough data. Use your common sense, you're liable to do better than anchoring strictly on data. The quant community, of which I'm a part,
Data is fundamentals, you idiot.
which is a mistake. It's important to have some fundamental basis for developing your models and for creating your strategies.
And last question, Rob, you know, for our investors who are watching today, you know, what is
The only time I use fundamental data is if I'm at the dog track or the racetrack, and I gave that scenario yesterday. Do you know how many times I look at the balance sheet of a stock? Never. I used to when I traded pennies, because if they had cash, they always seemed like they did better. But that's penny stocks. Right now we're trading on momentum and news. Step number 5 in my secret sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now.
Then it can be worth the price it commands today. If you don't, it's a bubble. And we came up with a definition for bubble back in 2018 that is actionable. You can use it
1918
live
more
today.
like.
You can ask the question, 1, what assumptions would you have to make for a discounted cash flow model to tell you that this is a good deal, that this stock is fairly priced? Would those assumptions be implausible? If they're implausible, then maybe it's a bubble. And the second question, is the average buyer paying any attention to cash flow models? After all, the share price is supposed to be the market's best guess as to what profits a company will deliver to you in the decades ahead. And if it's not that, then it...
Hey, sir, if you're watching the SPX right now, Jimmy just called the Dragonfly right here. Run it up to $75 a contract. I'm getting ready to call the 200 EMA. If you want the fundamentals, go to a zoo. But right now, we're looking at the 200 EMA right here. And we're going to dive into this trade. for I am Washboardjim, the sneaky snake trading strategist that talks about chart patterns, moving averages, and being in the now. And we're looking at the 6810s here. Come on. 6810s. And I missed it. I missed it. Man, look there. 460 to 530. Oh my. Oh boy. I'm dying.
Right now, it's rough. It's rough ahead for the financials. Moreover, we're actually hearing about some issues, of course, in the financial plumbing, which I'm going to talk about in the next trade.
What do you mean rough? Goldman Sachs is flown.
Just a shorter duration, looking for a kind of a quick pullback inside of Goldman Sachs, which is, as you were saying a moment ago, is at or near all-time highs. This is December 19th trade. So I'm going into the option market December 19th. I'm going to buy the 775 puts and sell the 770 puts. It's a $5 wide put spread.
The guy wants to buy puts.
For a $1.75 debit.
All right, so as we take a look, Rick, at Goldman Sachs, pretty close to those all-time highs, about $50 off or so-ish right now, $45 off those all-time highs. What are the technicals telling us here? Does it look poised for a move to the downside?
Well, I mean, for now, we are stuck at this old resistance area here. That level near 805 marks where we saw roughly our best close here. But we've gotten held up there several times so far. Now we're backing off a little bit once more today, slightly down from yesterday's close. The prevailing trend still, though, would be upward here. We can see we have our trend line going across the lows. But also you could say that we have a downward sloping trend line beginning with those highs near 825 and connecting this subsequent set of highs we've seen during the past week or so. This gives us more of a symmetrical triangle type shape, which suggests shrinking volatility, range-bound trading, looking for a breakout beyond either of those two trend lines. We could also say that while we've got our ceiling here at about 805, we've got a short-term floor at about 740 as well. In the meantime, we also have our moving averages here, our yellow 21-day and orange 63-day coming in at about 780 and 760 respectively. Those could be some other potential footholds for the bulls if things start to decline. Another supportive area, 694, a series of lows, but that's a bit farther away from current prices here. We did regain the 50 midline on the RSI, suggesting more of a bullish increase to momentum here, but still not really stronger movement, and also a corresponding trend line sloping down across those highs on the RSI. Finally, when we look at our volume profile study, we can see that we are in a node here. This is the biggest near-term node, near about 780 or so. We can also see that there's another sizable node down here near 720. So those are the heavy volume areas. If we do push to the upside here, +1 standard deviation channel at this time comes in near 850, 350.
All right, right now trading at 787.47, up about 40% in the last 6 months. So let's move on to this next one, Don, the high yield corporate bond ETF, HYG. Tell us about some of these financial plumbing issues that you're seeing.
Yeah, so very similar theme with financial plumbing issues. And what I mean by that is simply we're hearing about huge influx of capital from the Fed as of late. I mean, literally just the last couple of trading sessions, we're hearing about repo markets that are under duress and needing injections of liquidity, SOFR markets that are needing injections of liquidity, and that's being done. This HYG trade is typically where, like if there's going to be some financial stress, where we'll actually show up is right here in, and again, high yield, it's junk.
We're at the 200 right here.
This trade, though, is a little bit of a flyer. So what you get very often in HYG or in junk is a whole lot of nothingness followed by, Mr. Toad's wild ride to the downside if some of these financial pressures kind of come to fruition. So the trade in here is very, very straightforward. I'm going to go all the way out, 72 days out. I'm going to go to the January 16th options expiration. I'm simply going to buy an 80 put. This is just as bearish as it possibly gets, but it's a little bit of a flyer. So I buy this 80 put for about a 90-cent debit. If any of these financial issues come to fruition, it's a trade that actually hits a home run.
Yeah, certainly does. Right now trading right at that level too, at 80.18. So Rick, as we look at junk bonds, what is this ETF showing us?
First of all, a plumber is a very ominous analogy to me. It always costs me a lot of money when I have to call a plumber, so I'm already kind of scared. But 80, okay, so that is a level that stuck out to me. That's where we saw lows and further lows here and here. So this was kind of a stopping point for price. But if you expanded it even a little further and gave us our light green line here, that was where we saw the start of a gap. A further low as well. So that gives us kind of this supportive
right
zone.
off the 200 there.
75 to about 80 is where things have bottomed out for about the past half year or so. So we can also see, though, more recently, significant gap, 80.75. Things took a big swing to the downside here. We also hit resistance near 81.30. Those were the intraday highs. We topped out there twice, giving us this double top type formation that generates kind of this M-shaped price pattern here. But for now, we are sitting near that supportive zone. So when we look at our moving averages here, we are seeing our faster 21-day on the verge of crossing below our slower 63-day in orange. Not necessarily the greatest trading signal of itself, but an easy visual clue that the trend is starting to shift to the downside here. Our purple 252-day EMA lines up fairly closely with the bottom edge of that supportive zone. That comes in near about 79.71. RSI declining, long-term downward sloping trend line. RSI coming in at about 38 or so, a relatively low reading, but still above its previous low point in that oversold area. So finally, we can see our volume nodes here and here, about 80.30 or so, and about 81 are those heavier volume areas here. If we do slip lower, things start to pick up again here near about 79.50 or so. That's pretty close to our supportive zone here, so there could be another area for the bulls to regain some ground at that point.
All right, and Don, we've got your last one here, and I know we said we've got a theme of highs. This high very recent, Amazon closing at a record on Monday on the heels of its announcement of its $38 billion deal with OpenAI with Amazon Web Services. You know, is that sort of the theory on this one as well?
Oh yeah, you're hitting right on it, the AI trade. So there's actually two factors that are heavily involved in this trade. Number one is the gap print from 230 recently all the way to 260. That gap print looks to be fading, which obviously Rick is going to look at in the technicals here in just a moment. So we hit this 260 level, we're pulling back off, and as I said, it's a little bit of a fade. But AI right now is simply off the rails. I mean, if you look at some of the price action in the underlying, Amazon gained almost $200 billion in market cap off of what? $38 billion deal that was actually announced with OpenAI. Does OpenAI even have the capital? Nobody, of course, questions that at this point. Nevertheless, it's much more of a technical trade. I look for this gap to actually fade. The trade, though, is all the way out to the January 16th expiration. I'm going to be buying the 235 puts. I'm going to be selling the 225 puts. It's a full $10 wide put spread done for a $2.58 debit. The idea is very, very simple. Those strikes are selected as we actually fade from that 260 level back, where the gap originated, which is in that 235, 230 level.
All right, so you're pricing in right about the bottom of that gap. Right now, we're still in the middle, fading off about 248.62 right now. You know, Rick, walk us through the technicals, and particularly around that area where Don says we're starting to see some of that fade.
Right, so here's that big gap up that we saw right here. The area that we discussed, 235 to 225, roughly like kind of right this general area here. So looking for a retreat back to the high points that we saw before that gap up. Other points that stand out to me on that potential road would be these old highs here that we saw, our green line near about 242. Perhaps even these old highs just below 240, and then finally our gap level here. But we were in a downward sloping channel here. Earnings threw things for a loop, big push to the upside. The other take that you could have on it would be that you might say it's more of these one of these consolidative patterns that we get after a big push to the upside. If you were hoping for further gains, the highs 258.60 would be the mark to beat in that case. When we look at some of our other studies, moving averages are typically not too terribly much help when you have the big surge to the upside like this, because they are lagging indicators, but we are starting to see them re-entering that area of interest here. Our 63-day EMA is just above 225 at that point, so that could be a further supportive area if we do start to give back some of these gains. RSI backing out of the overbought area. Not a good sign for bulls here. It's more of a bearish signal here. But as I said, if we do see that consolidated phase and then a further rally, you would want to be looking for it to re-enter that overbought area. We can also see that we are pretty close to our +2 standard deviation channel. It's about where we topped out yesterday. 255 is where that number comes in here. Finally, we can see here our linear regression line, our volume profile point of control. Those all come together near our moving averages in the 220s.
All right, Amazon up 33% in just the last 6 months. I want to thank both of you, Rick Ducat, our lead market technician here on Schwab Network, for breaking down the technicals, and of course our resident bear, Don Kaufman, the co-founder of Theo Trade, for being with us today for Big Three. Coming up next, we're going to spotlight McDonald's after its earnings and take a look at investing in the fast food sector as a whole. That's next on Trading 360.
My man. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago. It's time to spotlight McDonald's after its latest earnings. It saw a jump in U.S. sales. Joining us now live from Schwab Impact in Denver is Don Ahrens, Managing Director and Portfolio Manager at Advisor Shares. Don, thank you for taking the time out of your day at Impact to be with us. I'd love to just start with your thoughts on McDonald's report.
Well, I think a lot of investors in McDonald's are simply breathing a sigh of relief. There's actually been a lot of headwinds and negativity around the fast food segment of the restaurant space.
There still is.
And McDonald's came out okay. Not great, but okay. Same-store sales were up, but some other dimensions are a little bit negative. Their forward guidance has some concerns about the lower end of the consumers. And once again, it's good earnings, but with some trepidation.
Yeah, certainly some trepidation. Like you said, investors in McDonald's breathing a sigh of relief as, shares higher on their same-store sales numbers. But you remain negative on fast food overall. Is this quarter from McDonald's,
it's unhealthy for you,
another sign, Dan, that
the industry
Marley is just struggling to find real growth?
Yeah. In our Advisor Shares Restaurants ETF, it's an actively managed fund where we can pick and choose which restaurant and restaurant-related stocks we want to invest in. And right now, it's very much of a stock picker's market. And the fast food area, we're divested from it. We're not in McDonald's currently, or Wendy's, or Jack in the Box. We think there's better places to invest if one is going to invest in the restaurant area. Individual stock selection is very important, and maybe right now the more value-oriented end of casual dining, and that leads to stocks like Darden and Brinker, which is Chili's, of course. In our opinion, can be a better place to invest in the current environment. It's a tough prediction about where to go in the fast food segment right now.
It certainly is, and we keep getting more data implying this K-shaped economy and low-income diners are not spending as much, but we're also seeing the average check price rise in a lot of these reports. As far as casual dining being an opportunity there, what do you say to people who think that the big brands or like these bellwethers like McDonald's are usually the safer bet in the space?
Yeah, well, McDonald's can be a little bit of a bellwether or even a safer space, less volatile in the restaurant area. They haven't really suffered in their stock price all that much, but it's not growing much either. And when I talk about the value end of casual dining, a lot of people earnings per customer were up a little bit this quarter, but a lot remains
This is the man
to be
calling the
seen
woman.
on what the future looks like.
Did you see my calls? Have you been noticing my calls that I'm giving you?
Yes, the 6820, and I'm into 6805 and 6825.
Okay.
So you know my target on that's is 6829.
Okay. Back to work.
My algo likes it.
Back to work. Okay. I was just calling you to give you a spanking.
Thank you.
Bye. Woo! Do 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 do. We have now neared the and broke the 678.34 on the SPY. Marley, can I ask you a personal question? How come all the other girls have turtlenecks on and you don't? Are you telling them how to dress now? Something suspicious about you, girl. Something very suspicious. Jimmy called a double bottom on Apple today. The 6810s are now at $9.30. The 6810s are now at 1080, and the 520s are now at 570. Any questions? We have a double bottom. Jimmy called on Apple today. We have a triple top. George! My favorite human being.
When you look at the top line sales number and bottom line, they actually came in ahead of estimates. 75 cents was the print versus 72 cents.
That
was
sucked.
higher by 25% year over year compared to 60 cents. Top line sales at 2.31 billion beat the estimates also, higher by 27% compared to
Well, that's
last
not good
year,
at all, George.
1.81 billion. But a couple of things to note, they denoted product revenue was higher by 25%, and service revenue, which is a little bit more higher margin, was higher by 38%. But nonetheless, they came in with adjusted gross margins at around 65.2%. That was higher than last year, but slightly less than last quarter, so slightly decline in sequential gross margins. The other thing is if you look at their gross margin guidance for next quarter, it's somewhere between 62 and 63%, which again is slightly below their average over the last year, but nonetheless, it's right in line with their 5-year averages. So I think what's happening today, Marley, is we're seeing a model adjustment based on slightly lower gross margin expectations, but like I said, on an average basis, they're right in line. So with that said, you're seeing some of the analysts, for instance, like Barclays, they maintain an overweight rating. They increased their target to 183, but Goldman actually brought their target back down to around 170 from 175, but they nonetheless maintain a buy rating on the name.
I saw that as well. Most of the analysts seeming
Marley.
bullish, despite some potential near-term growth deceleration. But as you look at the technical standpoints from what I was
Google
reading,
double top.
notes, most of the analysts believe that the long-term
Triple top.
trend remains intact despite this near-term potential issue. So with all of that said, George, how
God,
does
look
the
at
structure of
that.
example trade here?
Yeah, so agreed. If you look at the long term, it's still positive, and days like this can confuse a lot of traders, especially when you have a grain day across the market index, but also based on the good news the company reported. So with that said, it's a little bit tricky because if you look at the price action on a daily chart, it's gapping lower, and it seems to be holding essentially the 140 area, which was today's low, and there's an area of support at that level. But again, it's trading below the 50-day moving average, which is tricky. But if you zoom out, it seems to be respecting the 10-week moving average, but it could potentially fall all the way to the 20-week moving average, which corresponds to around $135 price going back to January of this last year. So I'm going to use that 20-week moving average in mind around that 135, and I'm going to sell a cash secured put at that level. So I'm going to sell the 135 December monthly contract, and you can actually harvest around $6.50 a share or $650 a contract. Now, by doing that, you have to essentially have the stock hold 135 or higher by expiration. If it does, you get to keep that 650 between now and expiration in the next 44 days. The break-even point on this trade is 128.50. So you have to be mindful of that if it does fall below the 135. And by structuring this trade, you have to be willing and able to post margin and acquire shares at 135 with a cost basis of 128.50. So the return on risk on this trade, or yield to strike price for that matter, is close to 5% in the next 44 days. But this, again, is a contingency trade based on a potential retracement all the way back to that 135 area.
George, we appreciate you being with us to talk Aristonet and also structure that example trade for us when things are a little bit tricky with it being down, on the day, trading down more than 6%, almost 7% right now on what was otherwise a pretty positive report. That's George Sillis. And coming up next, it's time for our 360 round. We'll be taking a look at AMD after its latest earnings. That's next.
God, you're going to jinx it?
Trading
Marley
is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Putting your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next.
Hello, I'm Jenny Horny.
Track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
I love you, Jenny.
Break level for this stock.
That could
I
certainly
would
be
love to take you out to dinner tonight.
Next on Investing, 1 p.m. Eastern.
Only on Schwab Network.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to discuss AMD's recent earnings. Joining us
No,
now,
let's
Steve Bryson,
don't.
Senior Vice President, Equity Research at Wedbush Securities, and Kim Forrest, the Founder, Chief Investment Officer.
It's going
at
down
Oak
farther.
Capital Partners.
You
Thank you
jinxed
both
it.
for being with us. Kim, I'll start with you.
No.
AMD beat on earnings. They laid out a pretty ambitious AI roadmap, yet we are seeing shares under pressure today while the market on the whole is higher. Is this just profit taking here, or are there some potential issues you're seeing under the hood in the report?
I think it's a little bit of profit
God.
taking because, they've
She
done
thinks
really
she
well
asks
this year.
the wisest
But
questions.
I'm never profit taking first sort of person that says, oh, that's the reason why stock's trading down. There was some disappointment,
Where?
mostly around data center margins or margins in general. A little bit of missing revenue, I guess, missing hoped for revenue in data center. And those are the reasons why some AI investors are trading this away today.
I disagree.
And Matthew, coming over to you, you're still very bullish on AMD. I saw that you raised your price target to $270.
God.
You called the new agreements with OpenAI and Oracle a line
That ain't
of
bad.
sight into some potentially huge AI growth revenue. Can you walk us through your confidence behind this thesis?
Yes.
Yeah, so I think that the stock's actually recovered nicely today. What we got from earnings was really them telling us the same thing Intel did, which is their core businesses were stronger. I think where people were a little disappointed was that you didn't get much more visibility in the AI side. Part of the
270 is not much of an upgrade.
Is this revenue gets jumped.
I'm sorry, but 270 ain't much of an upgrade. You know what I'm saying, baby? All it did was fall back into support.
And so a whole lot probably depends more on their analyst day next week.
Ugh.
When they lay out
I'm gonna make my chocolate.
exactly what those ramps,
Randy?
in particular that OpenAI ramp might look like.
And Kim, you've mentioned a few times that AMD, has been a strong competitor to NVIDIA for years. With these new AI partnerships and the potential revenue growth drivers that they could be, how close do you think AMD is to closing that gap? And how much information might we get at that analyst day?
Well, I think the analyst day, or the other guy on this call, is completely correct that Analyst Day is going to lay out a really
I'll be right back.
important roadmap for AMD. And yes, they have the history of competing against NVIDIA in GPU, and AMD has always been the cheaper product, right? The less expensive product. And I think as time goes on, not every data center is going to need, whatever the newest, most expensive thing from Blackwell. That there is a place for AMD, and hopefully that this roadmap is going to show that I think a lot of people are lining up to make sure that they can get that product with the alliances with AMD, as you mentioned. So I think that, yes, there is a road ahead. I don't think it's ever going to replace NVIDIA, because NVIDIA wants to be the fastest, the bestest, and the most expensive. And that's really not what the history of AMD has been. So I always look to the past to inform the future, and I think AMD is a great addition to anybody's semiconductor AI lineup here.
And Matthew, I want to walk through some of the numbers that you're projecting. You're projecting $10 billion in AI data center revenue by 2026, doubling that to $20 billion by 2027. What's driving that ramp, and how realistic is it given the competition?
Yeah, so when they talk about that OpenAI deal, talking about 6 gigawatts. Each gigawatt, I think, is 20 billion in revenue. So you're talking about over 20 billion annualized. Their other customers are, I think, next year at around that 10 billion number. And so I would argue that my 27 numbers are kind of conservative if they execute. because ostensibly, if they ship a gigawatt in 27, I mean, you're talking something that's closer to 30 billion than 20 billion.
All right, and Kim, coming over to you, you know, AMD now has recovered from some of the pullback we saw. They're up 1%, you know, but they're up sharply just this year, more than 100%.
160,
some
baby.
Say the stock is priced perfection. Matthew being one of those that says it deserves that premium multiple of, you know, roughly 30 times given the growth trajectory. What do you think is the next big catalyst that could move shares higher?
Christmas. Games.
Well, I think demand is the biggest thing, right? Like
Christmas demand, yes.
as Matthew points out, you know,
What a stupid question.
Capacity is probably constrained with the deals it already has. So I think Taiwan Semi is everybody's kind of gating factor here because they're the company that's making it. And I think we all have to watch as physical reality hits the AI demand for both power and chips. This is a
Jim, don't give
physical
Marley a
world
hard
making
time.
An online world, right? A virtual world. But physical wins all the time. So I think investors really have to understand the physical limitations that these companies are up against. And that's making the product. Even if it's in demand in a high amount, you have to make the product. And at this point, Taiwan Semi is the company that is making those products. So
TSM.
they have to continue to expand as well.
Yeah, Taiwan Semi is.
They are. Springfield, Missouri. I mean, United States.
I want to thank you both for being with us to talk about AMD.
Thanks to
Posting
Trump.
Recovery now up more than 1% after the drop-off we saw on the heels of its earnings. That's Matthew Bryson from Wedbush Securities and Kim Forrest from Boca Capital Partners. Also want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store and tune in 24/7 on schwabnetwork.com. I'll be back with Market on Close with Sam Vadas at 3 Eastern, but stay with us. Fast Market with Diane King Hall is coming up next.
Oh, God. Thank God you're gone.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from.
Just take the deal. Just take the deal. That's funny, Sparks. You made me laugh. Just take the deal. You're not going to get a better deal than that. We now have 1 minute until 11 o'clock in Springfield, Missouri. We had a nice little bounce right here, and I think we're going to pull back and hit the 63 for another trade. Slash yes. So prepare ye in the name of the Lord. Hello, Diane. Are you back?
Wall Street attempting a recovery today after weakness to start November. Let's get into it with a check on the major indexes. The S&P 500 has a gain right now of more than 0.5%. You have more gainers in the 11 sectors of the S&P 500 than losers. At the top of the leaderboard, you have communication services, followed by energy and materials, and you've got information technology and consumer discretionary coming off the mat today after big losses yesterday. The Dow's got a gain of about 0.33%. NASDAQ 100 better by 0.8%. Small caps, Russell 2000 at the top of the leaderboard today, better by almost 1.5%. Here's a roadmap for today's show. We'll look at example option strategies for Qualcomm that has earnings due after the bell today. Plus, the team from Lightfolio will be along with sentiment data on DoorDash, and AppLovin also has earnings due today. Now that we've got the roadmap for today's trading action, time to bring in my co-hosts and trading veterans. We've got Tom White in our Chicago studio and Kevin Hings joining us live from the CBO. As you know, we've got you covered from exchange to exchange and beyond. All right, let's talk about the macro picture, you guys. There's cross currents. We got on one hand the government shutdown. It's now the longest on record. On the other hand, the job market is looking a bit brighter. It's better than expected based on those ADP numbers coming in at 42,000 gains in the private sector. So again, that's better than expected. Looks like it gave a little bit of fuel to the bulls. Tom, your take?
Well, yeah, it was better than expected. It's still low, though, compared to what we've seen over the last couple of years. I understand a lot of those numbers were revised, but this was better than expected for the jobs under 42,000. Okay, that's a good number, but it's kind of reflective of what we've seen in the labor market. It's stagnated right here. We're not getting a lot of firings. We'll get some challenger job cuts tomorrow, but we're not getting any hiring either. You know, we don't have those JOLTS reports. Those have been coming in. I think it's one job opening for every person that's out there looking, but they say that's skewed a little bit. So it just continues to reflect that the job market's weaker than maybe the administration wants at this point. But at the same time, we're still at full employment. If we ever got those numbers, it'd probably be around 4.3%. So that's still full employment. So on the jobs front, still, you know, probably waiting for some more clarity on some of the data from the Bureau of Labor Statistics, but we're going to have to probably wait for that as we hit record levels for the length of the shutdown. Now, the elections are over, so we'll probably start seeing some more conversations about opening up the government here over the next couple of days.
You think so?
Yeah, and so that is the question too. When will it open back up? Because right now you're, with economic data, you're guided by the private sector data that we do get. So we knew we were going to get ADP today. The shutdown is preventing us from getting another jobs report this Friday. What's your take when you think about all of this? Because at this point, it seems like it's heading towards more than 40 days, Kev.
Yeah, the whispers are that the Democrats want to meet with Trump and the Republicans to set up some type of meeting to end the government shutdown. Those are the whispers going around. We'll watch throughout the day and see if it gets any traction. But
screw the Democrats.
If this does end quickly and abruptly, you'll know that it was
shut down the IRS
for the elections, right? And so I think the elections went as perceived, as expected over the last night, so there wasn't any real surprises there. I think the market turned this morning on the economic data and a little bit of earnings that weren't hurting the market.
Steve Leisman said it wasn't no good.
Turn around, something we reported on yesterday's show. It looks like some of those numbers popped up that Lightfolio was talking about, but the data today was fine. The ISM services, good number. I think the data came in. I'm a little concerned about watching the 10-year yield now, almost 4.2%, Diane. So I think this market, a lot of the sell-off that we hit yesterday was just a little overdone, and the economic data, of all things, something we're starved for, economic data came in and basically firmed up the market, Diane.
Okay, great point. Firming up the market. Speaking of firming up, let's talk AMD, guys. So initially it was under some pressure. Actually, when it put it out its numbers last night, it was higher. So AMD turned in a strong quarter. They beat expectations on the top and bottom line. They're guiding for up to $9.9 billion in the coming quarter. At the start of today's session, AMD got dinged. Now we're seeing things turn around. Tom, what's your take on this one?
Yeah, post-market, it was even lower. I think it opened up around 242, and now we're positive in the stock. So if you take a look at some of the numbers, they beat on EPS 120 versus 117. That was a nice beat. They beat on revenue. Also, that growth rate in the data centers of nearly 23%, I think, kind of stuck out for that. The client segment was up to $2.9 billion from $2.6 billion expected. And even gaming division flip-flopped around, up over 35% from last year levels for the same quarter. And they were, analysts were 1.1 billion, so 1.3 billion. So it seems like the numbers beat, but the bar was really high. And I think that's maybe why you saw some of the initial selling on this report. They guided at that 9.6 billion level. The anticipated revenue was about 9.2 billion, so just a little bit better than expected. Lisa Su did say, make some commentary about the new AI chip, the competition that it has with Blackwell. They didn't really kind of clarify if they're taking market share from NVIDIA, but they kind of stated that the demand is still robust as they try to compete better in the higher end chips with NVIDIA. But overall, a pretty good report. I just think the bar was a little bit high. That's why you probably saw a little bit of profit taking. But in the analyst community, they started hiking price targets across the board in here. So not a bad report at all. The bar was just really a lot more elevated than you anticipated. Maybe a lot of the good news was already baked into the stock.
Okay, all right. So it's making some recovery. Kev, what's your take on AMD's quarterly report card?
Yeah, I think that the good news is that AMD put up good numbers. The bad news is they didn't hit the whisper numbers. The whisper numbers were all higher, and the street wanted guidance a little stronger than they gave. I think that's why the stock opened down, but the rest of the market's rallying. And AMD does have good news, right? It exploded on the deal with OpenAI, and it's holding up at these levels. So yeah, I thought with as much as it rallied up to this date, for it to hold or be down small was a moral victory. So the fact that it's firm here and up, now the day's not over yet, but I think the disappointment was they wanted more, as the market always does. But I think the numbers were solid. You look at 36% year-over-year increase in revenue, solid numbers. Here's the problem. Here's the worry. We've thought in the past that AMD was going to compete with NVIDIA before. And then NVIDIA comes out with something that just, blows the doors off of what AMD is doing. So that's some of the concern there with AMD. But right now, it appears they're closer to competing with NVIDIA. And that's without Qualcomm, that we'll speak about later, and their entry into chips. Right now, it's NVIDIA, a distant first, but the solid and really only number two is still AMD in a great sector of the economy.
All right, guys, let's talk about one that's still on the mat today, Supermicro. It is getting pummeled after missing revenue expectations, coming in at $5 billion for its most recent quarter. We had some indications that there was some, kind of pain points to come. Tom, what's your take on this one?
Well, I think if you take a look, they kind of forecasted this a couple of weeks ago. They came out and said, hey, it was supposed to be 6 to 7 billion. We're expecting 5 billion. That's where it came in. I think you start taking a look at the margins. Those gross margins fell 300 basis points, reflecting the heavy investments in engineering, new customer deployments. Remember, some of their orders that they have to help build out these rack systems for NVIDIA chips were delayed a little bit. So those have been pushed back. But if you looked at their full year 2026 revenue target, they upped that to 36 billion. So maybe that's why we're seeing some of those orders getting pushed out a little bit and getting delayed. But then you start throwing in that margin contraction here a little bit, and that's not a positive for the company. That's why it's probably down today. But you start looking ahead.
Man, it's only been 12 minutes.
Infrastructure,
It's going to be a long day.
the pace that it is, and this investment in it continues. Maybe that'll right the ship at this point. But right now, some of those orders getting pushed into 2026, and that's why I see the increase as far as revenue expectations from the company there. But you got to watch gross margins because costs are ramping up for a lot of these companies.
Yeah, indeed, costs are certainly ramping up. And then, of course, I know you dived into a lot of the picture here. The outlook for EPS also weaker than expected to hammer home that point. Kev, what's your take overall on Supermicro?
I think Supermicro is a company with a messaging issue, right? They just don't get their message out very well. Pushing, a lot of the miss was this 1.5 billion in revenue shifting to the next quarter.
I'll be right back.
Delays. Okay, Tom's right. They did up the overall number to 36 billion, but this company, if you're trading it, if you're investing in it, you better be ready for some volatility because, like I said, they either need a new PR department, a new investor relations department. They just don't get their message out very well, despite being connected to NVIDIA and all the things that NVIDIA is doing. This stock volatility there, it's almost expected now, Diane.
Okay, volatility is almost expected now. Let's talk about a company that is outside of the tech space or anything really to do with that, and this is kind of a window into the consumer. So Mickey D's, McDonald's, you got a mixed bag over there.
Mixed bag.
Rise in same-store sales for the Golden Arches, but it missed on earnings, 33%
Now,
on adjusted basis.
They said it didn't miss a bit ago.
Trying to win back the value consumer, the value customer. To me, yes, same-store sales were better, but it doesn't scream that everybody is piling back into McDonald's. Tom, what's your take on its results?
They suck. I think if you take a look at the top and bottom lines here when they show they missed, but then expectations for same-store sales 3.6%. That's a pretty good number, kind of equivalent to what we saw last quarter. They did an extension of the value meal. That's kind of helping a little bit. But then if you take a look at maybe the consumer as a whole, the pressure on consumers' financial health, the company basically stated that it's going to continue into 2026. And we've seen that from a lot of the other names that they compete with, right? The Chipotle's, Cava last night, price target cuts across the board there. So the consumer is strained right now. So keeping the value meal, that's going to lower some of their margins here. Same-store sales were pretty robust compared to some of the competitors in this space. So that's a bonus. And then if you take a look at the international, that did really well. Australia did well. Japan did well. That helped, probably with the projections moving forward. But I think the uncertainty in the consumer is really negatively impacting some of these stocks. Now remember, we saw Darden and Brinker and Dine Brands. Those stocks were doing really well at the beginning of the year, right? Hitting all-time highs because people were looking for those values. Those 2 for $10 type of meals. Now McDonald's is extending a lot of their value meals also, and that's helping them gain market share back, and those stocks are actually taking a hit. But the bar was actually pretty low in here. We talked to Likefolio yesterday, and they liked the stock just due to the fact that it had consolidated at relatively low levels, even though their data was pretty positive on this one. But seeing a nice 2% pop today.
Yeah, it is. One of the things that stood out to me is, on the earnings call, they talked about inflationary pressures. Beef is one of those. I mean, listen, I notice that when I go to the grocery store, when I occasionally think about buying steak and it's expensive. So it sounds like that's still a challenge for them. It is, Tom. And then, Tom, to your point about them saying that they expect pressure on the consumer going into 2026, when you take that all into context, what's your take, Kev?
Yesterday's segment on McDonald's, their price ex fast market, because Likefolio's data was against what the market was doing, right? The stock had sold off into the earnings release, and why? Because other restaurant chains were struggling. Well, yes, they did miss on earnings per share, but everything that they put out in terms of same-store sales, in terms of the deals that are starting to work, it was all really positive going forward. And remember, if people are stretched and trading down, McDonald's is the low price point, right? Their extra value meals and their wraps, those are the way people can still eat food or fast food and do it at the least expensive price. So we did actually in some ways see this coming because of Likefolio's data. It was fascinating to see how they diverged from the pricing in the stock and the overall concept. So yeah, good on them, and that's a real good segment for us.
Yeah, I mean, good on them for catching the uptick in consumer sentiment around McDonald's, and you can see that reflected in shares today. It is interesting just to watch kind of all of this play out, and maybe those who are going to Cobb are then shifting down to say Mickey D's. We'll see. We'll continue to watch this one. All right, we've got Bull versus Bear coming up. The guys will get their example trades put together for Qualcomm. It's got results due after the bell today. We will have more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Qualcomm is set to report earnings after the close today, and Wall Street is expecting deceleration after a string of double-digit growth. The chip maker is projected to post earnings of $2.87 per share on an adjusted basis on revenue of more than $10.7 billion. Analysts say that the company's core smartphone business is still solid, but growth has been cooling in automotive. Investors are also honing in on Qualcomm's new AI accelerator chips for cues to future growth. All right, throw on your trading glasses now. Welcome back in our co-hosts Tom White and Kevin Haynes. It is bull versus bear time. Before we get to your example trades, got to talk your take on Qualcomm. Kev, I'll start with you. What's your thought going into it? It wants to be a heavyweight in the chip space. I don't know. Will it get there?
Yeah, I mean, this stock popped a week or so ago on that news that they were entering the AI chip space with their AI 200, AI 250 chips, but those aren't showing up yet, and the stock spiked and came right back down into its normal range. This is a frustrating stock because it seems like they're doing all the right things, but they're just not ready to compete yet. And frankly, they're talking about automotive slowing. automobile numbers have been good, right? The sales, all the numbers. I don't get why they're missing on automotive when automotive numbers seem to all be going fairly well. So maybe they're not. Maybe that's why. But this is a confusing stock, Diane. It's kind of I watch it a lot and I can't figure out what makes it go. I thought this news of getting into chips would really spur this stock higher, and it did spike that day, and it's come right back down. So this stock has always been a head scratcher for me to try to figure out. The news seems pretty solid, but the stock just doesn't always respond. It's got me, and my trade that I will eventually put out to you will show that it's got me, Diane.
Interesting. So that's a good point. And sometimes I feel like with stocks in certain sectors, it can be a bit of a popularity contest. At the same time, though, one of their challenging areas has been auto chips there. Kev, what's your take when you think about Qualcomm going into its results?
I'll go ahead and go with that one, Diane. I think if you take a look at it, the revenue is supposed to grow about 5% year over year. You saw that big pop that the stock went above $205 like just last week on the news that they're going to compete with NVIDIA. Those aren't going to come out until the latter stages of 2026, so you can kind of throw that out right now. And then you start talking about them losing some of their sales to Apple. Apple's putting new chips into a couple of the different new products right now, so Qualcomm loses that business. The modem side of their business, Apple's thinking about getting away from Qualcomm also. That's been an ongoing thing for the last few years. But if you start taking a look at their growth rate in smartphones, smartphone sales have started to ramp up recently. Internet of Things has been good. Kevin mentioned automotive. That's a big segment for them. And we've seen auto sales just, skyrocket. And it wasn't just because the EV credits went away. People were buying more cars over the last couple of quarters. So that's a positive for the company. You start worrying about the restrictions that China's going to put on chip sales over there. And now they're talking about it in their data center build-outs. If it's not more than 30% built, then they don't want you using overseas chips. And that's a big portion of their revenue because their chips are in a lot of things besides smartphones and Internet of Things and automotive also. So those are the concerns, and maybe that's why the stock's underperformed. And I always throw it in a bucket with Texas Instruments on the analog side of chips, the old legacy chip makers, where maybe they just don't have those growth rates that the new chip makers and the AI-related chips have in this space, and that's why Qualcomm's probably going into that arena.
Yeah, that's a great point, especially when you compare, like for like, with the expectation for growth, but not at the same pace, right? Single-digit percentage growth versus the double-digit that we see often from the heavy hitters. All right, Kev, let's start out with you with your example trade.
Yeah, so my confusion or my, trick, my view on Qualcomm will show up in my trade, which means, yes, this is the bull-bear segment. Mine is both. I don't know which way it's going. So what I did is I looked at something that gives me an opportunity no matter which way it goes. They could promote their new chip and show good guidance, and the stock could take off. If they don't, and automotive is weak, it could go on the downside and disappoint like it has since it popped. So what I did, I went out just 1 week, bought the November, looked at the expected move on the stock, which is about $10. Then I looked at the November 14th. I bought the 187.5 call, bought the 167.5 put, so about $10 on each side. Then I went to this week and sold the 187.5 call and sold the 167.5 put. So I've got a double calendar on with an opportunity to be profitable in either direction. The debit I paid is about $1.85. It's trading a little bit less than that, probably closer to $1.65 now. But this is one, Diane, you're looking for a move in line with the one standard deviation expected move to one of those short strikes, either 187.5 or 167.5. And Diane, I think this shows what opinion I have in Qualcomm, which is I don't know.
Yeah, I'll go ahead and take it here, Kev. Got the double calendar position short-term positioning. November 14th weekly option, so 9 days to expiration. Kevin's buying the 187.5 strike call to the upside, buying the 167.5 strike put to the downside, about that 1 standard deviation on either side of where the stock is currently trading. Selling those same strikes in the near term November 7th weekly options that expire in 2 days, the 167.5 strike put and the 187.5 strike call. As a package, you're paying about a debit. We've got a $1.85 debit on here. As Kevin mentioned, it's trading about $1.65 now. You can get a little cheaper, but the debit you pay is going to be your risk. So $185 per spread on this one. And you can see from this type of strategy that you want it to go at or near 187.5 or at or near 167.5 after earnings tonight after the bell. But you've still got a range probably between about 160 and about 195 on the upside to be profitable. What you don't want to happen on Kevin's example trade here is you don't want the stock to stay exactly where it is, and then you don't want one of those 2 or 3 standard deviation moves where the stock moves 20 bucks either to the upside or the downside. That's where you get those losses to come into play here. But you're taking advantage of that vol dispersion that we talk about, because you're not having to pick a direction here. You just think it's going to move about the $10 either way, because you're buying about a 59% implied volatility on aggregate in the options that you're buying, selling about 102% implied volatility on aggregate in that near-term November 7th option, where you're selling both the call and the put, so that contracts the initial risk and price of this double calendar position. But Kevin took the bull-bear debate here, so I looked at something that's a little bit more neutral and maybe a little bit more bullish on this one. So I looked at a complex 4-legged spread. I call this the Kevin trade. Kevin likes to look at these examples here. I'm going to do a calendar, and I'm going to do one at the 185 strike call on this one, where I'm going to buy the November 14th 185 call, sell that same 185 call in the near-term options, in the November 7th weekly options, and to help pay for that, I'm going to sell an out of the money November 7th weekly, the near-term options, sell the 170 put, buy the 165 put. So that credit you collect actually pays for the call calendar to the upside. Now you're going to collect a credit of roughly, I've got 30-cent credit on here. It's trading closer to 25 cents, so right around 30-cent credit. So what that credit means is, if the stock explodes to the upside, goes above 190, goes above 200, you get to keep that credit that you collected. But you can see here from the risk profile, if I collect that 30-cent credit, it takes my break even all the way down to 169.70 to the downside. So anything above that 169.70 is going to be profitability, because I'm collecting a credit on it. Where I start to get hurt and where I've got about $470 in risk is below the 165 strike. So Kevin, this is actually a little more bullish, but then it's also neutral, this type of strategy, right?
Yeah, exactly right. You're selling the 170, 165 put vertical. That's trading between 95 cents and $1, Tom, credit on that vertical. Then you're taking that credit and spending some of it on the upside call calendar. And so therefore, that greatly reduces. You're still doing the whole package for a credit. And if you get that big move and everything goes to zero, you're profitable. But obviously, you're looking for a move up towards that 185 strike where you had that calendar. That's when, here's what happens. The calendar spread goes to max up around 185, and the put vertical goes to zero, Tom. And that's where the spread maxes out.
So we've got all the bases covered here, Diane, with Kevin's bull and bear trade and this neutral bullish trade here. So we covered every segment there.
We do. Bull and bear baked into one or multiple options there, strategies, I should say. All right, coming up, we got cash tax. The team from Lightfolio will be along with new sentiment data on DoorDash and how consumers are feeling about it now. Stay right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by America.
They're going.
Giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading
9:30.
questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market.
From open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Likefolio. Today, taking a look at DoorDash. Andy, thank you so much for joining us today, because we recently talked Uber, so it's interesting to see the data that
I had PLTR at a certain support.
to know, based on how you look across sentiment now, is this a two-man race between DoorDash and Uber?
Yeah, it really is. It's quickly becoming a one-man race in a lot of ways. We really see DoorDash with the market share leadership that is accelerating.
This guy snorts too much cocaine.
Web visits. DoorDash is at 50% of all delivery web visits. That's up from 48% just a quarter ago, which is double Uber Eats. It's 5 times Grubhub. So
shut up. Now we're getting down to my second support channel here on PLTR. Oops. SPX new highs. We just broke my resistance level. starting to pull back a little bit.
Stock falls lower but remains above that break even of 217.60, and you can be profitable on this type of trade. Kevin, when you look at this, you know, it's short-term positioning. You collected 240. Basically, you want this thing to go out worthless and remain above 220, right? But if it does fall, you might have to start thinking about, okay, do I want to close it ahead of expiration if the market's open, or do you think that it's going to remain, and maybe that 222 level, which is a 200-day moving average, becomes support again?
Yeah, well, the theory on this trade is being cognizant of the stock's already sold off, and it's approaching the 200-day moving average, which I'm below in my short strike. So if I'm dead wrong and the stock were to break through there, I still have risk of only about $760 on this trade. But my game plan, if you don't think that, move those strikes further away. But just understand the trade-off is you'll collect less of a premium. I, noticing that the 200-day moving average is right there, chose to be more aggressive. Doesn't mean I'm going to be right, Tom, but I know the probabilities are still about 60-65%, and I'm risk-defined.
Yeah, and this sets up with what Andy brought us, and hey, that 16.5% pullback that we've seen might lend some support there also, Diane, going into this neutral to bullish example Kevin brought us.
All right, good stuff there, guys. Thank you. Coming up, the breakdown. We are taking a look at AppLovin. It faces a critical earnings test today. We'll be right back.
To the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check on your scorecards as we get closer to the bottom of this hour. The S&P 500 still has a gain. It is better by 0.8%. Bulls have the reins again. The Dow right now gaining ground by more than 0.5%. NASDAQ 100 better by 1%. Russell 2000 still the belle of the ball, higher by more than 1.5%. Meantime, AppLovin faces a major earnings test after the bell, with Wall Street looking for earnings of $237 per share. The ad tech firm is projected to post an increase in ad sales north of 50% year over year, strong but down from last quarter. At the same time, regulatory clouds loom, with the SEC investigating the company's data collection practices after short seller allegations. Time now for the breakdown. Joining us for that, we've got George Sillis, senior markets correspondent. All right, George, so a couple different things here. You know, you have the expectations and you have the clouds hanging over AppLovin. What's your fundamental take on this one?
Well, yeah, this is a little bit tricky because, you know, the company was added to the S&P 500 in early September. It got a huge boom from that, but the market also moved quite a bit to the upside since then. And in October, the stock fell. There were some short sellers that, of course, were pointing the finger at App for essentially, you know, their data collection practices, essentially looking at the SEC to look into them. They got an opportunity. The stock sold off quite a bit, and it seems to be drifting or settling right now around the 50-day moving average. And if you look at the EPS numbers that you pointed out, that's essentially over 90% increase compared to last year at $1.25. But at the same time, I noticed the sales numbers, 1.35 billion, are only higher by close to 12% compared to last year, where the company earned about 1.2 billion in sales. So I think, again, the earnings estimates are quite high relative to sales. But at the same time, again, that could manifest into
App. It's got earnings coming out.
Which have actually grown exponentially.
I don't think I put that on my watch list.
Sales, but in margin, I did notice that the company's gross margins have expanded quite a bit. 78% of sales. You just go back to like their 5-year average, it was in the 60% range. And, you know, going back also in the last year, their net income margin is over 42% versus basically barely anything in the last 5 years. So they've grown exponentially in the profits, margins. Their top line sales have been growing. And I do think that they're expecting some deceleration in top line sales, which is effectively what you would expect as the company continues to mature. But they are moving, and I think this is what analysts will be looking closely at, into e-commerce platforms. Now, that's an additional revenue base, but at the same time, that could potentially encumber margin growth, because margin growth, I suggest, has really been the story for App, in particular the last year, where the stock is up over 200%. So that might be compromised in lieu of higher revenue growth going forward. But again, let's see what they say when it comes to the SEC inquiry for their data collection practices, whether or not that's going to adjust any guidance going forward. But I think also, lastly, I'll reiterate that the analysts will be looking for growth in e-commerce sales relative to how that may impact their margin growth going forward.
Yeah, because I'm sure on the earnings call that question will come up about, you know, the SEC and that cloud hanging over them, the allegations around it. I'm sure that'll come up because I've been seeing in different reports that they've been answering or asked questions about that, and they've been defending themselves. Any final thought on AppLovin, George?
Yeah, I mean, at the end of the day, there's a reason the stock has increased substantially in the last year. Their ad marketing technology has really crowded out other, you know, languishing competitors like the Trade Desk, and App has been moving aggressively into the connected TV realm. So they're really out competing some of their other legacy competitors like Roku and the Trade Desk. But again, this is why I say it's a little bit of a challenge, because that inquiry can create a, you know, lingering negative impact on the stock, irrespective of the fact that they are growing quite a bit.
Great point, and especially since they pulled back from that all-time high, or that 52-week high earlier this year. All right, thank you, George. That is George Sillis, senior markets correspondent, with the breakdown. Let's get Tom and Kevin back in here for the example trade for this one. Tom, you've got the example trade for AppLovin. You heard the deal of, you know, one, what expectations are, along with the clouds hanging over it. What's your example trade approach?
Well, I think, you know, the biggest question is going to be clarity from the company on this earnings report, because, you know, Muddy Waters Research, Fuzzy Panda, another short research firm, they've come out with notes and say that they're violating a lot of the terms of what these apps have that they're using in their data, and that's a concern. It doesn't seem to be a concern for investors because they've shaken off everything. Stock's up 88% so far this year, just about 18% below those highs that we saw, but it's hugging this 50-day simple moving average right now, and it's touched it a couple times, hasn't really traded below it for more than a day or so. So the strategy I looked at is kind of the same setup that Kevin looked at in the trade that we just talked about in DoorDash, using the technicals that have acted like support. So I looked at a short out of the money put vertical that's neutral to bullish, and I went out to that same November 7th weekly options. I call this type of strategy a don't be a hero type of strategy. If you have an assumption on where you think the stock's going post earnings, this takes advantage of it, but gives you better probabilities of success. Now, stock's trading $610. Option market's pricing it in a $63 move either way. This is a high price stock, so you've got to take that into consideration. Price discovery probably warranted on any type of option strategy that you do in here, just due to the wide bid-ask spreads. But selling the November 7th weekly options that expire in 2 days, sell the 550 put, and then buy the 540 strike put. Short $10 wide neutral to bullish put vertical, collecting roughly about a 250 credit. As I mentioned, price discovery may be warranted on these strategies. If you collect 250 credit, that's what you can make on this trade, $250 with $750 in risk, but that's all the way below 540. It's about lined up, Kevin, that short 550 strike with the one standard deviation move that the option market's pricing in, but it gives you that big cushion to the downside.
Yeah, I mean, the market's expecting a big move on this in either direction, right? Right now it's $63.70. The 550 put that you're shorting has got a 75% chance of finishing out of the money, but it's right now, it's $60 below where the stock is trading. That should show you, but still trading about, $10.50 is where the premium's trading. So the market's expecting a big move here, Tom. So you take advantage of that, but you, as always, control your risk by limiting the amount. So yeah, selling an out of the money, high probability put vertical, collecting theta. Remember, this stock can correct $50 and you're still 100% profitability. So I think that this is one of those that we talk about a lot. High probability, collecting theta, risk defined, short put vertical.
And Kevin, and this is a stock that has a beta of 2.45, so 2.5 times basically what the S&P 500 trades with, which has that beta of 1. So take that into consideration. That's why the market's pricing in about a $63 move. And I think, Kevin, one of the key things is that you mentioned is stay risk defined in these trades, especially on a $660 or $610 stock. Stay risk defined, right?
Exactly right. Remember, a lot of people can't trade $610 stocks. But if you use options and control your risk, remember, if you sell a $10 put vertical, the margin is $1,000. And so that's what you have to cover in order to trade this name if you use options in a risk-defined manner, Tom.
Yep, and collecting 250, risk of 750. So you got that higher probability of success on this one. Diane, you can be wrong and the stock goes down to 550 and stays above there. You can still be profitable on this example trade.
Everyone likes when you can still be wrong and be a winner. All right, thank you guys. That is going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hanks and Tom White. Download the Schwab Network app. Available in the Apple App Store and tune in 24/7 on SchwabNetwork.com. Stick around. You've got Next Gen Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
What's up, Carl Nation? It's your
What's up, Carl Nation?
full service wealth management skill.
Here's something I said yesterday, YouTubers. In the room, fat cats are doing their best to short the market. I've never been more bullish in this market than I am right now. As a beginner, and just starting out, I ask you to be patient and wait for the setups. I have a great strategy that looks at chart patterns, candlestick patterns, moving averages, and start a good watch list of stocks to follow, assortment of at least 10 of them. As the market corrects, look for them every day, look at them every day. A list of stocks that get mentioned every day. Watch lists are good to have. Here is a good starter. Magnificent 7 plus the IWM, QQQ, SPY, and the SPX. Plus maybe AMD and a few woke stocks like Starbucks, Nike, and Disney. Look at them every morning. AMD is a great one. NVIDIA, Tesla. I have traded for many years. SPX, SPY. I scalp every day. Paper trade in these at times. I've been calling a pullback for a few weeks now. Been in the know. PS. Use the /ES and VWAP for entries and exits. So today, when I traded the SPX, I used the /ES for my entry points. We have the VWAP. Let's go straight from the beginning. So this is this morning, and they came back and hit the VWAP right about well, that don't make sense. 453. Right here it opened. Went 609, and then we had 844. So at 844, which is right in here, 843, we had a triple bottom. And it came back and hit that VWAP right at open. Boom! And then right at around 920, we came back and called out the 50 and the 63 EMA. Right about 840. .840 came back and hit the VWAP on the /ES. Boom. 1016. We came back and did a triple bottom. At 1016. Boom. At 1112, we came back and hit the 50 SMA. Now we're hitting the 50 SMA again. 1112, we had the little pullback right here. Then started bouncing above the 9. So that's using the VWAP on the /ES. And then watching the moving averages. The 200, the 50 right here, and then the 200 EMA right here. And respected the 50 SMA twice. So on that watch list, I had AMD as a daily trader. Wanted to watch every single day. So we had a slow pullback, came it open, had a little breakout, pullback, and it's been running up ever since for new highs. So 244 to 256, $12 bounce. NVIDIA I called out this morning, called this double bottom. Then we came back and we hit this old resistance level. That's on my watch list. We came back and hit that old what was resistance, now becomes support. Bounces up. Called that one out. We had Apple. Apple had a double bottom. It's on that watch list. Apple had a double bottom. Boom to a triple top. Meta hit my support level at 626.46 that I had. Boom. And then the SPY. SPY bounced off the 63, the 63, and the VWAP. Boom. Broke a resistance level. QQQ off the 200 EMA, came back and retested it, broke a triple top. Boom. Symmetrical flag right at open, had a symmetrical flag, bounced right up. IWM off the 200 3 different times. 200, 200, 200. Made almost like an ascending triangle. Bounced up, boom, up to resistance. Tesla. I think did I mention Tesla already? PLTR is the one I want to trade next. I forgot when I alerted Tesla. I might not have. But it's definitely double topped at the top of the orb. From the bottom of the orb. I'm at a triple bottom right here with an inverse head and shoulders. This SPX was a great trade today. I notice a lot of people get a little scared of the SPX, but it's been my biggest money maker of all trades I've ever traded. The SPX. That's why I like trading it. Because I'm like 3 or 4. My average was 300 a day. 300 to 600 a day. And when I started trading the SPX, it's more like 1,200 to 2,000 a day now. And that's putting about the same amount of money I would put in on the other trades. 1,500 at the most, unless I'm in trouble. So it's good to have that top watch list ready. And I talked about it yesterday. I said, better get that thing ready. And that's the Magnificent Seven. And you had a guy come out today, said that it was all hype. A fat cat. I don't think so. They keep trying to say we're in a bubble. I don't feel like it. Though we probably are. They just wanted the market to pull back some so they can get in it. Make a ton of money real fast. You've seen it, these things go up to $1,000 today on SPX to 2,000. The 6,800 went to 3,100 today. And I called it right around $5, $5.10. And it went to 31. So that's $2,500 a contract. I got out a little early on them, but oh well.
found Pinterest, and I think that's also leading to some of the weakness today.
There's a few analyst sentiments that I think are important. One noticeably from Rosenblatt Securities, which they downgrade to neutral from buy. The price target's 30, and it was formerly at 49. And I think this reflects the nature of you have to be willing to adapt and say, hey, circumstances have changed, and maybe what was once a really, really strong market position, one where you could easily monetize the user base and bring value, perhaps is changing and changing quickly. We've talked about this with Adobe and sort of the role that it played and investors' satisfaction with the fact that it was very subscription oriented. Well, I've made the case for Pinterest that, maybe their issue is more user demo growth and trying to get beyond just like the certain demo that goes on there, because once you're on the platform, it made a lot of sense to be advertised. If you're pinning things that you want to buy and then it shows you how to buy it, that's not an intrusive experience. One of the names we're going to talk about today is Snap. I have always argued that an advertisement on Snap has always been intrusive and disruptive to the experience. It's not the case on Pinterest. But what has been disruptive is ChatGPT and Grok and whatever other names you have, where you can essentially have your Pinterest board, I guess, or whatever it would be called, in a conversation with one of these chatbots, and then you can search the internet and find this stuff for you too. So maybe we're not there yet, but we're closer to that, and it's a real risk for Pinterest to the point where it might just not serve a purpose anymore down the line.
Yeah, and I will say to your point about the intrusion of ads, the Pinterest ads are also very frustrating because they like redirect you to other apps. I mean, the whole experience now just feels so
it's clunky as well.
Exactly, yeah. And again, I'm a loyal Pinterest user, but I will say my ChatGPT use has definitely threatened some of that loyalty. And so that's also a really good point that we're just seeing now you can curate so much more of what you want at your fingertips without needing, these various boards to be curated
TikTok
for you.
has probably hurt this as well. I mean, I feel like just from overhearing the TikTok in my household that there's communities and people that are influencers in these spaces, whether it's home goods or other interests that somebody may or may not have, that is also idea generation and advertising, and it's sort of this new economy that, again, Pinterest is just seemingly being left behind when it comes from a user growth standpoint.
No, that's a really good point as well, because now the landing pages of so many of these influencers, content creators is no longer Pinterest. It's all these various apps that I'm sure work within TikTok a bit easier, and so a more seamless experience has then cut Pinterest out a bit. So 21% decline today. Pretty brutal session for Pinterest here. But we'll leave it there for the top of our show today. Now, coming up next, it's time to chart and trade. Two names with earnings out after the closing bell, those being App11 as well as Snap.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the technicals with our chart master, Rick Ducat. And so today, previewing two names that have earnings out after the closing bell. Two definitely volatile players on the heels of earnings, and we cover them very extensively on the show. So AppLovin as well as Snap. And so we'll start off with the better performing of the two on the year. Also today, though, as now AppLovin's up, modestly, but about 0.5%.
Yes, but up extremely high over the past year or so. But we can see now that we've had a situation like we often see in these charts where there's kind of two phases. The first phase was where we had this high here that we experienced around 510, and then our subsequent high point there. Then we had our gap up. So from that point, we had a low that came in around 536. We never really quite retested that area here, even though we have had a substantial decline after those old highs near 745. But now price seems to be rebounding somewhat here, but we are stuck again at a shorter term ceiling. 655 is a repeated high point here. You could also argue that we have a downward sloping trend line connecting these highs and these subsequent highs near 655 once again, that price is still traveling within. So kind of two competing patterns. You could say either upward channel here or downward trend line here. It's kind of remains to be seen which one will win out yet at this point. If we look at some of our other studies, we can see that the RSI, our measure of momentum, has been very gradually trending upward and making higher lows. Long-term RSI can be kind of iffy at times, though. The shorter-term movement is more concerning to me here in that we are trending downward and about to dip below that 50 midline once more. That separates bullish and bearish momentum, so that could be a sign of potential trend change. We can also see that price has struggled to maintain its hold on our short-term yellow 21-day EMA. That moving average comes in right around 616 or so, a short-term resistance point to consider there. Finally, when we look at our volume profile and standard deviation channel studies, our volume profile shows a node, the only really significant node anywhere near current prices is between about 625 and 650. We can also see that 650 level is about where we hit our highs. It's about our +1 standard deviation channel. So that really stands out as potential resistance here. The major supportive area down here, our old lows, line up with our blue linear regression line, our line of best fit. So 535, 655, those would be the general boundaries. A pretty wide range to consider, but that's the way things are kind of lying at this point.
Okay, and AppLovin was at one point one of our best performing stocks in the S&P 500 this year. Now, of course, it helps the inclusion of this stock into the index, but we've seen, as you mentioned, a bit of a pullback from those highs, but does put us into some interesting positioning approaching this earnings event. So now, as we do look to trade AppLovin, for example purposes, of course, Alex, walk us through your thinking here.
Yeah, of course, we had that big news story, sent the stock going lower. 550 was that dashed green line, or that area around 550 that Rick just talked about, a possible support. Looking for a test of that again post earnings in this put butterfly trade. And so if you have an idea of where the stock may or may not end up, this is a strategy, particularly on a little bit more volatile names, Jenny, and higher price stocks, that can be intriguing from an example standpoint. You gotta be right. It gives you a window, but you can make a lot of money if you're really right. And so it's November 7th, expiring the end of this week, 570, 550, 530 put butterfly. And so best case scenario is you're right at 550 at the end of the week.
You spend $2.50 on this $20 wide butterfly, you can see you can make as much as $17.50. Now that's probably not going to happen, but you can see how the risk profile works. The closer you are to $5.50 by the end of the week, the more likely that this could be closed for a profit. Now I will say, the vast majority of traders, basically all of them, would look to close this trade if it was in these areas where one of these options was in the money before expiration. Because of how it's structured, this risk profile only applies as it's a spread. If you go into expiration and it's somewhere in here, you could face assignment and exercise and look like a whole different position. But max loss $250, max profit $17.50. That's pretty nice risk reward there. But you can see you only got about, what is that? A $35 wide window where this can be profitable. So you got to stay within that by the end of the week.
And obviously, as we said before, an example trade that benefits the more right you very much are. So you're looking for some more precision here when looking at this example trade. But now our next name, Snap. And to Snap's credit, I don't know if there will ever be a time where I don't discuss when Snap brought down the overall market, because it was like the wildest session here on Next Gen. But we've since seen Snap pull back 32% this year. And I mean, down today about 1%. I will say a pretty small move, all things considered. We just looked at Pinterest, which is really selling off today. But now it does set a difficult stage for Snap here into this earnings report.
So the move down may not be the largest, but in some ways it could be quite worrying to the bullish crowd here. The reason I say that is because in the shorter term picture here, we have this downward sloping trend line to consider. So we have our lows being connected, or our highs being connected by this trend line here, but then we also had a repeated support point right around here near 750 or so, 775, that general supportive zone. We have fallen below that level today. We have not managed to even really test that old supportive level. So that could be potentially concerning, because then that opens the door to retesting the further lows that we saw here.
Retesting.
52-week low. That's around where price held support once more, 690 to 7 or so. That would be the ultimate area that we saw for our extreme lows on this particular time frame here. But really overall, though, not looking super great anyway. Trending downward from 1328 pretty consistently the entire year. So when we look at some of our other studies, our moving averages, 21-day and 63-day EMAs in orange, or yellow and orange respectively, $7.78 to about $8 or so. That would be another resistance confluence, and it also lines up with $7.94, our red line here. Repeated low points, subsequent high points, etc. here. So we were stuck in a range. Now we have kind of drifted downward here. We can see that momentum also continues to worsen for the bulls, favoring the bears.
We got a triple bottom here.
Picking up to the downside, coming in below 40 now. Finally, when we look at our other studies here, our point of control, our heaviest trading area, comes in at around 839. Again, not really super great news that we had a big
Snap earnings coming out
here at the lows that we have since moved downward, and it's happened actually twice more here. You can see another node here at around 750, and there's another final one here down in this area near about 705 or so. I can't help but also point out our 5-year chart for Snap does not look very good. It's we hit highs at one point of 83.34 is that. Now we are below $10 or so. So a really rough move.
And this really puts into context. I mean, again, I know we've fallen this year. We've underperformed the overall market, but like where we came from to where we are now, and it's
you look hot today,
the
baby.
nature of social media, where we know that some of these names, they fall into favor and they fall just as quickly out. So it's going to be an interesting earnings event, that's for sure. But at least seeing some depressed levels as we go into this report. Appreciate it to Rick, our chart master. So now, last but not least, as of course we think through trading Snap for example purposes, Alex, I mean, it hasn't really done a whole lot in the last several years, but that doesn't mean obviously you can't see some short-term volatility.
One, let it serve as a cautionary tale. Like, if you would have asked investors when the stock was at 80, would it be sub 8 in just a few years? Many would have probably said no. It's certainly possible, and this could happen with many of these stocks that are doing quite nicely now if things took a turn or dynamics change. So serve as a cautionary tale. What I'm looking for, though, for this example is a lot of movement, Jenny. Not a strategy we look at often, but buying of the straddle. Right now the stock is trading right around 7.5. So we looked at the 7.5 straddle, again, buying it, so spending a debit of about $1.25. What you'll notice though is this doesn't expire at the end of this week, it expires at the end of next week. So you have $125 in risk, and unlike the last strategy where precision is important, it's like the opposite of precision. Just go as far away from 7.5 as possible. You have 2 break evens by the end of next week. That's 625 to the downside and 875 to the upside. But you need to move to them or beyond, and you can see you can make money down to zero and unlimited profitability to the upside. So if Snapchat has something great to say, or Snap Inc. has something great to say post earnings, and this stock's trading at $10, could be a big winner. And of course, if it's unchanged, maybe near max loss by the end of next week.
Yeah, and we'll have to see if we can see some fireworks on the heels of this report today after the closing bell. But that'll do it for Chartmaster today. Now, coming up next, we will have a conversation about the advent of social health and really how investors can take advantage of it to set themselves up for success. Stick around. Next Gen Investing. We'll be right back.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis.
Rivian had a big move.
400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly.
Better than expected earnings.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360.
They lowered price target to $13.
From Chicago. Weekdays
Goldman
at 11
Sachs.
Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
A little overdone.
I have a question
Oh
for
God,
you.
Dad.
Sure. When did Granddad first start investing?
Granddad had. He stopped sleeping with you because he passed away. Tesla, new high. We bounced off the triple bottom here. SPX. AMD's coming back strong. About to hit 63. Or what is this? Oh, that's the middle of the standard deviation channel, pivot point.
Like they invest in a 401k.
Some people like to leave a legacy. You know, what is the legacy? Obviously, yours is, at least in part, I have to assume, this health and wellness. I mean, folks who make a lot of money, as you said, sometimes they have loneliness and they're just sort of waiting for the kids, the grandkids to call, who all have their own lives. What drove you to this in the first place?
Well, you know, I'm really passionate about helping people live more meaningfully connected lives, and there are so many insights in the research that I'm passionate about helping people to act on in their lives. And I think when we think about legacy, we think about financial wealth, but we should also think about relational harmony, right? Making sure that our families don't deteriorate with conflict and things like that after someone passes away, and instead really think about financial planning as preserving not just wealth, but also social health and our relationships.
Do you have demographics? I mean, you know, what kind of people are buying your book? Young, old, regional. Your book is now available in paperback, from what I understand. You know, I'm sure it's for everybody, but do you have some color, maybe a story or two of somebody you helped quickly or something they told you?
Yeah, you know, it's been really meaningful to see the book resonate across demographics, across countries and cultures as well. I think what's been interesting is that loneliness is highest among young generations, among Gen Z and youth today. And so there's strong resonance there, but also across the lifespan. Every single person needs meaningful connection in order to live a long, healthy, fulfilling life. And the book, The Art and Science of Connection, was really written with the intention of helping people do that.
You know, this is not a normal topic that we talk about, but it certainly resonates with everybody in finance, but just, you know, existing and trying to find that harmony, whatever that may be for your wellness. It's great to speak with you. Thank you so much for being here, and congratulations for being the keynote here. You were well received for sure. Kathleen Killam, author of The Art and Science of Connection. Thank you for being with us here at Schwab Impact. We've got such a great lineup, Jenny, 2 days, over 30 interviews, I believe. Jenny, back to you.
Thank you so much, Nicole. Now, coming up next on Next Gen Investing, we'll be diving into the move to the upside today in Unity, as we are seeing an 11.6% pop here in reaction to better than expected guidance now going forward.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab
Triple
Network
bottom,
and stream live coverage
double top.
wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that if they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Next Gen Investing. It's now time to discuss a move to the upside on the back of its earnings, that being in Unity Software, which is up now over 12% on the session, adding to its near 79% rally this year. Joining us now is Diane King Hall, the host of Morning Movers. So Diane, we've talked a lot about the bloodbath post these earnings announcements, but finally get to talk about a nice green day for Unity Software. So walk us through this report.
Yeah, and what was interesting about this one is the street was expecting a lot of red ink. That did not happen in the most recent quarter for Unity Software, and it is projecting some strength to come. Let me take you through the numbers. A beat on both the top and bottom line. Adjusted EPS coming in at 20 cents a share. The street was expecting the opposite of that in terms of adjusted. They were expecting an adjusted loss of 23 cents a share. So again, they beat.
The street's never right.
On an adjusted basis, 20 cents per share. Revenue beat expectations, topping $470 million. That's an increase of 5% year over year. So you had some strength there. Operating cash flow climbed 27% from a year ago. Free cash flow reached $151 million. They still posted a GAAP loss, but again, cash generation margins are improving here. Growth Solutions, that's its advertising and monetization platform arm. That led the way. You saw revenue in that unit increase 6% year over year, $318 million in revenue. So you can see that that is a cash cow for them. Create Solutions, that's its game development platform. That grew just 3%. So you know, that signals that that is still an area that they need to work on. But again, the Growth Solutions lending itself to the name there. In terms of their projections for guidance, management's projecting Q4 revenue between 480 to 490 million, guys. So that is better than what the street was anticipating here. So you are seeing a major rally here, increasing as we speak, rising more than 12%, Jenny and Alex.
Yeah, and I will say that this is a welcome move to the upside, although this name has been really an outperformer for the bulk of this year. So a nice earnings event that perhaps gives a sigh of relief for those that were concerned about some of the guidance. But so appreciate it, Diane King Hall, host of Morning Movers, for always helping us break down some of the biggest movers on the session. But now to shift gears here and go back to what we're seeing at the Impact Conference, of course. I'd now like to welcome in John O'Connell, founder and chief executive officer of the Oasis Group and the author of Rise of the Activist Investor. So thank you so much for being here today. Your book argues really, though, activism is not just for billionaires. So what's really the first step you can take as a retail investor to have real influence on a company?
So my book, The Rise of the Activist Investor, actually walks through those steps that you can take. The first one would be to really find companies that reflect your values and that you'd like to invest in. The second would be to really engage like-minded folks who want to, who share your values and want to basically influence the direction of a company. And then the third would really be to register yourselves as a wolf pack, get a certain level of ownership, and then you actually can vote to put someone on the board of directors. So I actually created an activist investor arc as part of the book, which walks through all those steps.
Yeah, let's talk about that. Can you explain that activist and investor arc, and you know, where do we're next gen, right? Gen Z, millennials, where do we often come in on that arc, and how do we progress along it?
So normally what you'd find is younger investors are going to start on that arc pretty early on if you look at the entire arc. The first steps of that are finding like-minded individuals that share your values and really care about a company. There's tons of online capabilities that you have. Many of these investor groups, you can find them on Discord or Reddit. Those were a lot of the areas that you'll find those types of groups. You can find like-minded individuals, get together, start discussing the direction of a company and the direction you'd like to see that company move in, and then realize that the chief executive officer really does execute on the plans of the board of directors. If you want to change the way a company is moving, if you want to change the direction of a firm, you can put people on the board of directors by having a certain percentage of ownership. You can actually ask for someone to be nominated for the board of directors. You can vote for that person on the board of directors, and you can move that agenda forward and change the direction of the company. Like I said a moment ago, most investors start on the younger side of things. They're finding those like-minded individuals. They're investing in the company directly. They're beginning to become more active in discussing the company's direction, the direction of the company, the financials of the company, and the direction they'd like to see the company go in. And then as they start moving up that arc, ultimately they get to a point where they're actually putting together a proxy to name someone on the board of directors.
Okay, so the meme stock phenomenon showed the power of collective action. How do you see the role of activism evolving in the next decade, or maybe even more midterm?
So if you take a look at some of the examples we have there, look at AMC, for example, right? The financials for AMC were not doing very, very well. AMC did have a lot of investors that started, retail investors that were buying the stock to try to prop up the stock price and change the direction of the company, which ultimately enabled the company to lower their overall debt to equity ratio. So the power does exist in retail investors. If you take a look at some of the trends, retail investors now own more shares than institutional investors of many of the firms that are on the NASDAQ and on NICE. So the power really does live in the hands of the retail investors. Retail investors can start to become activist investors by buying up shares of companies that they care about, finding those like-minded individuals, and then causing them to change the direction of the company. So AMC was a good example of that. Many of the meme stocks, some of those meme stocks started out where people were propping up those stock prices by buying into them, but that was really driven entirely by retail investors. So they do have that power.
John, your work in the Oasis Group is known for kind of its exploring AI and wealth technology. How do you see some of those AI breakthroughs changing the landscape, not only for next-gen investors like our viewers, but those who are embarking upon activist campaigns as well?
So think about the power of AI today in the hands of a retail investor who understands how to leverage artificial intelligence. You could literally run without having some of the real-time pricing, but you can run almost a certified financial analyst, a CFA level analysis using artificial intelligence. It understands what a CFA is, it understands how to do that analysis, and by being able to download publicly available information like 10Ks and 10Qs, you can run that analysis now on your own. So if you want to move into activist investing and there's a company you truly believe in, and you want to be able to do that type of analysis, whether it's a fundamental analysis or momentum-based analysis, all that power now exists for you within artificial intelligence. You no longer
President Trump delivers remark to American Business Forum in Miami.
That type of analysis. So what we see
saying, "Come on, New York, move down to Miami."
They are leveraging artificial intelligence not only to do analysis on companies, but to generate life financial plans for themselves. For example, debt management plans or financial.
We're going to find out a lot in the next 4 years. Aren't we? Let's see if he's talking about New York when I pull it up.
People. 1 year ago, we were a dead country. Now we're a country that's considered the hottest country anywhere in the world. It's the hottest country. We are now in the hottest country anywhere in the world.
We are?
And
You think
I'm
so?
pleased to report that today the United States has the strongest economy, the strongest borders, the strongest military, the strongest friendships, and the strongest spirit of any nation anywhere. We have the greatest economy right now. A lot of people don't see that. But if you look at what's happening with all the factories, AI, auto plants all over the country being built, that if you would have thought about that 2 or 3 years ago, it was the opposite. They were all leaving. Now they're all coming in. They're all coming back and then some. And I think that we can honestly say, and I think you're going to see it even more so over the next 12 months, that this is the golden age of America. This is the golden age.
This is the golden age of America. This is the golden age.
In the prior 4 years, crooked Joe Biden oversaw less than $1 trillion of new investment in the United States. So in 4 years, less than, think of it, less than 1 trillion. That was not doing too good. In 9 months, I've secured commitments of over $18 trillion, and we're going to have $21 trillion within the first year. So Sleepy Joe did, think of that. In 4 years, he did less than $1 trillion. We're going to have 21 trillion in 1 year. I would say it's slightly better. Slightly, just a little bit better. The stock market is set 40-time all-time record highs, and just recently, record high, record high, record high. All of them, all of the different exchanges. GDP growth in the second quarter was an amazing, almost 4%. And as you know, they said, oh, it'll be 2% or 1%. And it's been really helped a lot by the tariffs. It's been really helped incredibly.
Ding,
This
ding. I
is
wish I
really a
could get that
transition
stopped.
period. We went from a horrible, failed country to a tremendous success. It's a transition, and yet we did almost 4%, triple and even quadruple.
Okay. If that's all you're going to do is boast. Turn down the volume because I got it up so high.
For 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Trump's about to start peaking.
Real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Morning movers, be the first to find
Among
out
the
shaping
New
early
York
market action.
women
Tech checks,
will
options
tear
corner,
you to
futures
shreds.
focus, technical
Among the
analysis,
new
morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
I would say New Jersey women hold all three categories.
SchwabNetwork.com and on all your favorite streaming services. Schwab Network.
Philly, you got a lot of crackheads. New York, you got a lot of thieves.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss our under 30 name today, and that is Rivian. As we've seen Rivian under some pressure this year, but finally with a nice pop today of over 20%. Joining us now is George Tillis, Senior Markets Correspondent for the network. So George, I mean, there's definitely, I think, a near-term blip as a result of this panic buying before the EV tax credits expired. But I mean, is this translating into, enthusiasm going forward? Because I've seen names that were punished for a lot less in this market right now.
Yeah, well, first off, the market's moving higher today, so I think that's providing some lift to Rivian. The EV tax credit, which expired at the end of September, I believe, that has been a huge catalyst. Tesla denoted that in their conference call, and so that's transitioning into other smaller rivals like Rivian. And so if you look at the top line sales for the quarter, they were up higher than the estimated numbers, 1.56 billion. up 78% year over year versus 1.51. But at the same time, the adjusted losses, which were expected to be approximately 86 to 88 cents, came in worse than expected at 96 cents. So, question is when you have worse than expected EPS, better than expected sales, how do those offset each other, considering the price action right now up about 24%? Well, a few things we talk about in this segment all the time is, where do some of these powerful moves arise from? The challenge for
the ugliest car in the world.
Quite a bit, and if you look at, for its last 3 years, it's really been in the trading range, at the high end of that range, around 16 and a quarter, low $10, is they have been structurally unprofitable. And structurally unprofitable businesses.
And Rivian had a big bounce today.
Cost of goods sold. In other words, they have a gross margin that's negative. It's still a very challenging environment for any business. Well, for the quarter, Rivian actually demonstrated they came in with a gross profit essentially of $24 million. That's essentially taking the revenues minus their cost of goods sold. That's very positive in the context. If you look at last year,
George,
they essentially had about 5.1 billion in sales.
You don't look too good today.
$5.3 or so billion cost of their input costs. They're just their cost of goods sold, not including, of course, their labor and so forth. So when you have that gross profit that goes from negative to positive, that's a huge catalyst. That's what's happening here, at the very least today. Now that could arise from other reasons besides vehicle sales, which were positive. One of the things you notice is that their software and services division actually grew about 324%. That's a higher margin business, so that may explain why gross margins were higher versus the estimated, because the estimated numbers were expected to still be negative. So again, a very good quarter, positive outlook, but there's also some lingering concerns. And I think this is why maybe companies like Goldman Sachs still maintain neutral rating at a $13 price target, because for the full fiscal year, Rivian is still expected to lose between $2 and $2.25 billion. And that's quite a bit of money still, but it's better than the losses that occurred last year, which were around $3.5 billion.
George, it still seems like, do you think this company can reach that tipping point of profitability over time from scale? But I love that you brought up the software and services division, because it seems like that changes that math equation dramatically. Do you think that's fair to say?
Well, it can, but there's still some challenges I see that are encumbering Rivian. I think I've talked about this before, is they don't have production volume. And if you look at the numbers for the quarter, they delivered around 13,500 units. But the guidance for the year is still between 41,500 and 43,500 units. For what it's worth, if you just look at the numbers for the quarter, that annualized rate is close to 52 to 53,000. So they still are below that 50,000 mark, and they've been there for quite a long time. So unless they get their production unit volume increasing, it's going to be harder for them to scale. I mean, the quarter was promising. Even the outlook, which is still bad, is not that bad considering last year. But it may not necessarily be enough to essentially keep the stock price moving higher. Now, I could be wrong. It could. That's why I think you should look at the 3-year chart, or maybe even a longer term than that, price action to say if it breaks out of a longer term trading range, and I think it's around 16 and a quarter, that might be very promising. But until then, it's been at these levels before. It may have actually induced some excitement in investors, but it's actually created a situation where it's failed them again because of the structural unprofitability of the business. But nonetheless, it was still a good quarter.
Yeah, and I would definitely say encouraged by this price today, because as we know, price has really dictated a lot of the post-earnings rhetoric, and hey, a decent pop today, which helps fuel perhaps some enthusiasm going forward. But appreciate it to George Tillis for all of the breakdown on Rivian today. That will do it for
Tesla
us today
boom.
Investing for this Wednesday. We have the watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach.
The news.
It's interactive learning at its finest. Tune in live or watch.
You ask, why is Tesla running? Tesla CEO Musk likely to get overwhelmingly shareholder approval for $1 trillion pay package. Wed Bush reiterates outperform on Tesla, maintains a $600 price target. We love Tesla. Dun 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 dun. Elon's going to get $1 trillion. Okay, we have a number 4. Get ready. Prepare ye in the name of the Lord. The 6830s or the 6825s. Or we come down and we hit the 200. Randy's going to wait for the 200. Randy is going to wait for the 200. EMA and SMA. Let's give a high five to Randy. Rob is in the puts. Rob is in the calls and the puts. Shame on him. Prepare ye in the name of the Lord. Washboardjim's looking at the 6825s. May a circle be unbroken by Lord by and by. I'm going to start starter position. They're now at 330. I'm not in yet. I was going to grab 330 and look at that mother. Oh, God. No. Oh, God. 330. Oh. I knew it. I should have jumped. I said I was going to start a starter position. I stood there and looked at it. Ugh. That had been almost $500 in less than 10 seconds. I would have got 3 of them at 330. Oh, shit. Man, 330 to 470, just like bam, in a minute. Honeywell and Quantum. Let me see if I got that on my Quantum watch list. That sucks. That really does, man. I was sitting there looking at it. Ugh. I had my finger, I had the order in, I had it typed up. I mean, it's all right, Jim. You meant a lot. Although you didn't score, it was a great learning lesson for the class. We appreciate you, Jim. Quantum stock, do I have Honeywell on here? Yes, I do. Here's my watch list for Honeywell. For Quantum. I'm going to go ahead and share it with the room. I ask you to share it with everybody you know, please. Damn it, Jim. Quantum, NVIDIA, PLTR, Intel. God, I still can't stand looking at that thing. Tweezer bottom with a hammer. And I was going to jump in it at 330. I saw it go to 3. Oh, well. Oh, well. It doesn't always have to be like that, Jim. $4.70, $4.80, $4.90. Ugh. I'm tempted to go in the kitchen and get some water and a shot of vodka. If it would have went down one more time, I would have definitely bought it. But Oh, see, I didn't even notice the 3 black crows with a tweezer bottom and a hammer. I mean, come here. I just missed an excellent trade. Oh, God, I didn't even notice the crows. Jim, all you had to do was ask. I would have told you that there was 3 crows there. Damn it. I mean, I waited for an hour and a half to take a trade. I mean, I got the triple bottom. It might have not been that long, but damn it. Jim, watch your mouth. There might be a young teenager listening right now, Wayne's daughter. So I got to clean up my act. Oh, man. Triple bottom, it's 3 black crows, you idiot. Amazing Grace. That was a beautiful call. We had another set of them right here. So that should have maybe, we had 2 sets of them. But I didn't notice either one of them. Oh, gosh, look at all the calls. Look at all the calls. Livid Goose. Did you sell them calls? So 2 sets of 3 black crows. And I would have took that trade even. Tweezer bottom with an inverted hammer. But this hammer here with the tweezer bottom. I didn't think about the tweezer bottom just now either. Man, I got to get on my ball. I got to get on the ball. That's a problem. My tummy's growling. Gosh. You know, they went to 580. Oh well. Oh well. Hmm. 1:27, 2:27 Eastern Time. It's tempting to go down and check out the IRS building here. I'm thinking I might do that instead of wait. Come back. It's getting a whole new paint job, and I'm supposed to go down and monitor it and take pictures. See, I'm going to ask the Mexican. I think he's Mexican. I'm not going to ask him what race he is, but he looks Mexican. So how did they contact you? $4,000 to $6,000. I wouldn't mind making $4,000 to $6,000 in a week. You know he underbid the job by big time. Most people would charge, I'd say 12,000 or 15 for something like that. Randy would probably charge 20 grand. Wouldn't you, Randy? If you had to fire 4 illegal Mexicans? Oh, funny. $20,000 for painting a 65,000 square foot building, and only probably have to do 3/4 of it with 2 stories. So you know they're getting a bargain. I know they're getting a bargain. Well, I'm going to go do that real fast and I'll be back. $13,000, 2-story, yep. Man, I want to move to New Jersey. I don't. Well, I get venereal disease. I get VD. Well, there's a Head and Shoulders right here, kinda. Double bottom for sure. I'll be right back. Oh, stretch. I'll be back by power hour.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We're live here at the Schwab Impact Conference here in Denver at the Colorado Convention Center. A lot of great conversations right now. It's my pleasure to bring to you Simeon Hyman, Global Investment Strategist with ProShares, to give us his insight. I mean, you've had a lifetime on Wall Street or in the finance biz. You know, you're having a lot of conversations here. What are some of the trends and takeaways that people are feeling now?
Well, the first thing that I notice, and a lot of people are noticing, is that the bond market is behaving in a way that it hasn't in 20 years. The Fed just cut, and the 10-year Treasury yield is going up. And by the way, that happened last year too, but it hadn't happened in 20 years because of quantitative easing. So the thing to keep in mind is that when the Fed cuts, that doesn't mean that 10-year yields will go down. And that's something people haven't seen in a really long time.
What does that mean to folks? I mean, we actually anticipated that might happen again, but as you said, it was a rare thing because it hadn't happened for so long, but did happen last year. What does that mean to folks?
The challenging piece is, if we map it to the equity markets, that means that at least for large cap stocks, Fed cuts aren't going to do much to expand multiples because that comes from the long end of the curve.
Right.
The good part is, for the first time, bonds can diversify stocks, because if we do end up in a recession, that's when those yields can go from 4 to 2, and you can make 10 or 15% on your bonds.
It's interesting because I had a guest on earlier who was moving away from short-term bonds. I mean, people were killing it with that, but they're not going to get the same return anymore, right?
The bond challenges from both sides the fixed income, because on the long end, there's a little bit of a chance of a little bit of sell-off if we don't get down to 2% inflation. But then you're getting your income cut in the money markets by a quarter point every once in a while.
Let's take the earnings growth we've seen, right? I mean, for example, some of the earnings estimates were lowered, but for the most part, 85% of the companies have been beating the estimates, no?
That's the really good news. So don't expect multiple expansion from the Fed. And by the way, don't expect multiple expansion just from things that are cheaper than the Mag 7 kind of accruing up. All that stuff it's kind of at the same valuation it was 10 years ago. But earnings are great, up about 11% year over year for the S&P.
What do you think about market breadth, the quality of the rally that we've seen? We're 3 years into a bull market. Does it go into 4, and what drives it?
The broadening has to come from earnings, just like the support for the high flyers has to come from earnings. But this Q3 season we've seen, you have mid-cap earnings up 11% year over year, and the Russell 2 double that. So if the earnings growth broadens, then the equity participation can broaden.
So is there something that a strategy you think works? I mean, I don't know if it's a stock recommendation or ETF recommendation, but what might someone consider right now?
If we put those two pieces together, the fact that there's challenges on the fixed income side, but there's fundamental strength in equities, we do think equity income makes a lot of sense. We've got an innovative approach. It's a daily approach to a classic covered call strategy. We have 3 tickers in the suite: I SPY on the S&P 500, IQQQ on the NASDAQ, and ITWO on the Russell 2. And what we've done with the strategy is brought the opportunity to get income from equity, but not give up all the performance that the old school covered call strategies did.
A lot of folks are hedging on the downside, right? I mean, where they're doing investing, and they're willing to take less on the upside if they could protect on the downside. Are you hearing folks asking for that?
Well, I think the challenge there is you have to be careful of how you're being defensive. For example, in the covered call space, if you had an old school strategy that sells calls on a monthly basis, you got a tiny bit of downside protection maybe, but you gave up way too much upside. In other words, it was asymmetric to the bad. We saw it in Liberation Day week. But now that bonds can do their job, what we think is a better idea is get your equity income from a strategy that can really deliver equity returns like I SPY, IQQQ, and I2, and use your bonds because for the first time, they will likely diversify equities.
It sounds like you're more positive than negative in the big picture. Why do you think so many folks are asking about an AI bubble? Or is this like the tech bubble? Or they're looking back to 1929's crash? Are these conversations merited?
Of course they're merited, but I'll say a couple of things. First, don't bet against the rally at this point in the year, not just because earnings are strong, because we know portfolio managers and other folks want the winners in their client portfolios at the end of the year. Right. That's where the Santa rally comes from. But a couple of other points to make. One, we're only about halfway through the historical average length of a bull market, both in duration and magnitude, and that's important. And the other thing that I think goes under the radar screen is the quality of the balance sheets for publicly traded companies. I know we have anxiety about private credit, but here's what we know about the public markets. The S&P 500 level of debt, measured by net debt to EBITDA, the classic multiple, is 1.5 times. That is all-time lows. So at least from what we can see publicly, quality is very high.
Yeah, I don't know if I have it exactly right, but to your point, of the last 9 bull markets, the ones that were over 3 years actually went 5 years, and it gained 155%, we're only up 92%, it was something like that. It basically, the takeaway was we have more room to run. And what about those Mag 7 names that people say, oh, did I miss it? I have FOMO. Most of them have already reported. I mean, Tesla had 1 miss of the 2. All the rest had beats. NVIDIA we're waiting on.
I like year over year as opposed to surprise. In the tech sector in the S&P 500, about 25% year over year. So it's pretty darn strong stuff.
And what's the takeaway here for folks who are younger versus older? What would you tell a younger person versus someone who's really close to retirement?
Look, on the younger side, you have to have risk assets, and you have to have predominantly risk assets. And you have to be diversified. You've got to have large caps, small caps, mid caps, international stocks. Emerging market stocks have been on a rally that we haven't seen in years. So diversified basket of risk. So the crypto question is an interesting one. And now as we segue to your question about people who are a little bit further along in their investment careers, diversification outside of risk assets is important. And when you look at crypto, people will say, well, it's just another form of equity risk. It's just going to do what the tech stocks do. But I point back to just a couple of years ago. Remember when those crypto-related banks went kaplooey?
Sure.
Bitcoin went up when that was happening. So there is really a digital gold aspect and a diversifying aspect. And as you get later into your investment days, diversification is even more important because you do have to smooth the ride a little bit the further you get towards retirement and into retirement.
And just a final thought about, we always talk about fiscal policy and monetary policy. Are there strategies that you think are working? We've heard from Fed chairs that, we have to have fiscal policy that goes with monetary policy. Is there anything that sort of stands out to you in some of the policies now that maybe is beneficial to investors or that maybe worries you?
I'm going to pick a very, very narrow little guy here that nobody's looking at. But in the Fed's announcement, we are done with quantitative tightening, but what Chair Powell said is that they are reducing the maturities of the Fed's balance sheet. That's still like a little bit of QT. So look at that 10-year Treasury. Don't worry about the debt so much moving that long end, but the shortening of the duration of the Fed's balance sheet is worth looking at.
Interesting. You were listening, Simeon Hyman of ProShares. Thank you. It's great to see you always. Thank you very much. Great conversation there. Still ahead, we bring in our panel. We want to talk about the surge that we've been seeing in ETFs. Of course, the fund flow into ETFs this year has had a record. I had a guest earlier who said next year is sure to be a record. But have people faltered a little bit lately with the volatility? Let's find out some of the trends. We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
to the watch list. I'm Nicole Petalides. We're live from the Schwab Impact Conference and wanted to talk about ETF trends. It's not something we thought about 10, 20 years ago, and yet this year, another record year, inflows into ETFs. Why are they so hot, and does that continue? Let's bring in our expert panel. Joining me right now, Chris Murphy, head of ETF specialist T. Rowe Price, and Alex Bird, head of ETF sales at Cohen & Steers. Thank you both for being with us. So Alex, I'll start with you. Some of your thoughts here on the big picture. Why are people still so hot on ETFs? Why did we have a record year? And are you seeing it falter at all because we've had some recent market volatility?
Yeah, it's interesting. The story on ETF growth truly is a secular one. We see through the end of October, ETFs actually had their fastest growth year that we've seen in our lifetime. We've seen ETFs take in over $1 trillion this year, which is the fastest pace they've seen. Generally speaking, where we're seeing a lot of flows have largely been in U.S. equity markets, but really starting earlier on this year, we started to see the flows shift a little bit. Areas we're seeing a lot of flows go into relative to years past have been into areas like international equity markets, commodities markets for folks looking for inflation sensitivity type assets, as well as diversification with regards to fixed income. And this is telling us that investors are seeking for other opportunities outside of U.S. equity markets where they can capture diversification and capture some of the secular themes that we're seeing out there across the globe.
And I want to talk about some of the thematic investing that we're seeing. And, you know, an ETF just becomes so attractive because let's say you like a group or you like a specific stock, but you really don't know anymore. And the stock market can be so volatile. Better to get an ETF. Chris, that brings me to you because so much of this is actively managed, and that seems to be where everybody is going now.
Touched on one of the key tenets of ETFs, which is diversification, right? An ETF, by nature of being a fund, is going to be diversified into a variety of stocks, bonds, and a portfolio that's traditionally been associated with indexing, right? That stigma, though, of ETF meaning passive and mutual fund meaning active is being broken, right? The active can be in the ETF wrapper. You can access active strategies where you aren't beholden to the index. You can still be diversified, but a lot of stock picking and fundamental active management be the driver of alpha potential is really where we're starting to see a lot of investor interest and demand. And so here, you know, thinking about the benefits of the ETF, now you get the benefits of active management and all those well-known benefits of the ETF wrapper, and we think that's a really powerful combination.
And when we think about thematic investing, and I wanted to ask you about derivative-based ETFs, the role that they play in a portfolio. I mean, you know, feel free, both of you, or you know, can answer any one of these questions. But are you seeing any themes, Alex, that seem to be working for folks? And do you expect that next year is a record again?
Yeah, I mean, if we look at years past, last year was a record for ETF growth. This year, we're on pace to hit a record year in ETF growth. Yeah, there's certainly been a lot of thematic ETFs out there that have garnered a lot of flows. As I touched on before, we're starting to see investors really explore other segments that in years past have not gotten their relative share of flows. At Cohen & Steers, we focus a lot on real assets as being a segment where investors could look to for diversification. We look at areas like real estate, infrastructure, and natural resource equities. These types of assets provide a lot of diversification, generally speaking, for portfolios, but specifically around inflation. A lot of folks are looking at the market today and the secularly higher inflation environment we're in, and real assets can play a strong role there as well. And real assets play a really key role in a lot of the secular growth themes that we're seeing right now around the globe.
And, you know, I like to get into the weeds, get into the inside baseball sort of track here. And you guys have both been doing this for so long. You've crossed paths over the years. Chris, when you think about, you know, what insiders, you know, people who really are following these ETFs closely, what do you say to them? What are some of the conversations that you're having?
Don't rest. I mean, this is an industry that keeps pushing the limits. You mentioned derivative-based strategies. This is a huge and mushrooming area of the ETF ecosystem. You know, whether it's outcome-oriented solutions or using options or futures to enhance or modify specific exposures. You know, these are strategies that were pretty much secluded to traditional institutional or hedge funds. You now have that in the ETF wrapper. What we hear from clients, what we hear from folks that have been in the industry as long as Alex and I have is, like, things are changing so quickly, but education is important for the fact that, like, how do you fit these into your traditional ETF portfolios, right, Alex, that folks have been building now for decades. I think that's kind of where we're starting to see the conversations leading towards, okay, I've got all these different options now across asset classes, across strategy types. How do I put them into my portfolio effectively and efficiently to get the outcomes I'm looking for? Those are the conversations we're having.
That's an understatement to say we have all these different options. At this point now, every day it feels, okay, I'll say at least once a week, it feels like at the New York Stock Exchange we have a new listing, a new ETF. And, how many is too many? And thank God people have folks like you who could drive their, vision and help them to reach their goals, because too many is too many.
Yeah, we're
right?
a conference of wealth advisors, right? And the group of advisors that are here are focused on building and preserving wealth for their clients. A lot of these options that have come to market really aren't suitable, right, for traditional wealth managers. And so for them to sort that out can be a mess. Right? I think that's where firms like T. Rowe and Cohen Steers and people like us at those firms can help advisors be educated on the right use cases for active management in sectors, for example, or with derivative-based strategies, what they can do to portfolios.
Also, tax efficiency is another one, but some thoughts.
Nicole, you mentioned how much is too much with ETFs. It's interesting. There's actually now more exchange-traded funds available in the market than there are single stocks, which blows a lot of people's minds. But at the end of the day, we're still seeing a lot of product proliferation as well as innovation. Actively managed ETFs are really central to that. You look at the flows this year, we've seen about 37% of net flows go into actively managed ETFs. 5 or so years ago, those numbers were in single digits. And advisors today, they've enjoyed the benefits of ETFs for years, like tax efficiency, low cost, transparency, etc. And now that a lot of managers are coming to the market with active strategies and they can blend the benefits of the ETF wrapper with active ETFs, we're really starting to see that demand side of the equation meet the supply side with ETFs.
We need liquidity, we need fund flow, you need, we watch credit spreads, Alex. I mean, how are you feeling about how people are investing? Or, are they keeping it in there? I mean, you can't have this, at one point you're going to run on the banks, or people start to try to, liquidate. It's not going to happen like that, or it can't happen like that, especially if you're in ETFs, right?
Yeah, generally speaking, liquidity is a huge portion of the ETF story, and we spend a lot of time talking about the underlying markets that ETF represent, and the fact that how much an ETF has in its assets or how much it trades on exchange is not necessarily representative of the overall liquidity of ETFs. But generally speaking, the structure is there to support investors, and it's proven itself over many trials and tribulations over the years that ETFs are here to stay and kind of survive, if you will, through various market environments. So
good to have the experts help you to pick sometimes, so that you have that underlying backing that you're looking for. Chris, some final thoughts here as we think about the big picture, the markets. What are some of the chatter? I mean, are people still feeling positive?
Yeah, I think so, and I think we're...
I'm going to say, sorry, because yesterday we started to hear from Goldman Sachs and Morgan Stanley that were worries about Palantir, and the Nikkei sold off, and everything sort of sold off. But every time we sell off, they buy the dips.
Yeah, I think people are taking a breath, right? The market's had a nice year, almost 2 years now, right? We're going on. I think there's a lot of different narratives out there in terms of what's the next driver of growth, right? AI has been the big story this year, and particularly centralized on the technology sector itself and the companies that are in the technology sector. What we're looking at T. Rowe is who are going to be the beneficiaries beyond that, like the derivative effects of AI. What are the companies in all these other sectors of the industry that are going to harness that appropriately and become new leaders within their sub-industries? That's where fundamental active management and access to management that T. Rowe Price has through our equity platform, we think is going to provide an edge for us to navigate this next environment of AI and the beneficiaries of AI as that begins to play out, which we think will happen sooner than later.
It's so great to see you, Alex, Chris. Thank you both so much for being with us. I mean, ETFs is sort of where it's at least in part, right? And nice to see the old friends they are. Chris Murphy, head of ETF specialist T. Rowe Price, and Alex Burke, head of ETF sales at Cohen and Steers. Thank you both very much for being with us. All right, folks, so that's going to do it for us here on the Watch List, live from the Schwab Impact Conference here in Denver at the Colorado Convention Center. I'm Nicole Petalini. So glad you're with us. Keep it here on on Schwab Network today, tomorrow. We have so many great interviews, so keep it here. Keep tuned to Schwab Network and schwabnetwork.com. Market on Close is next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. At the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll have live earnings reaction from chip giant Qualcomm, and we'll get results from DoorDash, so be sure to stick around after the close for those numbers and instant reaction. We'll be out at the Schwab Impact Conference with multiple guests, and we'll be discussing crypto, planning for retirement, and the state of the current market. And today's overlooked stock is Lemonade, which is surging to 4-year highs after its latest earnings report. But for now, Marley, take us through what you're watching today.
Earnings reaction, Sam. Advanced Micro Devices stock rebounding after posting beats on the top and the bottom line. The company also issued strong guidance for the fourth quarter, driven by AI chip demand. Shares are trading close to all-time highs now, after seesawing following the report. We'll break down those numbers for you shortly. But Supermicro under some pressure after its results missed Wall Street's expectations. The company's revenue forecast for its next quarter far exceeded estimates, though, topping them by more than $2 billion. And McDonald's reported a miss on earnings, but growth in that important same-store sales metric, sending the stock upward during trading today. The company's CEO added that traffic from low-income diners declined in the quarter and that they expect that trend to continue. We'll have more on that report in just a moment, but I do want to check in with where the markets are right now as we near the end of the trading day. Still solidly in the green across the board here. The S&P trading up 0.75% higher at 6824.48. As for the Nasdaq, we're up more than 1% at 25,739.47. The Dow trading 294 points higher, 47,379.30. And the Russell 2000 up 1.33% right now, 2469.55. Taking a look at the dollar, still holding above that $100 mark, 104. Gold at 39.97.80 a troy ounce. That's up almost 1% today. Crude oil trading down 1.5% at 59.62 a barrel, dipping below that $60 mark. And Bitcoin up more than 3%, 3.33% right now at 104,380, recovering from dipping below those $100,000 level yesterday. Now, I do want to check in with Sam and see what stories caught your eye today. There was so much happening: earnings reaction, government response.
That's right, and so I was keeping my eye on the 10-year yield, spiking around lunchtime here as equities really started to gain some momentum. It's at about just shy of 416 right now, and that came after a pair of better than expected data prints we got this morning: ADP private payrolls and ISM services PMI, and headlines about skepticism in the Supreme Court over whether President Trump's tariffs are legal. There has been some suggestion that that case could be on some shaky ground, so we're watching developments there. But amid the data fog, we got some visibility on the jobs front today with that ADP private payrolls report. Companies adding 42,000 jobs in October, better than expected, and an improvement from the previous 2 months, which were negative. Now, despite the encouraging headline, if you take a look under the hood, the report was actually mixed under the surface. Larger companies continued to hire, but small to medium-sized businesses pulled back. It was also a mixed picture across industries, so financials, education, healthcare saw more hiring, but leisure and hospitality saw a decline. That's one of the few data points, of course, we have to work with in the labour market right now. Now, ISM Services PMI was encouraging, coming in at 52.4 for October, which marks a notable improvement from September and the best since February. New orders were the bright spot there, with the highest reading in about a year. Employment also picked up, but remained in contraction for a 7th month. For now, I'll send things back to Marley with Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you said, Jenny Horn, co-host of Next Gen Investing, joining us today to break down some of the top moves that we've seen, a lot of which in response to earnings reactions in the market. So let's start with AMD. You know, looking at a better than expected report, but we've seen a bit of a roller coaster ride in response since yesterday afternoon when they initially reported.
Okay, you took the words right out of my mouth, because I was going to say it's been a pretty volatile, session, and so as we did see those initial losses wiped out by today's strength. So it's really encouraging because so many of these earnings reports have come out actually pretty hot off the gate, and then we see that strength wane throughout the session. Today was the exact opposite. I mean, revenue came in above expectations, earnings also exceeded forecasts, and they did now forecast current quarter revenue to land between around $9.6 billion on average. That was, ahead of the $9.21 billion estimated, highlighting that right now this is a clear step up in their growth trajectory as they're expanding their compute franchise and also the rapidly scaling data center AI business, which they continue to see driving significant earnings revenue growth. And so far, it seems like right now, AMD and Intel alike both use that x86 chip architecture in their CPUs. That acts as the main brains, of course, behind PCs and servers, but they do expect now this substantially larger CPU build in the next few years.
We're back in time at the 200.
AI demand. And so we did also hear that they are right now tracking to grow by tens of billions of dollars in annual revenue in 2027, which is always encouraging. Positive comment.
Ladies and gentlemen, we're at the 200. Now, is there any drama that's going to cause this market to pull back? I don't think so. The 68.25 is at $2.85. Jenny Horney's on television. Come on now. Well, it might go down to the 200 here. Shit. And it had a gap down too. Well, we got a 1, 2, 3. I still think I'm safe. It has to hold right here. Should grab 3 more right there at 260, 265. Onus, 2 bits, and freebie. We got a megaphone. We got a mild megaphone with a triple top. Not a big megaphone with a triple top. Okay. Yeah, see, I should have got them 265s. There's 320. 340. I don't mess around. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. Thank you very much. To 330. Yeah, Jim, I was sitting there watching one of your videos, and it said, a title, it said, if you can count to 3, you can trade with me. And well, I'm new to trading, and I barely made it past high school. It took me to the 6th grade before I could even count to 6. But I remember how to count to 3, so I watched your video, and Now I'm making multi-million dollars every year. Just all I have to do is learn how to count to 3. I won 'em 2 bits and a freebie. 1, 2, 3 out of the trade. 1, 2, 3. 1, 2, 3. Boom. I was a little scared. I was a little scared. Here, I know what I want to do. I'm not done yet. Looks like it wants to go. 350. Boom. There's the triple top. Are we going to make it to 4? Okay, get ready. What time is it? Oh, it's 2:18. I got to look at the clock. Because right now I'm determining if I should take a risk level here. I've already missed 245. Now it's 265. We're now at 275. We got 29 minutes left. I'm gonna go cut an apple. I was tempted to jump in this thing at 245, but it could drop down here and hit that 200 and be a magnificent buy. We got a higher low here. We got 2 engulfing candles. We haven't broke the 200 yet. Oh, there we go. There we go. Jimmy spoke a little bit too soon. Damn it. There's 50 bucks. If I'd bought at 245, and I had 2 or 3 chances. If it would let me in, I think it would have. Eventually. It's $55 contract. I'd be in and out of them by now. Back down to 230. I'm just going to leave my alert right here just in case. This could be scalp number 4 if you want to make more, but I'm going to see if we hit the 200 EMA. I'm setting it up for the 200 EMA. I'm looking for the 200 EMA. What you gotta say? Remove for the 200 EMA. There's 3 black crows right there. But I'm going to wait for the 200 EMA because that's what I do. If it doesn't work, it doesn't work. If it does, it does. Here it is. Prepare ye in the name of the Lord. Boom. Triggered. 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 Triggered! We don't want this to dip anymore. We really don't. I think 115. You can do it, Jim. We really have you by our side. We know you can do it. We don't need you frozen up on me. No. 128 average. No. No. Jim, you're down $60. Have you ever thought about selling? No. Well, I need something on my side here. No. God. Trump chances of winning his tariff case drop as Supreme Court hears arguments. That could be a catalyst to bring the market back down again. Well, I'm down $300 now. I don't think it's got the mustard to jump back up.
Concentration risk affect retirement portfolios? And I guess the follow-up is, how important is diversification, knowing that we are so top weighted into these mega cap tech names?
Shut
I
up.
think that's one of the hardest conversations with our clients right now is they'll come in and they'll be like, I don't want to be overweighted into AI positions. So we actually hear that from people, and that's really hard today, as you mentioned, like our Magnificent Seven and this really big consolidation of companies in the public markets, and then really this tech-heavy, very large cap company positions. I mean, it is really kind of different than sometimes before. And there's a little bit of noise and concern out there, right, that a lot of these big tech companies right now, especially in the AI space, like a lot of the money seems to be this like circular moving back and forth. But I really do look at these as very promising companies moving forward. I mean, this is the biggest technology kind of boom that we have seen in decades. AI hasn't really found all of its use cases yet, but it's coming. So from that part, like, it is the future. I don't think people look at that and say, hey, this is all going to disappear. Like, we are moving in this direction. But diversification can be super hard in the way that it's set up today with such a concentrated equity markets. And that is where that private equity world, private credit, has really kind of hit its stride in the last couple of years, because people are now looking away from the public markets to get diversification in the private markets. And there's been a proliferation of funds there. But the question is, can it still support this? You have private equity funds that are stuck on cash. They can't find companies to buy. And so what does that return paradigm look like moving forward there? And for retirees, one challenge with the private markets is the liquidity side of it, that a lot of these funds might be 7-9 year lockups. And a retiree wants the access to it, but do they really want to lock up their money for 9 years once they get to that distribution phase of retirement? So there are some more liquid and public versions of private equity today that can fit a role there, but that market's definitely still evolving too.
Talk about sort of volatility and timing here, because quite often retirees do draw some of their income from their investments. I mean, my mum, for one, takes some of her income from the stock market and relies on that performing well. So when you wake up to headlines like we did yesterday with Goldman and Morgan Stanley talking about 10 to 20%.
Right, Jimmy! Oh no, stop it. What are you doing, young man? Jimmy! What? The vest, kid, the white beater's vest with all the holes on there. There's more holes in there than there is in the Holy Church. Jimmy, wash your fingers. Come on with it. Pringles jar, Jimmy. Kid, you've lost the plot. We're out of isolation now, kids. COVID's gone somewhat. Back to... What you do? Milk? No. Jimmy! Salt. Are you sure that's the wife's tongs? Jimmy! Jimmy! No, kid, don't eat that! Jimmy! You kill yourself! Jimmy!
Come on, Jimmy. Don't look like they want to bounce it back up. I couldn't handle listening to Marley talking about overweight. She's pushing the narrative that the stock market's still overbought. She's been doing it for months, but it finally caught hold. Tempting to sell them for a loss. only got 10 more minutes. We'll see if we squeeze out of this here flag. Don't look like we want to. Jimmy! Now it's an ascending triangle. But why didn't I buy more, you idiots? They were cheap.
Kind of historically concentrated with close to 40% of the S&P 500 in the top 10 names. Circling back to AI, in spite of, I think, the revolutionary technology, I think that looking at the sharp acceleration in CapEx and the kind of intense competition within that, among those competitors, kind of leads for a risk of overinvestment. So I think there's a lot of reasons that investors should be optimistic. They should want equity exposure in their portfolio, but a lot of reasons they might want to be kind of cautious about how they do that.
Sean, one note that's come out today that seems to be sort of doing the rounds in the market commentary circles, and I don't know if it's come across your email or your desk today because of the fact that you're working the floor down at the conference, and that is out from Evercore ISI. And remembering they've got a 7750 target on the S&P 500 today, but next year, come 2026. But they're also saying that, that depends on how long this US government shutdown actually lasts. And they've given a couple of scenarios here. They actually believe that if the government reopens before November 14th, then the selling that we've been seeing is relatively contained. If it doesn't reopen until Thanksgiving, then 6550 comes into play. And then you sort of get the point here. They're talking about potentially 6120 if not resolved by Christmas. How are people thinking about the impact of the longest government shutdown now in history?
Yeah, well, I mean, I think it certainly makes sense that the longer the shutdown goes on, the more we're going to feel the effects in the real economy, right? So we're only just seeing in the past couple of weeks actual paychecks being missed. So I think it makes sense that, I don't know the exact timing we're going to see. You know, I'm not an expert on kind of the political dynamics, but obviously the longer the shutdown goes, the more I think you could eventually see a drag on the actual real economy kind of make its way back into the markets.
So, Sean, when you said that we should be cautiously optimistic, and then you cited some things to be concerned about, all of which signaled to me that you think that we could be in for a potential correction, and this, of course, coming after we heard from Goldman yesterday saying that they thought we were maybe ripe for a 10 to 20% pullback. Are you also
10 to 20
mindset that in the next year or so that we could see a pretty significant correction in the markets?
Not necessarily. So I don't generally tend to try to forecast whether markets are going to go up or down. What I'm trying to do is kind of position my clients so that if we have a pullback, kind of they're well protected regardless of the scenario that happens.
I'm ready.
But I also want exposure to equities because we know in the long term, kind of the time in the market is really important for investors. So if I'm thinking more in terms of regardless of the scenario that plays out, kind of making sure that
I think I about lost this one.
kind of something in their portfolio to help them protect them in case these risks materialize.
So where are some of the opportunities that are perhaps insulated from some of the uncertainties that we are heading into year end with, certainly around the Fed and some of the questions around ROI on CapEx? How are you sort of positioning the portfolio? What's the playbook here?
Yeah, so I think we like to take a pretty diversified approach. So we have a couple things I think people might want to consider having in the portfolio that we use in hedged equity. So one, we've seen an incredible rally in kind of high-risk, low-quality stocks coming out of Liberation Day. And in hedged equity, we have a small allocation to deliberately to kind of minimum volatility or lower risk stocks. And so if we see a sharp rotation kind of within that factor, within the markets, kind of leading to a pullback, I think investors will be well positioned if they're kind of leading into kind of lower risk, higher quality stocks. I also think even though there's not a lot of yield pickup in duration relative to cash right now, that there's still, if we see kind of growth take a downturn, kind of see, if in the event that happens, I still think there's an opportunity for treasuries to kind of offer some insurance there in a portfolio. And I also think investors want something that's dynamic. So a big
it's not going to be a good ending today.
Kind of adjust your equity exposure in response to volatility. So we've seen volatility kind of come down substantially since Liberation Day, and a lot of that's driven by kind of low correlations with still pretty high individual stock volatility. If we see those correlations rise, we'll see volatility rise and likely markets sell off. And we have a kind of component of our strategy that will respond in kind to kind of reduce equity exposure when risk gets higher.
And Sean, last question here. We know drawdowns are really painful. They're often very hard to recover from.
Shut up, Marley.
Selling at the wrong time, whether it's driven by fear or headlines or whatever the reason. What advice would you give to people to avoid some of these common pitfalls?
Yeah, I would say to pick your investment well, to kind of know ahead of time that you're comfortable with the risk profile. So that's why something like hedged equity THEC kind of takes into account that behavioral issue that investors have, where they're going to sell at the exact wrong time. And so a portfolio that gives you most of the ability to capture market upside.
So you pump AMD and then you
markets are drawing can kind of play a core role in your portfolio to kind of keep investors invested in equities, but kind of mitigate the impact of that volatility.
Sean McWilliams, T. Rowe Price, thank you so much for joining us here on Schwab Network. Enjoy the rest of your conference, and we'll catch you later. Appreciate your time today. Coming up, it's time for Overlooked Stocks. George Sillis has his eye on lemonade heading into the close. We'll break that down, the news you need to know, and what we're seeing in the stock. Coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going?
First day, so.
Sometimes, you know.
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation?
Well, hell.
Number one broker with the best full-service wealth management.
Lost about a third of my profit there.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Barnes, live from the floor of the New York Stock Exchange. It's now time for Overlooked Stocks. Shares of Lemonade have spiked higher today to its highest level in 4 years after the company topped earnings estimates and issued strong guidance. So I'm joined by George Tillis to get us across this one, senior markets correspondent. What did the report card tell us, and what do you make of the performance in the stock of Lemonade today, George?
Well, if you consider the report card in terms of sales and earnings, I'm not surprised to see it move quite a bit to the upside. A really nice action today for Lemonade. But, I mean, for those that don't know, this is part of the theme with artificial intelligence, essentially a company that supplies the market with AI-powered diversified property and casualty insurance, things like property theft and personal liability insurance, rent, home, car, and so forth, as well as life insurance. So they're really focused on using technology, low-cost model. They compete with companies like SelectQuote, Root is another one, as well as some of the larger players like Allstate and so forth that are starting to move aggressively into non-traditional insurance technology mechanisms. But if you look at the report, it was quite good, irrespective of the fact that they still lost about 51 cents a share. They actually beat the estimates, which were a loss of about 75 cents. And keep in mind, too, that they lost nearly $1, about 95 cents last year. So that was a significant improvement. And sales were higher by 42% to 195 million, beating the estimates, which were 185 million. But if you look at across the board in terms of what they reported, they actually talked about customer count, which increased 24%. But more importantly, that number was padded with an increase in premiums paid per customer by 30%. So it gives you an idea that they're actually getting more spend per customer, as well as a pretty significant increase in customer accounts. But at the same time, their churn rate decreased. So it gives you an idea that there's less attrition, and that gives you more visibility in sales. And therefore, they increased their guidance for next quarter. In terms of revenues, they're guiding essentially at $219 million versus $214, and for the full fiscal year 2025, they increased their guidance to $730 million.
Spike, get to the VWAP.
CEO today talking about how in the last 3 years they've added about 1 million customers, and yet operating expenses were
Well, that
flat.
sucked.
So, certainly interesting as far as the numbers, just as far as its sort of path to profitability here. I mean, the stock is still being rewarded, even before today's move. I mean, it was still up about 150% or so year to date. But I'm also just looking across, some of the analyst calls here as far as the ratings are concerned. I mean, it's a bit of a mixed bag. I mean, across the spectrum, you've got everything from a sell to a strong buy, but it looks like the majority are very much sitting on the fence here. I've just been looking through, what some of these analysts have actually been saying. I've seen that Piper Sandler actually recently raised the target here to $60. We're at 77 and change right now. This was back in September, but it was interesting what they said about how they have a reliance on direct-to-consumer in a country slow to adopt DTC for insurance purchasing needs historically. I'm just wondering what else you're seeing as far as what the analysts are saying about this one, George.
Well, I think largely in the context of insurance, maybe there's some folks that are apprehensive to not have a traditional insurance agent, and that's understandable. But again, technology adapts, and people adapt to different changes in needs and technology, offerings. I think if you look at the goal of the company, they are essentially cutting expenses too. And the other thing is you mentioned profitability. You know, profitability is one thing, but the most powerful moves, at least in my experience for stocks, is when the path towards profitability moves from losses towards profitability. And that rate of change, or that second derivative, where it accelerates, in other words, you're getting closer and closer at a much faster rate, is really these powerful moves. I think that's what Lemonade's in right now, irrespective of the fact that, you know, this year they're still expected to lose $2.60 and next year $1.55. And so at some point they're probably going to pull back, maybe issue a secondary offering, because again they have to finance these expenses. And lastly, I'll say this: you did make a notable observation. But one of the things I noticed also in today's news, there wasn't any analyst difference or change, irrespective of the most recent one from Piper, which was a while ago. And their target's at 60. That's the high target. Mid target is 45. Low is 33. So clearly, either the analysts are still reviewing the prospects of this revenue and sales numbers manifesting into better outcomes going forward, and then probably they'll adjust their targets commensurately. But it seems to me, you know, I think you brought up a great point too, Sam, that they're behind the curve, and so that might change going forward.
Yeah. Well, at least, nevertheless, the stock is up today, so it is being rewarded. But thanks so much for getting us across that name, George Sillis. As always, I'll send things back over to Marley in Chicago for now.
Thanks so much to Sam and George for that. We're nearing the end of our market session. That, of course, means we're going to bring Kevin Green in to break down the levels that he's watching on the S&P 500. Plus, we've got more earnings on the way as we'll get live reaction from reports from Qualcomm and DoorDash after the close. That's next here on Market on Close.
Real-time access, data-driven analysis from U.S. equities to
Made that thing drop.
matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Big drop.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We're back here on Market on Close. I'm Sam Bartis here on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. So just a few minutes left to go now in the session. So let's welcome in Kevin Green, Senior Markets Correspondent, to help close out the session for the day. Kevin, what levels are you looking on the S&P 500? I mean, we certainly seem to have caught a bid today and latched onto some momentum here.
Yeah, we are losing actually some momentum right now. Overall, the day has been pretty good. We're up about 0.5%, but hopefully we're able to try to hold these levels. You are seeing aggressive selling right now happening in NVIDIA. We had just seen it drop about $5 or so over the last 10 minutes, and we are starting to lose a little bit of ground in the S&P 500. Earlier this morning, we kind of talked about the 67.75-ish area as your first area of potential support here. It looks like we might be trying to approach that. Hopefully we're able to pen in around the 6,800 level, but overall it actually has been a pretty decent day, at least to start off here. Going into the close, you're looking at 6,800 as your first area.
Look at that drop on that thing, right? Almost right to my support level.
For the bulls today,
boom.
You can see market breadth expanding. Over 60% of the stocks in the S&P 500, at least about 3 or 4 minutes ago, were actually
67.95.90.
rotation and participation in the market as well, with the equal weight S&P 500 actually outpacing and outperforming the headline S&P. So overall, it's been a decent day. Unfortunately, once again, we are seeing a little bit of a slide, but hopefully maybe some buyers step in here at the 6,800 level and try to defend this.
And KG, I want to follow up on NVIDIA here as I'm trying to see if I can find any news here on why we're seeing such a pretty significant pull to the downside here. We are seeing NVIDIA shares dropping down about 1.5%. The only headline I'm seeing is Jensen Huang dismissing fears of an AI bubble. So, you know, what do you think's driving this downward action right now?
Your
it's
mouth.
Multiple factors. Maybe it has not hit the tape yet. Who knows if it's news related? Or
Right to my support level.
Of this trade. I mean, if you look at some of the price.
That's where we bounced off this morning.
We have seen aggressive selling taking place. And you could actually have bounce back days like we have had at least so far this morning and throughout the afternoon. And going into the close, seeing a little bit of an unwind. I still believe that there probably is some options activity that's also leading to this as well, as you are starting to see maybe a lot of those speculative trades being taken off the market here. I think the biggest risk that you have for the overnight session is SoftBank. SoftBank has been the driver for a lot of these tech stocks because of their cash that they have.
That last trade didn't help me much. Lost almost half of my profit. Not how, I mean close. But I'm green. I am going to kick back and watch. I've been kind of busy, so I haven't got into my YouTube videos as much, and I'm going to go watch them cook dinner. Today, I'm just kind of thinking, I can understand why we had to pull back. I think the Supreme Court's the big news to me, whatever they say. With these tariffs, I didn't think it would go to that far. I don't know why it went that far, but it did. I don't see how the Supreme Court can bring that as the case. And then we had the New York thing. Kind of depresses me a little bit, but I guess you got to live with it. Nothing I can do about it. Even if I lived there, I don't know what I would do. I guess I lived through the Biden era, and I can live through that. Nothing much could be worse than the Biden era. That was kind of like a communist setup. But I don't know what the communists think of transsexuals. So I'm going to get out of here. We'll catch you later.